coming in live now, in fact. Okay. Hello, everybody. My name is Jeff Gibby. Good to see you. Thank you for coming today. Day 3 of the MetaStock Traders Conference. I hope you've been enjoying the show. I hope you've been able to attend some of the days, or all of the days, or all the sessions, or some of the sessions. I do want to tell you, if you ever want to come and maybe miss a session, you want to catch up, you go to youtube.com/metastock and watch us there. If you're watching us on youtube.com/metastock, I would recommend that you register for the event. If you register the event, we'll be giving away prizes all week. And we gave away a ton yesterday, a ton the day before. But if you register, you can go to metastock.com/traders-conference. I'll put that in the chat in just a second. But if you register, you can be eligible to win prizes in our random drawings. So if you are watching us on YouTube, make sure to say hi, like and subscribe. It helps a great deal. We really appreciate it. It helps us kind of keep bringing this great content to you. And I think that's about it. If you have questions, if you go to Webinar Watch, just type in the questions tab. We'll be able to see it. If you're in YouTube, just type in the chat and we'll make sure that your questions get answered. I think that covers it for kind of the stuff. If I missed anything important, let me know. Let's go ahead and read the legal important agreement. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for this promotion of a security. No information contained in the presentation today should be considered as investment advice or the solicitation to buy a security. All right, very good. As we get started, we're going to talk about all of these sponsors as we go today. I do want to say thank you to the very well-respected nonprofit AAII, a big sponsor of ours today, AAII.com, the American Association of Individual Investors. I also want to thank Stocks and Commodities Magazine. They've sponsored us for a number of years. Great magazine. I'll tell you a little bit more about them as we have some time during the day, but you can find out about them at traders.com. I'd encourage you to join the Traders Forum. You can find out about the Traders Forum. You can even join. It doesn't cost you anything. thetradersforum.com. And of course, we are MetaStock. MetaStock's been rated the top software program in its price category. It's won that honor for 32 years in a row. Great software. We're going to talk about scanning the markets, testing trading ideas, forecasting, all that kind of stuff. We have a special on MetaStock that lasts all week. If you pay for a month, we'll give you the second and third month for free, which will have you running well into 2026. So we'll talk more about it as we go today. But I want to say thank you for coming. It's great to see you. I hope you're learning stuff. I hope you've been picking up some good techniques and some good information. And I hope you've been enjoying yourself. So thank you for being here for day 3. I also want to thank our first speaker for coming and kicking us off today. Dan Passarelli just got his cup of coffee. He's ready to go. Dan is going to talk today about a method that he uses that looks for stocks that are in momentum, has a little bit of a stall, and then resume into that momentum. It's a great little strategy, works really well. You're going to want to be able to scan to find it because you have to be able to find it. So, but from a perspective of that, I've known Dan for a number of years. I consider him a good friend of mine. I remember we see him at the Traders Traders Expo. I was trying to remember that. I haven't been obviously in a while. The Traders Expo back in the day, and just he's going to do a great job. Dan, let's go ahead and get you started.
Hello, Jeff. How are you, man?
Good. I'm doing great. Let me go ahead and make you the presenter. Today we're using the old interface, and it's kind of like putting on old shoes. It looks nice. I know exactly what I'm doing with it. All right, very cool. I can see your screen. Apparently you know how to use it too. I can hear you. I can see you. I'm getting out of the way. It's your turn. Go.
All right. Hi, friends. Hey, how are you feeling today? I'm Dan Passarelli, and really glad to be with you right here and right now. And honored to talk about this key way that I've simplified my trading It's the easiest and most straightforward system that Market Taker has created. I'm super excited to share with you today. And Jeff mentioned all this. You should read Characteristics and Risks of Standardized Options before trading. Get a copy of that by emailing investorservices@theocc.com. Don't trade with money you're not prepared to lose. And we're providing generalized information today. This is my promise to you. I'm going to share with you how to easily spot high profit momentum trade opportunities using stocks, ETFs, futures, Forex, or whatever, so that your trading is completely simplified using this simple, tested trading system that we've created for our traders, that hundreds of our students have used to go from that demoralized feeling, we've all felt it sometime, to that feeling of satisfaction and self-assurance that we all know is possible. And at the end of this training, I'll share how you can take the next step so you can start getting immediate results. Is that a fair deal? Hit that questions box for me and tell me if you are liking what you are hearing here. Is that a fair deal here? Hit that questions box and give me a big old yes if you are liking this, please. That'll also let me know that you can hear me loud and clear and that you're able to participate in our session today. All right, Charles says yes. I see my video looks like it's frozen here. I better turn that off because I look kind of strange. Charles,
but that's okay.
Yeah, is everything good here?
Yeah, everything looks good. You actually weren't frozen on my end, but either way.
Okay, good. Then Charles says yes, and Mark says yes, and Jamie says yes, and Andrew says yes. Saul says yes. Ashley says yes. You guys are excited this morning. I like that, man. I love what I'm hearing about this stuff. All right. David says yes. Leslie says yes. All right. Now, in order for you to get the most out of this, I ask that throughout this training and after, make this about you. Shut all your unnecessary open windows and let this in. Let this become part of you. And be sure to stay to the end of the training. Most important things I'll share come later, and I'm going to hold all questions until the end. Now, this gives you an idea of who I am, what I do, and some of the organizations I've worked with. I've wrote 2 of the most popular books on option trading. I've worked with every major options broker in the US and abroad, as well as pretty much all the options exchanges in the world as well, and get to be on TV a lot, which is kind of fun. I got my start trading down on the floor of the Chicago Board Options Exchange, traded for years there. These pictures literally span 30 years of me being involved with the trading floor. And I traded some options on some huge stocks like the Ford Motor Company, AT&T, Carnival Cruise Lines. And I traded some little ones that nobody's ever heard of. And a little secret here. The options on little stocks that nobody's ever heard of, that's where you can make the big money. When you know about opportunities that no one else does. Now I want to jump into a discovery I made. Does anyone know what this formula is? No? Well, good, because we're not going to talk about it again. We don't need to, and here's why. Now, I have an extensive background in trading, but the fact is, I'm no mathematical genius. I'm going to share a story with you about when I was back in high school. When I was a kid, I was a bit of a troublemaker sometimes, I'll admit it. I got good grades. I didn't really have to study usually, but this is a story about a time that maybe I should have. In my senior year of high school, in my advanced math class, instead of paying attention to the lecture, I and a few of the other kids in class, we'd play poker. It's all we did, all day long, all hour long, the whole class, during the whole class. And I'll tell you what, I made a lot of money in that class. But the problem is, with math, it builds. If you miss something this week, you're lost next week, and you're hopeless the week after that. So, needless to say, I didn't learn a lot of advanced algebra concepts that year. I crammed, I passed, but I didn't really learn that much. Fast forward to freshman year of college, and I had to take an algebra refresher. Oh gosh, man, that was embarrassing. I always prided myself on being smart. Algebra is not that tough, but I had to take a refresher. Now, one thing you may not know about me is that I was the first Passarelli to graduate college, and I almost wasn't. Here's where the story gets a little interesting. Now, I am a competitive kind of guy, mind you. So, sophomore year of college, my cousin, Michael Passarelli, who is 1 year younger than me, was in my calculus class. Calculus! I was intimidated by calculus. I was afraid that I would struggle. But more importantly, I knew that if I failed the class and had to retake it, my cousin would be a credit ahead of me. And maybe, just maybe, he would end up graduating before me. There was absolutely no way I was going to let that happen. So I put on my A game. I was ready to work as hard as I could to win. And I'm trading attracts competitive people, so I bet there's some people here like that too, right? I bet you're like that. Put in whatever effort it takes to succeed, right? Yeah, me too. But here's one other factor that came into play that was a saving grace. I had a teacher that was great. I could relate to this guy. He made it super easy for me to learn, and I did, and I ended up acing calculus and had the honor of being the first extended family member to graduate college. Thank you very much. Now, like I said, I'm no mathematical genius by nature, but I've spent a lot of time in trading, 30 years, and I do whatever it takes to create great trading systems for myself and for you. So I studied the math of things like the relative strength index to see how they tick. And I realized there's some hidden keys within these equations that can predict when momentum will continue. And now I'm going to share that hack with you. So the concept of RSI, the relative strength index, is it measures up strength versus down strength. And the way we use it is to measure momentum. But here's the thing. Too much up strength can lead to an overbought opportunity, which can lead to a reversal back down. So I came up with a hack that there are certain patterns that can prevent momentum from burning out and can lead to continuation. And the one I discovered is called the red knockout. It's a momentum trading strategy that can lead to outsized profits. It's a simple 4-part chart pattern, very easy to identify. Profits are easily set. You can use it with options, stocks, ETFs, indexes, futures, even Forex. And so let me start by listing out the steps in the red knockout, and then we're going to zoom in and go through some examples. So this is important. Write this down. Step 1 is the setup candles, which is 3 or more green candles that make up the green run. Step 2 is the red knockout, or the RKO candle. That's a red candle with a smaller body than each of the 3 green ones. Then there's the trigger candle. That's a green candle that takes out the red candle's high on higher volume. Then there's the confirmation candle, which is a candle that opens above the high of the RKO, and that signals trade entry. Now let's break down this strategy step by step and go through exactly how it works. So do you recall what step 1 is? That is the green run. It's the setup candles, which I also call the green run. That is 3 or more consecutive green up day candles. 1, 2, 3. Step 2, if the pattern continues itself, is the RKO. That is a red candle immediately following the green run with a smaller body than each of the previous green candles, which we see right there. Then, if the pattern continues, step 3 is the trigger candle. That is a green candle that takes out the high of the RKO candle, meaning it trades above the high of the RKO candle. And if the pattern completes itself and we're ready to trade it, we get step 4, which is the confirmation candle. And the only criterion for that is it's a candle that opens above the high of the RKO. That one signals trade entry. So let's go through just some historical examples. My objective here is to show you what this looks like in real life so that you can, when you see these, spot them and be able to trade them. It is my goal to empower you to be able to use this system. Make sense? This is American Express Company, AXP. If we have a red knockout setup, what's the first thing we look for? Do you remember? The setup candles, right? The setup candles are 3 or more green update candles. Do you see that on the chart anywhere? How about, boom, right there is the first one, and there is the second one. See that? We might also call this the green run. That establishes that the trade is setting up. Getting this? Now, what is step 2? Do you remember what that is? That's right. It is the red knockout or the RKO. If a red knockout candle shows up on the chart, it's easy to identify, and it means the setup might be materializing. The RKO is a small-bodied candle, a smaller body than each of the 3 green setup candles. That's the fat part in the middle, okay? The little lines above and below it, those are called the wicks. Now, the RKO could open higher or lower than the previous day's close, but the key is that it's down from the open, and thus it's red. So let me point something out here. There's a difference between up day and green and down day and red. An up day is when the stock closes above yesterday's close. A green candle is when it closes above today's open. A red candle, well, a down day is when it closes below yesterday's close. And a red candle is when it closes below today's open. So there's a difference, and we need both in the green run situation, and the red candle just has to be red. Now, step 3 is the trigger candle shown by this yellow arrow. That triggers that the trade is indeed setting up, and you're getting ready to time your entry. We call this the trigger candle, and it's sort of like when a marksman is set to fire on the target and gets his finger on the trigger, ready to take the shot. Then finally, step 4 is the confirmation candle, and that means the trade setup is confirmed. It's got a green arrow. Green means go, fire away. Now let's slow it down a bit. Let's go over the roles of each of the 4 components of this setup so you really get it. So first, of course, there are the green setup candles that make up the green run. This is what sets up a mini trend. Okay? 3 green update candles in a row, you see that enough times. It's just the start of a trend. But we know that if there's too much strength, up strength, that it'll burn itself out and it'll just reverse. So that's why the red knockout candle is so important, because it gives people who missed the first part of the run up a chance to get in it, a chance to continue and fuel that run up higher. And so if the next day on the trigger candle, it trades higher than the high of the RKO, we take that as a sign of continuing the run, but we want to have confirmation. And when we get confirmation, then it's just 1, 2, 3, go. Now, let's run through several examples to see how this might play out in real life. This is Erie at Indemnity. First of all, is there an RKO set up here on this chart anywhere? Do you see one? How about boom, there's the first green update candle, 1, 2, 3, 4, and there's the fifth. Then, of course, we get the RKO with a nice little small body. This one happened to open higher, which is fine, doesn't matter. Does the pattern continue? Yes, it does, because the next day we get the trigger candle. Are we able to make the trade? Yes, we are, because the next day we get the confirmation. And if we follow our rules, which I want to go over in a second, we would take it off here where this green line is. That's right. Whereas a lot of folks will show you the trade setup and just throw you to the wolves to figure out how to manage it. The management is baked right into this system. Okay, how about here in CAT? Is there an RKO setup here anywhere? Look closely, look closely. Good job. This one has 3 setup candles. Excuse me one second. Again, we can have 3 or more setup candles. We start the green run there and end it right there. Next comes our red knockout. Why is it called the red knockout? Well, in any trend, there's a pullback. In this case, it's just a mini pullback, just enough to enable traders who missed the green run move to get in, provide some follow through. So the red candle just gets knocked out of the pattern and we look for continuation. And that's just what we get. Right here is the trigger candle. Then we wait one more day for the confirmation candle, and we want to get in towards the open. We always prefer to time the entry close to the open, just because I've noticed that usually that day does tend to get follow through higher. And it doesn't always, and that's okay. We can, we can wait. Like here, it did open higher, had a small body, doesn't matter. The next day, actually, boom, we actually hit our price target right then and there. This is APEI stock. If we look here, boom, boom, we have a 3 setup candle green run. That's followed by a classic RKO. Why is it classic? Well, it's got a smaller range than each of the green candles, smaller body anyway. Just a mini pullback. It's engulfed by the previous green candle, which means it's good because it's not a reversal, it's just a pullback. Then we get the trigger candle with the yellow arrow underneath it. Then the confirmation. 1, 2, 3, go. Now, what I like about this one in particular anyway, is that it's only an $11 stock. Folks who don't trade options can buy just the shares, and depending on your account size, you might even be able to buy a lot of them. It's just an $11 stock. Though in this case, at this time anyway, the options were liquid enough too, if you want to use further the leverage of options. The RKO indicator works in all time frames. It's highly versatile for day traders, swing traders, short-term traders, even long-term investors. When I worked on improving what criteria to use for the setup candles, the red knockout candles, trigger candles, and confirmation candles, man, I spent a lot of time on it. And it was a really great and humbling experience. And it reminded me of my old boss, Steve Fawcett. You see two people here. The one, of course, is who? Who's the guy on the left? If you said Richard Branson, you should have said Sir Richard Branson. He's a sir, a knight. But the other guy is Steve Fawcett. Now, for those of you who don't know who the late Steve Fawcett is, he was not only a famous trader, but also a famous adventurer. He held many world records. He attempted to set one flying around the world in a hot air balloon with Richard Branson. That's why he's in this picture. Now, I remember one day Steve took all of his traders out to dinner. There were about 45 of us. And after dinner, he asked us, why do you trade? And it's not because of the money or whatever. Like the real reason, why do you trade? Because I mean, as floor traders standing in the pit all day long, your feet hurt, your back hurt, there are people yelling in your ear, getting their spit on you when they yell. Why do you go through that? Why do you trade? What is your real reason? Is it to have more freedom, to take time off and play golf or walk the dogs? Or to secure your retirement? Is it to put your kids or grandkids through college? And that stuck with me. So I'm going to ask you, I want you to hit that questions box right now and share what is your reason for trading. Please hit that questions box now and share your deep-seated reason for trading. Right? Hit that questions box now. I want to know, why do you do it? Why really are you here today? And I know there's a little bit of a delay, so we'll just wait a second because I'd like everybody to answer this question. It's a very important question to think about. It's what motivates you to be the best that you can be and do whatever it takes to be the best that you can be. David says, put my kids through college. Excellent, David. Leslie says to travel. That's a great one too. You're a person after my own heart, Leslie. Kevin says to secure retirement and build generational wealth to pass on. I love that too, man. That is a noble, noble thing right there. Ashley says to travel. Okay, good. We got a lot of travelers here today. Let's see here. Andrew says freedom. Boom. Sums it all up in one word there, Andrew. That is awesome. Let's see here. Jamie says, I'm going to have to summarize this one here, Jamie. Jamie says, put grandkids through college. Okay. Yeah, I like this. You're thinking this morning. All right. Now, Steve Fawcett was a great mentor. Without having him in my life, coaching me, I could not have become the trader that I am today. But there was one thing that Steve was known for trading, or for saying rather, I'm sorry. He was known for saying, I'm still learning. Now, when I met Steve, he was a gazillionaire, super successful trader. But he was always tweaking his process, always learning, always moving forward, always making sure that his trading was being made better for himself and for his traders. And I'm thankful for that because I was one of his traders. He always kept improving. So I also started the process of improving the exit point. And here's how this works. Setting these price targets that I talked about, the management, it's really easy. Here's how the price target's calculated. We're looking for a repeat of the green run. So we take the low of the first green setup candle, subtracted from the high of the last green setup candle, and we take that sum and we multiply that times a haircut, a percentage, because we don't want to be too greedy. What we care about is making consistent profits. So we'll take profits even before it repeats that much. And so like a little bit smaller of a range. And we add that to the high of the green or of the RKO candle. And that becomes our target exit. It's very, very simple risk management. Immediately after buying the stock, here's what we do. We set a profit-taking order, GTC, which is good till canceled. I hope you're writing this down. And we set a possible stop loss. And if we do, we set a GTC, also good till cancel, OCO, means one cancels the other. So then we don't take stop loss and then the stock goes back up and then we end up shorted or something like that. We want one, if we get filled on one, we want to cancel the other one. I say possible stop loss because if you're trading the stock, you're going to use a stop loss. Same thing with the future Forex. If you're trading the option, if you're just buying a call, which is most of the time, you'll probably also use a stop loss unless it's a very illiquid market. If it's a debit spread, which there's sometimes on like very, very high price stocks where you might use a debit spread. And with those, we don't set a stop loss. We handle those a little bit differently, which we cover in a class. I'll tell you about that in a second. The idea here is that this is a system. We work the system works. Now, by the way, if you're not familiar with some of these terms that we talked about just now or even earlier, later I'll share, in just a few minutes, I'll share how you can learn to easily do all of this to make your exits super simple. I want you to leave here today with all the tools you need to be massively successful with this. And I bet you do too, right? Would you like me to share with you what we discovered makes RKO trades even better? Hit that questions box. Give me a yes if you want me to show you a couple of tips and tricks that are not that we haven't covered so far before we move on. You want to learn a couple of tips and tricks? Hit that questions box for me. I bet you do. I bet you might. I don't see everybody's answers from YouTube, but I do see the ones here from GoToWebinar. David, geez Louise. Yes, with all caps and like 5 exclamation marks. Oh my goodness. Ashley says, please. Mark says, please. We've got some very polite people here. Ray says, I'm here because I'm retired and want to give my family a new way to earn money for themselves. That is so awesome, Ray. I love it. Yeah, man. Oh, good stuff. Good stuff. In summary, there are a few important takeaways. Momentum trades can yield outsized profits, and this is a time-tested system. So, quick little recap here. We have the setup candles. We have the red knockout candle. trigger candle, confirmation candle. We even have the profit target baked in. Oh my gosh, this is so easy. I bet you can spot these trades right now if you come across one on a chart and calculate the profit target. But you know what? There's a problem. Yeah. Did you know that there are 6,366 stocks to trade? I'm not even talking about futures and Forex and all that. If it takes you, say, 45 seconds to spot a red knockout setup on a chart, 45 seconds just to spot one, it would take you about 80 hours a day to go through all the opportunities out there. That's what the math works out to. 80 hours a day. Do you have 80 hours a day? No. And that's only looking at one time frame. If you trade multiple time frames, it's more than that. You don't like missing opportunities, do you? There's got to be a better way, right? And I bet you know that. You wouldn't be here right now if there wasn't a better way. So, are you ready for it? The RKO system is officially here. Over the past, I think it's been about 6 years now, we've created both a scanner that would easily identify RKO trades, as well as an indicator that displays the pattern right on the chart along with the price target. We wanted to make it so simple that it's impossible to mess up. You now have a new opportunity to easily scan for top momentum trades that you would not be able to find without the screener. With 6,300 whatever stocks out there, it's almost impossible to just happen to come across one of these great setups. But with this easy to use 3-step scanner, it makes it possible because I have made the investment for you. You see, I know what it's like to struggle as a trader in the market. I've had the pleasure of training thousands of traders, and I wanted to develop a scanner that made it very easy to find profitable trades with great potential. And even for myself, before creating the RKO system, I would come across one of these setups maybe once every 5 or 6 months. I would miss hundreds of opportunities. But finally, I've invested both time and money to develop this simple, easy to use scanner that you can harness in just 3 easy steps. Imagine what your trading account would look like if you could sit in front of your charting software and have a powerful trading tool that identified both the trade entry and exit points in just seconds. Imagine if you could block out all the noise in the market and only focus on trades that have been identified for you. What would that mean to your trading business? Well, that's exactly what the RKO scanner does for you. I want you to start getting the results that you deserve. These are some examples from the last time I updated these slides. On the left are stock trades, on the right are options. On September 18th in BBU, a stock trader could have bought the stock at $21.89 and 7 days later sold it at $23.93. That's a 9.3% profit in just 7 days. This is a typical example of a trade that works out really great with these. On September, this next one here in GLD, a trader could have bought the ETF at $249.15 and sold it at up to $253.06, locking in a 2.4% profit in just 4 days. In MGM, a trader could have bought the October 37 calls at $1.59 and sold them 7 days later at $3.30, locking in 107.5% profit. To make that more tangible, if a trader bought, say, just 5 of these calls, he or she could have made $855 in profit on just that one trade. And that's just hitting the haircut profit target that was set. If the trader held on to this one longer, or even took half the profits at the initial haircut profit target and let the rest run, the profit could have been over 170.4%, or up $1,355 on that same 5 lot. This is Nick. Our head coach, John, and I, who's a brilliant guy, ex-Goldman guy. John and I shared with Nick what we were thinking. Nick was the first human ever to see the RKO. And in fact, he was extremely instrumental in helping us. Nick said, using scanners, in particular the RKO daily, helps me find trades when I'm busy or might not be fully locked in the market. I run the scanner and do the checks and decide to take the trade or move on. It only takes a few minutes and helps me to find the best trades consistently. I want to invite you to join us and start using the RKO system right away. So first, you're going to get the Red Knockout scanner. So every day, you'll be able to have a list of all the RKO trades available in the market. This simple scanner searches the universe of over 6,000 stocks for the setup and makes it possible to find the trades that you would never have access to without it. For you to profit with the RKO system, I need you to know how it works. So we created a video training course that shows you step by step exactly how to install it on your platform, how and why the system works, how to set up the trades, the filters and cross scans to optimize the strategy, and of course, targets and trade management. So what this means is first you're going to get the Red Knockout system. That's a scanner and all that comes with it. And you're going to get as a bonus today the RKO Accelerator video course. So you can watch a couple of quick videos and get up and running right away. Now I can put the tools in your hands. I can tell you how to use them. But I know for me, I learn faster when someone shows me exactly how to do it. So the best thing that I can do for you is give you hands-on training. Every Friday for the next year, one full year, you're going to attend our online live group coaching class and watch John Kamisic, that's the ex-Goldman guy, set up RKO and other trades right there while you watch. So John's formerly with not just Goldman Sachs, but also First Options of Chicago, Lind Waldock, traded for a hedge fund, and is the expert on the Red Knockout. In fact, he helped me develop it. He's just the kind of person that you want to listen to. But I wanted to make sure that you hit the ground running and get hands-on training to start getting immediate results. This is what Dennis Meixel from East Peoria, Illinois said. He said, "Thanks, great class. Exactly what I was looking for. The class gave me a lot of insight into options and the Greeks. I'm a fairly new trader, but I've been putting in the work to move my skills forward." I mean, look, how would it feel to have top picks selected by John Kamisic every day? So what that means is first you're going to get the Red Knockout system. You just run the scanner, all the trades pop up right there on your screen. You're going to get the Accelerator video course to get you up and running right away. And you are going to get our weekly group coaching to get hands-on training. This is a $5,247 value so far. You mind if I over deliver? What I really want is for you to make as much money as possible trading the RKO, which I imagine you do too. So every day, we're going to rank the day's RKO trades and list them out and give you our top RKO picks so that you can see what we think are the best of the best. This is the RKO watch list, and it's a $1,297 value. Plus, John's going to add a bonus trade every day from his daily group coaching class so you can diversify your trading and get all the top trades of the day by simply clicking one link to access your curated watch list. So what that means, you're going to get Thread Knockout System. You're going to get up and running with the accelerator videos. You're going to get hands-on training with the weekly group coaching, and we're just going to tell you which ones we think are the best of the best. It couldn't be easier. Finally, this completes everything you need to make the RKO trade simple. With the RKO indicator, we literally put the arrows right on your chart to show you the trigger candle, confirmation candle. Even the exit price target is calculated for you. So all the information is laid out for you. This could not be easier. So this means you're going to get the Red Knockout System, the accelerator videos, the hands-on training with the group coaching. We're going to tell you the ones that we think are the best, and we're going to put the arrows right there on your chart. Plus, you're going to get updates every time we optimize the strategy to make it better for a full year. That's a $7,541 value. RKO works on the following platforms: MetaStock, Thinkorswim, NinjaTrader, TradeStation, TradingView, basically anything. Now, you may have noticed the red knockout trades are all from when the stock is rising. And for that reason, they tend to work better in bullish markets. But the market doesn't always go up, and not all stocks always go up. In fact, some can have some pretty big bearish moves. So I've created the green knockout to double your chances of success. So today, you'll get both the red knockout and the green knockout. So you will have the tools that you need to trade any market up or down. So you're going to get the Red Knockout System, the RKO video course, weekly group coaching, the watch list, indicators right there on your chart. And you're going to get all this for the green knockout too, for down markets. Buy now. You can see why the RKO trading system is a steal even at $10,041 worth of stuff. If all this did for you was identify trades that had profits of, well, you know, like I showed you, 507% or 182%, the question that you need to ask yourself is, would it be worth it? Yeah. But you're not going to pay $10,041 today because you've made the investment of being here on this training and for being my action takers. You are the elite. You're better than millions of other traders out there. And I want you to have the results that you deserve. Get started today for a one-time small, easy investment of only $997 by going to metastock.com/RGKO123GO. That's market like stock market, taker like take what is rightfully yours, 2 T's in a row. Oh, no, wait, metastock.com. Sorry, I was giving you my web address. metastock.com/RKO. metastock.com/RGKO right now. But to get all these bonuses, including the green knockout, to maximize your success in any market condition, you've got to be one of the first 25 members today. And you've got to take massive action by going to metastock.com/RGKO. Now, just to recap one more time, when you open your browser and go to metastock.com/RGKO and sign up today, you're going to get access to the red knockout scanner. It's going to identify trades with the entry and exit points. On top of that, when you're one of the first 25, you're going to get instant access to all these bonuses, to the RKO Accelerator video course to get you up and running right away. You're also going to get instant access to the weekly group coaching, where we go live into the market together, and you can see exactly how me and my team use the scanner to generate profits in the market. You will also get access to the RKO watch list with our top picks of the best trades that John and I are looking to trade with the scanner. Now, further, when you open up your browser and type in metastock.com/RGKO and lock in your RKO traders package, you will also get access to the RKO indicator itself. This way, while we're coaching you live in the market each week, giving you access to my top watch list, you'll have access to this powerful 24/7 across multiple markets to take full advantage of this great and easy to use trading indicator. Also, as we run more tests and do more tweaks, as the RKO continues to evolve and we get it performing even better, you will get automatic updates for a full year to both the scanner and the RKO indicator. Lastly, when you join us right now, you get the green knockout. You'll have the confidence of knowing you can trade in any market, up or down. But you have to take action right now and be one of the first 25 members right now. Now, here's what I'm going to do. I am going to take questions that you might have about the package that we just discussed so that I can answer them and help you make the decision to come and join us. Now, first, I want to give some frequently asked questions, and you can type your question into the questions box and I will answer them live. So first, what if I can't install it properly? Well, we send step-by-step instructions on exactly how to use it. Couldn't be easier. Is it time consuming? No. I know you're busy. Many traders have a busy schedule. I've designed RKO so you can literally trade the system in about 60 seconds per trade, and they just pop up. This will save you massive amounts of time. What if I can't figure it out? You get a video tutorial, you get like all the accelerator videos, plus you get hands-on training live every Friday morning. And let's talk about that. When is the weekly group coaching? Live every Friday from 9 to 10 Central, which is 10 to 11 Eastern, 7 to 8 Pacific. The class is recorded in case that time is not convenient or you just want to review what was covered. Now, another question I get is sometimes people say, Dan, this is exactly what I was looking for. I have a small account and I want to grow it, and I see that I could do these using the leverage of options or trading some low value, low price stocks. This is going to help me, but I have a hard time coming up with the $997. Is there a way to finance this? And that answer is yes. You can use PayPal and just use PayPal credit. We have a deal with PayPal to offer you both PayPal as a payment option and PayPal credit, so you can lock in the red knockout today when you check out using PayPal and just choose PayPal credit. All you have to do is the same thing. Just go to metastock.com/RGKO and click the PayPal button to get started right now. Now, as a quick reminder, this is everything you get. When you go to metastock.com/RGKO right now, or you can ask questions by typing it in the questions box. I'll have time for just a couple. But you can also call the folks at MetaStock at 800-882-3040. That's right at the bottom of your screen, 800-882-3040, 800-882-3040. And ask any question you want. There's super great people there who are super helpful who will answer it. And like I said, you can type it in the questions box now. But when you go to metastock.com and join today, metastock.com/RGKO, the first thing you're going to get is the red knockout scanner so that the trades just pop right up on your screen. You're going to get up and running right away by just watching a couple of quick short videos in the RKO Accelerator video course. You are going to get the weekly group coaching to get literally hands-on training. You're going to get the RKO watch list, so we just tell you, oh, we like this one more than the rest. This is the best one in our opinion. You're also going to get the RKO indicator just popping right up on your chart, and you're going to get all this for the green knockout too, so you can trade this in both up and down markets. Go to metastock.com/RGKO or call 800-882-3040. Or if you just want to chat, you can go to metastock.com/sales chat and get all your questions answered right now. If you have a question that you would like me to answer, I probably have time for about one, maybe two if it's a quick one. So go ahead and type that into the questions box. If not, then like I said, just go to metastock.com/RGKO and get yourself all set. Call 800-882-3040 or just go to metastock.com/sales chat. And with that,
have a question, Dan, that I'm going to throw at you real quick.
Great.
Does this work on international markets? We have a particular question is about the NSEI markets, the Indian markets.
Yes. Oh, great. I'm glad somebody asked that. That answer is yes. Any market that you can access on your MetaStock platform, you can trade with this. Yep.
And there's only about like 300 exchanges, you know, nothing big. All right, very cool. Dan, I want to say thank you. I'm going to kind of go through a little bit of the like how easy it is to scan and what's included, but I want to say thanks for coming in and thanks for spending some time with us.
Yeah, thank you for having me, Jeff, and everyone. Thank you for attending and sharing your time with me and putting your trust in me.
All right, thanks, Dan. I'm going to do this. All right, I'm going to go ahead and make myself the presenter here. Here's a picture of the box. It's really cool though. So with the MetaStock integration, you do get the kind of the note of when the red run is starting to happen. You'll get a note. You'll start to get these like little dots on the chart. When you have the green, when you have the green knockout, it's all identified, it's labeled, it's specified, it's listed out in the commentary. You can see right here, there's some commentary that's telling you exactly what delta to look for, how many days to expiration, the haircut, all of that is kind of spelled out as part of the package as well. And in addition, you also have like the targets and the losses put right on the chart so you can see where those come in, where they're coming from. So as part of the package, you're going to get the red knockout, as well as the green knockout. You're going to get the scans for them, the expert advisor, the commentary, the template. Everything's going to be put together. As Dan had kind of mentioned, you do get the RKO accelerated course, 12 months of coaching, and then the RKO watch list. And so those are hugely valuable by themselves. Normally, that package with everything that they're throwing in is way more than $14.95, but just the add-on itself is $14.95. At the conference today, it's $9.97. It's backed with a money-back guarantee, so you can try it out. If it's not helpful for you, it's going to be. But if it doesn't work, you can get if you don't like it, whatever, doesn't help, you can get a refund within 30 days. So you can give us a call, 800-882-3040. You can go to metastock.com/RGKO. Or if you have questions, if you want to get some charts, if you want to get some examples, let us know. metastock.com/sales chat. We've got people here ready, willing, wanting to help. So I don't see any more questions. Let me go ahead and just come over here. Do want to say just a couple things. One, we'll thank one of our sponsors. I want to thank the American Association of Individual Investors. You can find out about them at AAII.com. AAII is a nonprofit. They've been established, I think it was in the late 70s. I should probably look, but they do a lot of investment analysis. It's a huge organization, a very well-respected nonprofit. They do if you've ever heard of the AAII Investment Sentiment Survey, they do that. They also do a ton of research on different companies, newsletters, and they have an active investor division, which is headed by Ray Rondo, who talked on Monday. So it's a great organization. You can find out about them at AAII.com. And there you go. A big thank you to the folks at AAII for helping us out with the event. So we are MetaStock. MetaStock's been rated the #1 software program in its price category. It's only been rated that highly for 32 years in a row. And it's because of the scanning, the ability to find those trades when you want them, the ability to test ideas to see if they work, the ability to get commentary and get ideas and get explanations in terms of what's going on in the market. So pricing on MetaStock for even just like a delayed version, which will update during the day, which you can scan during the day, everything, it's like $75 a month. If you buy a month, we'll give you the second and third month for free, which is like $25 a month. And it'll have you going till January 12th, 2026. If you can believe that, we're almost there. So you can get all of the specials that we talk about today at metastock.com/conf promo. You can get them at metastock.com/sales chat. And you can give us a call, 800-882-3040 as well. And all of those are actually like in the chat already. So just click on the links. One more note, I forgot to pull a list of the registrations. It's just been kind of busy kind of getting things going this morning. If you're watching us on YouTube and you haven't registered for today's event, make sure to do so. There's a pinned comment at the very top of the chat that says to be entered to win prizes. Click on that link and you can register. And when you register, you'll be on the next link. And as soon as we are transitioning to the next speaker, we'll be giving away those prizes. So make sure you're on that list. I'm going to pull the list right as soon as we start Price Headley. So make sure you register right away so you can be on the list to win the raffle today. So our next guest is Price Headley. Price has been actually the very first partner that I worked with when I moved from inside sales back into business development. And I think that was like 20 something years ago. I've always had a lot of respect for Price, not just really kind of like his ability to trade, which is great, his attitude around the markets, his attitude around finding good opportunities and ignoring small opportunities. It's just something that kind of, I think you can apply anywhere in your life. Price has won the Top Market Timer Digest Award several times. I don't think he participates in that prize, but he is also a Market Hall of Famer, a Top Market Timer. He'll have to tell you what that is. I'm not sure. Price is a great gentleman, though. I love kind of what he has to say. I've learned a lot from him, especially because like it was the very first person that I really worked with once I started not doing sales as much as I was doing business development and working with our partners. So without further ado, Bryce, let's see if we can hear you.
That would help. How you doing there, Jeff?
Yeah, great. I'm really glad we can hear you. We
Yeah,
had a
thank you
number.
for the kind words. Always a pleasure to be with you.
Yeah, always great to have you. I give you the presentation, so I'll
Good.
make sure I can see it before we let you go.
Good. Let's make it big here. There we go.
All right. Wow, you've got a new format. This looks fancy.
Yeah, lots of color there. It's all about the green there, especially. We ready to roll?
I'm gonna get out of the way. It's your turn. Go.
You're good. Well, let's go. Thank you so much, Jeff, and good morning, everybody. Price Headley, thrilled to be with you here. Like Jeff said, it's been like a quarter century plus that we've been working together, and actually just here in a few days, officially, we're celebrating our full 26th year anniversary of Big Trends, having launched the company in mid-November of 1999. So lots of folks to thank, including Jeff and the MetaStock team, because they really make it. Their software with MetaStock makes it so much easier to take what's the information overload and just really boil it down to like top situations, get your focus back. And that's what we're talking about today. How do you get focused on one security, which of course is now the biggest security in the stock market today, NVDA, as you know, recently crossed a $5 trillion market capitalization. And it's still moving a lot. We saw this when Apple was taking over that lead a while back. It still moved a lot. NVIDIA still moved a lot. It was up to 210, back down recently to 190. Yesterday, it was announced that SoftBank's head guy, Matsushito's son, had sold all of his NVIDIA, and the stock was down briefly, and now it's popped back up because actually SoftBank went down. Maybe the market didn't, some 10%. The market may be voting thumbs down to get rid of NVIDIA. And what I think is interesting right now is you hear a lot of people talking about an AI bubble. What's AI? Of course, it's artificial intelligence. I'm sure you're all aware of that. But the idea is that when they're all talking about the worry of a bubble, it's usually not over yet. If you think back to the late 90s and the early 2000s when the internet bubble popped, and that's right after I launched Big Trends, I was actually telling people in mid 2000, now watch out below, because everybody was saying it was safe to buy the dip. That was not safe, right? Then the internet stocks collapsed a lot worse. But of course, in the late 90s, people were worried about a bubble. Alan Greenspan talking about irrational exuberance 3+ years before the market topped, right? And so the idea is that watch that tone of the markets for your longer term, guide to that. But we're going to talk short term action here, getting on board short-term trends anywhere from a few days to a few weeks with NVIDIA, and how you trade it with a couple of different systems. So one of them is called Donchian channels, and the other one is focused on a shorter term system using the average directional movement, or ADX. So we got a couple different time frames to get more opportunities to trade NVIDIA. We call our system NVIDIA Options Master. We're going to get into it, but as we get started, just remember the information provided in today's presentation is based on our proprietary research, and it's intended for illustrative purposes only. We talk about here should not be considered specific advisory recommendations. As you know, stock and options trading have large central rewards, but let's face it, they also have large central risk. We're going to talk about both sides of the coin today, how we manage both winners and trades that don't fire, and move on to the next one. Win, lose, or draw. Now, remember, the past performance of any trading system method is not necessarily indicative of future results, right? Future results are going to vary. A big part of why our subscribers come to us and why you might be interested in getting these is because we never leave you hanging. We always guide you on every signal from the beginning entry arrow to the ending exit arrows, and with real-time email and mobile phone updates and in live market action to tell you exactly when to get in, when to get out. So see our terms of use on our Big Trends homepage for more on that. Now, again, it's become the largest stock out there on NVDA, and you see the chip stocks keep moving, right? And AMD's up almost 10% today, Advanced Micro Devices. It's like there's all this change, all this stuff happening. Yes, there's a lot of debate. Yes, there's people making bearish bets as well as bullish bets. But the thought is, you let the market and the price action tell the tale, right? That's one of the big things you've got to get clear on, is that charts are your best friend when it comes to getting clarity about what should you do now. There's only this moment, right? What's past is past. What's future is who knows, right? It's future worries or future hopes. That doesn't put put you in the driver's seat in terms of taking action when you need to get in, or more importantly, when you need to get out. So get focused on the now. That's what we're going to talk about, is right here, right now. What do we do? How do we trade it? So we're going to show you a bunch of success stories when it works. How do we get rid of it when it doesn't? And so let's go ahead and get started talking about our NVIDIA Options Master, a couple of different strategies, how you can start getting those trades right away. Now, if you don't know me, I've been trading options for 36 years. I got the trading bug while I was a student down at Duke University, and I was just trading stocks at the time and did well in a stock trading contest, actually, after taking the Warren Buffett approach for the first 3 months of a 4-month contest for college students. And I was in the bottom quartile after 3 months. This was late 87, early 88, right after the market crash. I thought, well, it's a great time. I remember buying Coke, Procter & Gamble, Gillette, which of course later taken over by P&G. But the idea is that, at that time, buying value didn't produce any results for me. So I was like, if it's broke, you better fix it, right? If it ain't broke, don't fix it necessarily. But the idea is that if it's what you're doing is not working, it's time to try something else and do it on a small scale, and then prove to yourself that you can indeed take that and convert it into a new approach for yourself. So everything we do is systematic. I took a whole new approach of quick trading and went from the bottom quartile to the top 1%. There was the AT&T investment challenge, where the collegiate investment challenge, where they sent me a letter saying they hadn't seen that big of a comeback. In the final month of their contest, I said, hey, I might be onto something here. I think I was reading the journal a lot more than I was reading my textbooks at the time. Did okay at Duke, but I was really more passionate about jumping right into the market. So let's get right into the markets here today and talk about, and now here we are 35 years plus later. So I've been blessed to got a lot of people through, how to think about the markets, right? It's not just about specific chart patterns, but it's a psychology of success. So you've got to get yourself, especially in options, framed for the right type of mentality to be successful over time. So let's get into a winning trade example. This is our daily chart system. Okay, so as you know, candles show the red candles are where we close below where we opened that day. The white open bodies with the green surround there, or the higher closes versus where we had opened on those other daily charts, right? And so this is going back actually now, what's hard to believe, almost a couple months back, but basically mid-September. And so what you see with these blue lines are Donchian channels, right? So what a Donchian channel shows you is what's been the recent highs and recent lows, and it effectively draws basically an automatic support resistance off the lows and a resistance, I should say, off the highs, right? Support off the, just hand draw, and you don't have to hand draw it anymore. It just automatically puts on your chart. What we do is we put a 1-day lag on it to see when something breaks that potentially support or resistance level. And the irony is our system says when it actually closes at a new short-term low, and again, we give all of our settings to all of our paid subscribers. I can't get into all the parameters here, but I'm giving you the principles here today with my compliments to kind of open your mind up to a couple different ways to take advantage of NVIDIA moves. Our system says actually you want to buy that short-term breakage of the noise. That, as you probably have learned, short-term price action is typically eventually overwhelmed by the long-term trend, right? So you want to be buying the noisy dips in a bigger picture uptrend. You want to be selling the rips in a bigger picture downtrend. As we all know, NVIDIA's been in a massive uptrend. It will end one day, but the idea, as I said at the beginning, is that it probably is not set to end just yet, because there's still all these worries out there, these negative Nellies that are still saying that it's got a top coming, and it's like, well, the chart hasn't said that. So what we did is we said to subscribers, we sent a real-time email that last hour, even the last half hour sometimes of a trading day on a daily chart system. We said, hey, we're breaking our short-term lows. And you can see it on the chart here, just looking back over the recent lows over that prior week or so, that you can see what our lows have been right in there around 174. We closed at about 170 here. You say, are you nuts buying a breakdown? We see there's still tons of other support back here, but the short-term noise is worth fading, worth betting that's going to bounce back. So we buy that short-term breakage, betting that that's a dip worth getting into and buying calls on. So as you know, if you buy a call, the idea is that you're buying a call betting the stock's going to go up. A call is a right to own the stock at the strike price, in this case 185. You say, hold on, why'd you buy way out of the money? Stock's 170, you're buying 15 points out of the money, some 9% out of the money. because we like to get leverage, right? We like to not be around too long, but we like to shoot for triples, 200% wins on our daily chart system. Our daily chart system is actually where we can get both bullish call trades to buy and occasionally bearish put trades to buy, betting on the downside too. We'll get into that a little later. So we bought that dip late that day. Now, a big distinction between our call and our put buys is we found that you want to get into those call buys before that day closes in that final hour of that trading day. For put buys, we actually wait to the next morning. You'll see why in a minute. But the idea is that, okay, in this case, it's a good thing we bought it that afternoon, because the next day you see it immediately gaps open. You can see having bought it near 170, it's back up to about 174 soon off of the open that next morning here. Put an O on that starting point. But you see, it took us 3 days to get to our triple target. That's okay. You know, we're not buying short-term options with this daily chart system. We're buying out typically about 3 weeks or more before the options would expire. In this case, September 17th, we bought the options that would expire the first Friday of October, October 2nd. We do not want to take it all the way to October 2nd, of course. If you take it to October 2nd, you're going to need it to get above 185 plus to get any value out of that. But if you, in 3 days, we haven't lost much time. Notice we only paid $150. That's $150 per contract, controlling each 100 shares of NVIDIA stock. Now remember, NVIDIA at 170, 100 shares would have cost you 17 grand. So we bought 6 of these contracts. If you're investing $1,000 or no more than 1,000, you get 6 contracts times 150 a piece. That gets you in for $900 on control of 600 shares, just over $100,000 worth of stock, right? So you're controlling 100 grand worth of stock for $900, right? Less than 1% of the total cost of the stock is what you're putting in to get a whole lot of leverage, right? That's theoretically 100 to 1 starting leverage. Now, of course, there is time erosion. So you see what happens is that after 3 days, we rip on up to our target as the stock runs up here to about 183. Notice, this is the kind of inflation you want to get, right? Everybody's worried about inflation in this environment. The actual price inflation, the less bang for your buck on your dollars. In this case, you're getting premium inflation, because what's happening is we've gone from 9% out of the money to only about 1% out of the money, right? At 183, we're up right near that 185 strike price, and you haven't lost much time, right? You still have, as we ring the register on September 22nd, you still have a couple more weeks to go before those expiration would happen out here on October 2nd. You know, so the idea is that you're not losing much time and you're getting a really nice pump up, because which options hold the most time value? It's the at the money options, and we're getting near the money there. So our $150 is turning into $450 a contract, right? So on each of those 6 contracts, we're making $300 a piece. So therefore, an $1,800 total profit before commissions. Now, as you know, commissions have come down dramatically in my 36 years of options trading. I mean, it's a beautiful thing that now it's the best time I've ever seen to be an options trader off the floor in terms of low costs. You pay $1 or less per contract getting in, $1 or less per contract getting out, with no ticket charges. So most you pay on any of the options platforms I see is $6 in, $6 out, $12 round trip, right? So you're keeping the vast majority of what you earn and getting a ton of bang for your buck. But we ring the register on the whole trade when we get to that 200% tripler, okay? So we don't try to sell partials. We don't try to keep riding part of our trade after the 200%. We just say, take the money and run. You can see, good thing we did. Next day it pops back down. And they're not all going to be like that. Some will keep on running. Remember, in all these examples, past performance can't guarantee future results. We're going to have winners. We're going to have losers. We're going to talk about both. So that's just the daily chart system, okay? So for the daily chart system, it could typically hold for up to a couple of weeks, or about 10 trading days. For our quicker short-term system, we're going to show you, it could be in and out in 2 or 3 days. So we'll show you how that works, but typically about a week hold on our shorter term system once we get to a risk-free position, which we'll talk about the importance of getting to risk-free position on your shorter term trades when you're dealing with weekly options, real close to expiration. So we can get both the bull and a bear strategy on our daily chart, and we only do long trades on our 30-minute setups. Now, when I say 30-minute, that doesn't mean you're in and out in 30 minutes. It just means we're looking at every 30 minutes action on NVIDIA to catch faster trends over a period of typically several trading days. We're not into day trades per se, although, hey, if I get to a risk-free position in the same day, I'll take it. So we'll talk about that too, but that's not our goal. We like to swing trade more than day trade at big trends. Now, our only strategy here is buying a call or buying a put. We're not doing any spread trades. We're not doing any short premium trades on the front end. Our objective is trend growth. Like Jeff said at the beginning, I'm not in it for little fish in the trading game. I'm in it for big fish, right? I throw the little fish back. I don't even bother trying to catch the quick little pops, right? The objective all along should be that you want to focus yourself on how to take advantage of bigger moves. And so, but a part of that secret though is knowing how to also get your risk money back faster too. So it's kind of a hybrid approach when we get into the shorter term 30-minute candles here. So why do we trade two different time frames, two different systems? Because we want to get plenty of opportunity to trade the biggest stock out there, right? NVIDIA pushing towards a $5 trillion market capitalization. And so we want to take advantage of that. Now our 30-minute system can give a signal at the end of any 30-minute candle. Our daily chart system could trigger at the end of the day for calls or the start of the new day for puts. Okay, so it's kind of several different setups here. The power of multiple strategies, multiple timeframes, multiple systems help you to diversify yourself too. You're not all in on just one approach. You're actually taking advantage of a couple of both buy the dip opportunity off the daily chart or buy the momentum on the short-term 30-minute building candle, which we're going to get into as well. So it gives you plenty of trade opportunities, plenty of profit potential, and also when you don't have a trade, you don't put any risk capital at work, right? Part of being in the game for 3.5 decades is not just knowing when to trade, it's also knowing when not to trade, right? When you're dealing with options, you're dealing with leverage, you want to pick your spots, right? You want to choose when do you want leverage and when do you not have the edge, when you should sit back and wait. So with the 30-minute chart signals, notice the expiration we choose is the following Friday's expiration, right? NVIDIA has weekly options that expire every single Friday, right? So there's some options coming up that are going to expire in a couple of days. We're not trading those. If I got a signal today, I'm going out to the next Friday's expiration, okay? So that way, we're going to give ourselves enough time to hold it for up to 5 trading days and still be out before that expiration would hit. For the daily chart, though, would go even further out. We'll go at least 3 weeks from the entry date on counting out the weekly Fridays, right? So if we're getting a signal here today, we'd count out, past this Friday, past next Friday to at least the following Friday, if not the Friday after that. So the basically late November action, even to early December, is a sweet spot that we're looking at here. So this all up to get you the appropriate amount of leverage, manage time risk and time decay, and know that the objective here is to be in the game for the big moves and still have a window of time to get out if it's not firing. Why should you care rather than picking one chart at a time? Looking at our system performance, going back to the time of NVIDIA's last stock split, which was June 7th of 2024. So we've got now, close to a year and a half under the belt. You can see here that through today on all closed trades, if you started with a $5,000 model portfolio and said, I'm going to trade both systems. So remember, you could theoretically have a daily chart system signal on and a 30-minute system signal on, but never more than 2 trades open at once. That means if you're putting in $1,000 a trade of a $5,000 model portfolio, you'll never have more than half your position total exposure there. And the other thing is that as the portfolio grows, you're not going to try to grow the amount you're investing per trade. So now as the portfolio grew from 5,000 to 26,000 and change, that's a gross profit of 21,700 gross. That's before commissions and before subscription investment, which again, still plenty left over after those things. Keep it at that $1,000 a trade. You'd say, okay, now on a $26,000 plus portfolio, you'd only be putting in about 4% of your capital per trade so it actually reduces your risk as you grow your portfolio on a trade allocation. I like that a lot better than people are trying to compound their results, because if you keep compounding your winners and keep on putting more and more in on a winning streak, you're almost setting yourself up to get knocked harder when you do get a drawdown, when you do get some give back. So we want to manage that risk always, okay? So keep all that in mind and know, okay, so our focus here is to say, okay, let's zero in on, okay, how we can focus on the best of the best types of situations here. Okay, so and execute both systems kind of simultaneously here. Okay, so setup. Daily chart, we're using that Donchian channel. We follow the ADX, the average directional movement indicator, as kind of a guide on the trend as well. Then 30-minute, we really put our emphasis on the ADX. It's one of my favorite ADX patterns. I'm going to show you here today how you can really find these fresh breakout start of a trend move. That's I think the biggest challenge when any trader is trading breakouts and trading for theoretically bigger game, is thinking, well, this thing just broke out big. Is it too late? You know, we always have that fear that, okay, have we you know, gotten in too late? Is the market going to basically top tick us, if you will? By the time we buy, then we're going to start going the other direction. You know, that's a paranoia can set in when you don't have a systematic approach, right? So that's a big part of what we do, is kind of say, take out that second guessing and just say your job becomes to execute each and every system. So I'm always reminding new subscribers, consistent execution, not picking and choosing, not putting in too much on one trade and then not anything or not much on another trade. If you're consistently applying your position sizing and your execution, you will make yourself a more consistent trader, and I think a more confident trader. So that's a big part of it as well. So we're going to go through the 30-minute system here as well, so you can kind of see how those signals work, because it's kind of eye-opening. And then the short signals are only a daily chart setup looking for major reversals in NVIDIA. Okay, so we'll show you that. Similar indicators but different parameters kind of coming off of basically a failed breakout off the daily chart can typically set up for more disappointment, more selling. But let's get into the 30-minute chart. So what are we looking at here on the bottom panel here? Because I love basically, yes, price action, like Michael B says, is the ultimate determiner of where the stock wants to go. But we need to have also some confirmation with the indicators to say, is this a fresh breakout or are we too late? So what you have on the blue line here is the ADX. It's called the average directional movement. Now, what ADX rising shows you here is that as it's rising right in here where we got in to this chart, ADX is just starting to turn up above that declining negative directional movement line in red. What does that thing mean? It means we're not making as many new lows. When we're making higher lows, less new lows, the negative directional movement in red is drifting down. Guess what the green line is? It's the positive directional movement. So the positive directional movement's working its way up as we get our signal. So guess what's happening? As you're getting higher highs and higher lows, you know what that's called, right? It's called an uptrend, okay? So the idea here is that as those two DMI lines, the green and the red lines on the bottom panel, start to diverge, that is more positive directional movement, green line surging up, less negative directional movement, red line surging down, that gap between those two, I call it DMI difference. Even have an indicator that Jeff helped me code in MetaStock, DMI difference, you can see it. And see, as that starts to diverge and spread out, that's what will actually start to pull ADX up. The average directional movement will start saying, hold on, something unusual is happening here where we're getting more strength to the upside and less weakness to the downside. Therefore, the bulls are winning the war. Now, ADX can be trending up in a bull trend or a bear trend. So the critique of ADX is if you just looked at the blue line by itself without overlaying the DMI lines, you wouldn't know which direction it's saying it's trending, because you can see bearish trends where a big down move hits, ADX start rising when there's not any new highs happening, less and less new highs as well, right? So it works in both directions, but by overlaying the two DMI lines, you see which direction is winning the war. In this case, the bulls are winning the battles and the war ultimately into the close there. But what I love to see is, let me just kind of clear this chart for a second, is that you can see that bottom panel even better, is that you see where we're getting this crossover point of the ADX coming off a relatively low level. And guess what? Oftentimes when you see that, when it's just starting to turn up and it's breaking above that declining directional movement, in this case, the red negative directional movement, when you look back before the signal, guess what you're probably going to see? A bunch of nothing, right? Now, think about this. If you were not in this trade, you could think about, well, what about all those who have been in the trade, who've been buying NVIDIA, hoping it was going to break out, and then they're saying, uh-oh, well, now it looks like the bears are taking charge. You know, it's the red negative direction movements going above the green positive direction movement. Oh gosh, should I be bearish there? Well, we didn't have a bearish signal. We only take bullish signals on this setup here. It tests a lot better and trades a lot better to the upside, right? It's like the institutions, let's face it, you and I as individuals do not drive the market. It's the institutions who are driving the market, right? But they're just like you and me in that institutions also want more of a good thing, less of a bad thing. Their disadvantage institutions have compared to you and me is that when you and I want to get into a trade, bam, 1 lot, 10 lot, 100 lot, we can get in real easily compared to the institutions that might want tens of thousands of contracts or buying millions and millions of shares. It's a lot harder for them to get that all in at once, or else they might be like the 800-pound gorilla splashing all the water out of the baby pool if they do a cannonball into a market like that all at once, right? The idea is that they're going to be more likely to start tiptoeing in, gradually building their exposure, which is why I believe these trends tend to persist. They tend to kick off, but then have more legs to them, right? So we were getting our signal right here as we get that close on the 30-minute chart right near the end of the day, about 3:30 p.m. Eastern time here. Notice NVIDIA is back to trading here around 170. Now, we do something different with our 30-minute system trades. And our objective is we want to get our risk capital back as quickly as we can. Typically, we're willing to sell as much as 2/3 of our position for a 50% gain. In this case, the stock gapped way up, so we actually only sold half of our position at more than a double, right? If you sold half at a double, that would create a free trade as well. This was more than a double, right? When it gaps up the next morning, right? We bought by the way, the 177.5 calls when we were about 170. That was on a Tuesday afternoon. We're buying to the next Friday's expiration, okay? So we've got theoretically about 8 trading days till expiration. We know that we will only hold these trades for 5 full trading days. So if we get in on a Tuesday, we'll be out the next Tuesday afternoon at the latest on the remainder of our position. And notice that in this case, you can see we take the first chunk out, end up selling half of it for nearly a triple. That was not our goal. We just got a windfall profit here. You see where it opened on just under 177, maybe 176 and change. But see that at that point, you got that inflation in your time premium as you go up near the strike price. And so we're taking out that triple. So right away, you've guaranteed yourself a winning trade, right? Because you paid $116 times 8 contracts, controlling 800 total shares, more than 100 grand worth of stock. You're controlling for less than $1,000, right? 8 times 116 bucks a piece. So the idea here is that you're in for something like 928 or something like that. The idea is that you can see that when you sell half of your position at 345 bucks a piece, 4 times 4 contracts, you're out for something like just under 1,400 bucks, right? So you've already guaranteed yourself a winner, even if the other 4 contracts went to 0. Now notice we gave it the 5 days, and you say, why didn't you get out sooner? Because it was just whipping around, and you see that you gave back a lot of your profit. By the end here, on day 5 here, we're getting out for 19% roughly on the last 4 contracts. It's too bad. Well, this is why you sell part of your position to get to a risk-free trade, right? If it keeps going, you'll see examples where it turns into multiple, much bigger potential from time to time. And then other times it turns into a bit bigger or a bit smaller, in this case, giving back some, right? From where we were. But the idea is that full trade still made $1,004 in gross profit. And so it shows you that this is the kind of why I sell part of a position to get to a risk-free position, or better in this case, is it frees you. Financially, it frees you up, and psychologically it frees you up to give you staying power to hang around for the potential runner that can make you even more, okay? But this one didn't. It ended up chopping around, and we got out that next Tuesday and said, better to just cut and run and move on to the next. So here's an example where we don't get faked out after we get our risk capital back, okay? So here's another ADX pattern. This was happening on a Tuesday morning. You see the stock gapping up, and then the second half hour close, about 10:30 close Wall Street time here, we're getting in right off of that second bar there. You say, well, gee, that first day you're in the trade, not much is happening. It's a slow grinder to the upside. But this is what you want to see. You want to see that ADX is starting to rise, and in this case, the bulls are winning the war with the green line and positive directional movement above the negative line, negative directional movement in red. That we're making higher lows, higher highs, right? That's a definition of an uptrend. But we don't get paid until target 1 here on day 2 in the trade, right? That next morning, it gaps up and it keeps going. Remember, we bought, when the stock was about 159, we bought the 8 point out of the money, 167.5 straight calls. Somewhat 5% out of the money. That's okay. We only paid 71 bucks a contract. So on $1,000 maximum investment, you get 14 contracts. You're controlling 1,400 shares, which again, 1,400 shares times 159 bucks a piece is now you're pushing way up past the 100,000 mark. You're basically pushing up, as you can see here, towards about double that in total exposure and potential. And so this one's got a lot of leverage to it, even more leverage than the other examples I've showed you so far. So in this case, but the goal is, hey, we've got to manage our risk. That's a Tuesday morning. We're getting to the next Friday's expiration. And you see that the next morning it pops up to beyond our 50% minimum target, gets to an 80% target, and we sell 10 of our 14 contracts. Why are we selling more than half? Because we're not at a double there. So we were thinking, well, we sell about 2/3 of our position. In this case, actually about 70% of our total position, 10 of the 14 contracts. And we take down 128 bucks a piece times 10, 1,280 bucks out. So you put in just under 1,000 and you're getting back 1,280 for commission. So you're already up over 250 bucks even after commission. And the idea is now you got the runner piece. The last 30% of your trade is actually going to drive the bulk of your profits here. But here's the key. Notice we count out 5 days. So from a Tuesday entry, we're going to the next Tuesday afternoon, which you can see is over here. But notice that Friday was a peak. So you're going, oh man, I wish I'd sold out here at the Friday peak, because then Monday, look, you're going, now what do I do? Well, you know what you do? You keep holding. Guess what? You will give them back a chunk of profit from where you cashed out at $1.28 a piece, now that it's pulling back to 162, and we sold it into 164 multiple days earlier. So you could be only up 25 or 30% on that last 4 contracts at that point. But this is the key. Don't bail, don't panic, saying, look, I can't lose on this trade once I've gotten risk capital back for subscribers and myself. And the idea is that, look, we're saying, okay, look, we've got the risk-free trade on, give it a chance. Don't be reactive. Say, give it the chance into the Tuesday afternoon, and look what happens. After closing there on Monday around 164, having traded to 162, closing at 164, going, oh man, I'm still not really making that much progress versus where I got on my first piece. But look at the next morning. It gaps open near 169, trades up to 172.4. Our afternoon rule is to get out on that 5th afternoon in the trade. We're out near about 171. Well, 171, obviously this trade's worth about 3.5 bucks, but we're getting out with some time premium left, right? Because it doesn't expire till the Friday. So we get out at 425. Remember, we sold the first piece at 128. So now you're making several multiples on top of that. And now you're, instead of making 80%, you're making 498% on the final 4 contracts. Remember, you only paid 71 bucks a piece. Now they're getting cashed out for 425 bucks a piece, meaning you're taking down over, what, 350 bucks a piece in profit on the last 4 contracts. So therefore, the last 4 contracts make you more than $1,400 out of your total gain of $1,986. So about 70% of our profit comes from the final 30% of our trade, right? So it's a kind of classic Pareto's principle, right? The 80-20 rule. The top 20% of your trades are going to drive 80% of your profit. And in this case, that's what we expect on our runner piece. The minority remainder piece can have the chance to make you a lot more, because you freed yourself financially and psychologically to give it a chance, give it the 5 trading days once you hit your first risk-free objective. Here's another example. On a Friday, we get an entry, and you see this a lot where we get in on the Friday. You see that next 30-minute it pops up, but then by the close it pops back down. So we're not up that much on the first day in the trade. That's fine. I don't want to do day trades per se if I expect a lot more upside, right? Here's a big winner coming, right? The very next day it gaps up. You can see we bought the 109 strike calls when the stock was about 105. It pops right up to our strike price here. That's where we get that premium inflation I was talking about, right? We have 5 contracts on for 178 bucks a piece. We sell 80% of our position at a 51% gain, right? 4 of our 5 contracts, right? If you're putting in a maximum of $1,000, in this case, you get in for just under 900 bucks. You get 4 contracts out for 270 bucks a piece. That gets you out for 1,080 bucks. So again, guaranteed profit even if the last contract went to 0. Right? So we're not putting price stops on these NVIDIA positions here because we don't want to get whipsawed. We say, look, it's a time stop at that point 5 days later. In on a Friday, out the next Friday. You can see, look at what it did. After getting out for a 51% gain, you're like, what can one contract left do for me? Look at this. It ran and ran and ran. By the time we exited 5 days later, it was over 124, right? You've got a 109 call, right, to buy the stock at 109. What's it worth at 124? It's worth over 15 bucks, right? We're out of 15.55, having paid just 178 bucks. That's what, pushing towards almost a $1,900 profit and a 773% gain on the final piece. So think about that. You see that we're, I'm sorry, about a $1,300 profit out of our $1,745 gain total, right? $1,300 plus gain, $1,375 out of that $1,745. So you see, again, one contract, the last 20% of our position, made us the majority of our profit on that trade, right? And you can see a lot of things like how the ADX, the blue line just kept going. Yeah, it kind of stalled out in here, but you see, even when it stalled out in here, you would not want to get out there. It kept drifting higher into day 5 and out that Friday afternoon. So that's the power of the runner, right? You want to let them go. Now, sometimes let them keep running, but sometimes they don't carry on as well as we thought. Here's one where we got in. There's your pattern, right? The ADX cross. And again, we give all subscribers all of our settings for ADX and DMI lines, et cetera, and any filters that we use as well. And how do we choose our strike prices? We use something called average true range. So we give you all those guidelines as well, how we set those up. So you can learn the system over time. You don't have to. You can just sit back and collect the trades in real-time email, real-time text alerts, when to get in, when to get out. You see here, we're getting in. First day, not much is happening, but it's kind of working its way higher. Gaps open the next morning, right? We got in about 122, gaps open to 126. That's only a 4-point move, but at that point, our $1.37 a piece has turned into 208 for a 50% plus gain. So we sell 5 of our 7 starting contracts on a $1,000 maximum commitment. In this case, you see closer to about 960 bucks or so. But the idea is that, okay, you say, okay, we're looking at a situation here in which you are focusing on getting your risk money back, right? 5 contracts out of 208 bucks a piece, more than $1,000 back in your pocket. So you've got your risk money back. As it keeps running, you're feeling really good. Next day, check mark. Day after that, check mark. You're going, I think this thing's going to the moon. And then what happens? It drifts back down for the next couple of days, right? So we've lost our momentum over the next couple of days. We're still higher than where we got in, but this is the time erosion piece. There's only a couple more days till expiration, and we're only getting a 27.7% gain on the last 2 contracts. So that whole trade only made 431 bucks. So too bad it didn't keep going. But this is why you sell part of the trade at the risk-free position and then try to give it a chance to run. If it doesn't run, you're still not hurt. You've taken a lot more scenarios that you can benefit by, and you've reduced the whole give back your profit mentality that too many traders end up putting themselves in. Right, so the idea here is that, yeah, we're looking for an average of about 7 new option trades a month between the 2 systems. And we're going to show you a couple more of the daily chart system trades and then also talk about the bear trades here as well. So you see that we're trying to buy relatively cheap options and get the benefit of them inflating, right? So we're going to be buying out of the money options. So this is not for widows and orphans, right? This is definitely aggressive growth, but it's I think reasonable aggressive growth for the fact that you can see how fast these things can snap back, and you can make potential triples when we catch these snapbacks. So we bought the Donchian channel dip. Notice that was the only trade. That was June, July, and the start of August, right? That was the only trade over that about 5 weeks on the daily chart system. This is part of why we supplemented with the 30-minute system as well, right? Because we want to give you plenty of opportunities. This is a NVIDIA Options Master subscriber here, right? So the goal is, okay, fine. That was our only, what we thought, good risk reward trade. Buy the calls on that dip down towards about 166. We're buying like 16 points out of the money, about 10% out of the money. We're paying 128 bucks a contract. How many contracts can you get? Not quite 8. You get 7 contracts in, and for $1,000 or less, in this case, you see just over 900 bucks in. Our target is a triple on the whole thing, right? So we need about in the neighborhood of just over 380. We get out at 385, 200.7%, $1,799 gained off of that just over $900 investment. So the idea of this is that notice what the stock did. It went up here to about 179. So it didn't even get back to the strike price, but it did go from 10% out of the money to about what, maybe 1.5 or 2% out of the money. Okay, so that's the goal, is to get that premium inflation. That 128 turns into 385. You've lost what? It's about 6 trading days. So if we're going out 3+ weeks and you lose one of those 3 weeks, yes, you're going to have some time erosion, right? The stock went from 166 to 179, about a 13-point move. 8.5% move, we make 200%. So you can see it's not the 100-to-1 leverage. In that case, it ends up being something closer to about a 24-to-1 leverage, right? So the idea is that it's still plenty of opportunity, plenty of leverage, and defining your risk, defining your opportunity here. So here's another one, though. This one's actually more of a breakout signal. So we have some upside breakout signals as well. So remember, trading in between the Donchian channels doesn't really interest me. You know, when you're seeing something that's kind of just stuck in between there, that's not where most of your action is going to be made on a buying and out of money option. You can see like a big X through this prior period. You can see there was this period here where it surged outside of that. When we break outside of that, start making new highs, that can lead to a major runaway like it did in late June. And then we got a signal there at the start of July to buy into those 172.5 calls. Stock was about 160. It runs to about the strike price here, up to about 172. And our $1.06 a piece has turned into, on the gap up, more than a triple, 234% gain. We take the windfall and the gap up, right? The day before was 165, gaps up to 171, and we're ringing the register there for more than the triple, $2,200+ gain on the trade. Now, what does a loser look like? Here's an example of it, right? We don't put a 50% loss, let's say, on it. Why don't we do that? Because we would get whipsawed on some of the trades, right? We want to give ourselves a chance. This one looks like it would have gotten close to a 50% gain, which is what we would need for our first target. We got in for $133 a piece on our 30-minute system when the ADX started to cross up. You see, initially it was right? We went from about, what, 139 up the next day to about 141.5, but we needed more like 142.5 to 143. We were only up like 33 to 40%. We didn't get our 50% first target. And then it starts coming down, right? Well, why wouldn't we trail stocks? You can put all the woulda, coulda, shouldas. Our experience is we want to give it a chance to keep going, but also if it doesn't, give it the 5 days. So we're in on a Monday, out the next Monday afternoon, and look, the stock actually hasn't moved that much. It's back to about 139 where we got in. It went down in between though to 135, came back up. So of course we've lost a week of time with no price movement net on the stock. So we lost $1 out of our $1.33, or 75% loss. So it can happen. And that's why I say you have to be prepared for that can happen. We think that's the better approach, is to say use the time stop rather than a price stop that can fake you out. And so in this case, we just say take the $100 per contract lost $700 on that trade plus your, what, $14 round trip commission. So be prepared that can and will happen. But the goal is to make multiples of that, right? So, and I always tell people, if that's too much of a risk factor for you on $1,000, you say, I don't want to lose more than $500. Well, then cut your trading size in half. Don't put $1,000 in each trade. Put $500 in each trade. Every once in a while, we might have a crap out. It can happen. So the goal is, I remind subscribers that I'd rather you think that way to stay in the game with a small allocation per trade than try to take too much risk on an individual capital allocation. Okay, so here's another upside breakout, right? Remember the Donchians, Richard Donchian developed these bands to help draw recent highs and recent lows. We put that little lag in there, and you can see that the upside breakout tells you something unusual is potentially happening here. In this case, we bought it late that day, June 24th. On a daily chart, we would buy out several weeks expiration. It's about 148. The very next day it goes from 148 to 154. It's up $6 with only a day of time elapsed. And on that $6 move, we end up getting, you can see about 2 2/3 of that $6 move, right? That makes sense because it's out of the money going closer to the money, but still slightly out of the money by the time we sell out that next afternoon. We take down our 200% profit in about 24 hours. Right, so that's still not a day trade, right, from one afternoon to the next, but the goal is we want to obviously take advantage of both patterns on the Donchian channel above and below the boundaries. Now here's the put setups here. Put setups are different. You can see it looked like it was breaking out to the upside, makes a new high here on this big red candle, and then has the big dramatic close below. So most candle followers will recognize that compared to the prior day's high and low, when we basically have the outside action, new high and new low, big close down, that's called a bearish engulfing pattern. But it's a big reversal after what looked like a prior breakout attempt. So it made that breakout look like a fake out. Now, we often see that after those types of hard daily chart reversals, you will see a next morning a bounce attempt, usually the dead cat bounce, if you will, right? So the idea is that, okay, got pounded, but guess what? Institutions are going, ew, they're licking their wounds. If they were buying that breakout, now they're down. Individuals as well, and they're going, okay, I'll sell out into that bounce and say, just go ahead and get me my capital back here, get me out of this thing, okay? So you can see here that now we're in a position where we want to focus ourselves on how to minimize risk and say, okay, let's be sensible here. Let's not be greedy, but let's expect that we can take advantage of this thing. And so what do? We buy the puts on that next morning's open. Stock's about 142.5. We're buying about 10% out of the money, the 128 strike put. And going, are you nuts? Well, you can see the old lows are near 128 back here a few weeks before, right? So it pops down over those next several days to just about 1% out of the money, about 129. And so those $1.72 options that we bought 5 contracts of, we were looking for a triple, take them up to 520, you make just over a triple, $1,740 gain on your initial, what, $860 invested. So there's your tripler on the initial capital put in. So it just shows you that these things, when they are failing on a breakout, turns into a fake out, they can reverse the other direction fairly dramatically. Here's another one. You see, it looked like we were breaking out. You see it try to break out that next morning, then bam, big hard close lower. And so we get in the next morning. In this case, we're wrong for a day, right? We're getting in here about 128. It goes up to about 131 and change, and we're wrong that first day. So it takes us a day and a half or so to start getting to a profitable position. But you can see after we got in there, by day 4, we've ripped all the way down here to about 116.5. We're a couple percent out of the money, but our $1.23 we paid per contract, guys, 8 contracts in for $123 times 8, almost $1,000 allocation, something like $984 in. We're out as a triple or a target of 370 for a $1,976 gain on that nearly full $1,000 position there. So it just says, okay, ring the register, total 4 days later. So obviously trading these weekly options on NVIDIA, like I said, it's not a conservative strategy, it's aggressive growth. And like we said, with the time stop instead of a price stop, you got to give it some wiggle room, right? You will have times where you get dinged a bit. And so the goal is to not take too much risk, especially when you're a new subscriber coming in. I tend to remind new subscribers, make sure that you start small and look at it as a longer term plan to building wealth, not a get rich quick on the next trade. That all in, all out mentality is not the way to be a consistent trader. It's slow and steady wins the race on your capital allocation. Like we said, the longer term look back to the last stock split on NVIDIA in June of 2024 to today on all closed trades, take a $5,000 model portfolio to over $26,700. Gross profit $21,731. That's gross before commissions and before subscription investment. And remember, on all lookbacks, that past performance cannot guarantee future results. The future will vary. Could at times be better than this, and times it worse than this. We know it will oscillate. But your job is to not oscillate in your commitment to following each trade on a slow and steady basis, and then taking advantage of it. So what we've set up for you here, you see the overall growth in the portfolio before commissions, before subscription investment, knowing that past performance will not guarantee the future results. But the idea is that I set up a super special to get you trying it for the next 90 days, the next 3 months. By the way, we just have entered into the best 3-month seasonality for the markets. November, December, January is usually the best 3 months of the year in my experience. And so it's a great time to start to take advantage of these real-time trade alerts. So what we did is I said, look, try 3 months. I don't believe in short-term trials, and I don't believe in free trials because you don't have any skin in the game. You got to put a little skin in the game to be willing to follow it, but not that much. Make it something where you can easily pay for it off of just one trade that works. So what we did is we said, look, 3 months of this, if you're buying off my website, would be an $891 investment, $297 a month times 3 monthly investments. you'd be in for 891. Well, I said slash that. Let's make it really attractive. Let's take it down for MetaStock folks here today. And thank you, Jeff and the MetaStock team, for including me in today's event and this week's event. It's been a great event for a lot of different trading ideas. But think of this: 3 months, taking it down from 891 down by more than $700 to only $177. Why did I do this? Because I believe you're going to be hooked when you try it out for the next 3 months. And think about it also, 90 days access, that's at under $2 a day if you think of it that way. So we set up this page for you, bigtrends.com/meta, and you can see you're going to get all the educational support as well, the rule sheet. You're going to get the ability to ask questions of me and my analyst team, and I do weekly video training as well. So you get a whole lot of extra, basically thousands of dollars of support to go with that trade alert value. And I'm going to answer some frequently asked questions. Let me show you the order page real quick first, because I love that we're all about the KISS principle at Big Trends. Keeping it simple has been the secret to my options trading success over 36 years and counting, and 26 years now since launching Big Trends in November of '99. So what we have here, as you can see, is that we've taken all discounts, right? So there is no other discount to be applied. We've took the retail 891 investment, and we already slashed it down and marked it down to just 177 for the next 3 months, just to try it out for 90 days and let us prove it to you. Let the system prove it to you, right? Don't just take my word for it. Try it for just $177. Like we showed you, one trade can make you thousands potentially. So the idea is that, hey, you know, $177, small investment to make to try it for 90 days and let us show you what we can do. So what you do is you review our terms and conditions, and then you click on, after you review that you agree to how we've done business 26 years and counting, you spell everything out for you. And then you see that there's a couple ways you can go. You can, this is a secure page. You can put all your payment info and billing information info, get your email in there that you want to get the alert sent to. We'll send you a follow-up on how you can set up the text alerts at no additional charge too. And then hit the green complete your purchase button. Or the way I like to do a lot of my online purchases is review the terms and conditions, check that out, check that box, and then hit the orange PayPal button. That will redirect you to the PayPal login. You log in, you choose your money source. A few clicks later, you've just locked in 90 days of value for less than $2 a day, just $177 for the next 90 days. That'll take you into, right, all of December, all of January, into nearly in the middle of February, right before Valentine's Day. And that'll give you a good trial period to really let us show you what NVIDIA Options Master can do. After that, I think you'll be willing to pay a more typical list price to basically say, hey, you know, you see the value, it's helped pay for a great ROI for you, and more importantly, keeps teaching you about it, right? We can't guarantee any one trade or a series of trades, you know, the future results will vary, but the idea is that we're going to follow the system each and every time. So I'm out of time here, but let me just quickly just remind you, if you need to reach us, you can email us clientcare@bigtrends.com or call our 800 Big Trends number. It's 800-244-8736. And just quickly, frequently asked questions. We're just buying calls or puts. They're real-time email and text alert updates. We'll send them out at any point during a trading day, at the end of each half hour on the 30-minute system, or at the end of the day for the call buys, the beginning of the next day for the put buys on the daily chart system. Averaging about 7 total trades a month. And look, we're looking to get in for less than $200 a contract. $2 or less, so that way you can get a lot of leverage, a lot of contracts, a lot of bang for your buck. With weekly video training, I give you a bonus strategy session of a high definition quality video that I recorded for new subscribers, and the settings and rule sheet. So I walk through that in the video, and then our access to me and my research team. So just one trade, of course, can easily make you many times over your $177 investment. That's a daily chart system in just a few days. And then, of course, we're marking it down from the $891 typical price you'd pay off of my bigtrends.com website, marked down today for you as an attendee here, this awesome event this week. Thank you, MetaStock, and all the team there, Jeff and company. Marking it from $891, only $177. You go to bigtrends.com/meta and you lock it down, and now you can try it for 90 days. You'll get real-time email alerts, and then we'll remind you how you can get set up for the real-time text alerts as well. It's a small price to invest to get a lot of trades. Remember, we're talking about 7 trades a month. That's like 21 trades at least over the next 3 months. And like I said, if that's less than $10 a trade effectively, that we showed you trades that made thousands potentially. Of course, there's going to be winners, there's going to be losers. So just be slow and steady on your capital allocation. Start small and steady. I think you'll find it'll turn you into a longer term subscriber. Let me hand it back to Jeff so he can also tell you more about our Big Trends toolkit for MetaStock and get you ready for our next great speaker and trader. Thank you, Jeff, for having me.
Hey, Price, before you go, I have two quick questions for you.
Yeah.
Autumn would like to know, do you send signals for entries and exits as part of this?
Exactly. We sure do. We never leave subscribers hanging. So on every entry signal, Autumn and everybody, we're going to tell you when to get in. More importantly, we always tell subscribers when to get out. We send it out to everybody real time at the same time through the real-time email follow-ups, and then the text alert follow-ups go out at the same time as well. So I recommend getting both, by the way, so you never miss a trade alert. I don't know about you, Jeff, but for me, it's some where texts get my attention a lot faster than email. So I always recommend subscribers are getting both the real-time email and the real-time text alerts.
Cool. And then the other question that we had was, how much is this going to cost after the 90 days?
Yeah, typically it's $297 a month, and so typically for existing subscribers, you can see some specials off of that for longer term subscriptions, but basically we're confident that A, you'll see the value, you'll be willing to take advantage of whatever offer we might have from there on a longer term subscription. So this is just a great way to try it, get your feet wet, and this is also why I don't do like a 1 month or a 2 week trial. It's like, try it over time and don't get too greedy. The emotions are what really hurt options traders, because we're dealing with leverage with options, right? So the idea is that if you start small and just build your confidence and get your awareness up about what winners look like, what losers look like, no one trade is going to make or break you. No one trade is going to throw you off of your plan. To keep on consistently executing, that will keep you in the game for the longer haul.
Right on. Okay. And at $177 to try it out?
Yes.
Seems like a good option. Bigtrends.com/meta. The link is on the chat, and the link is in the YouTube, both chats, actually.
Thank you, Jeff.
Thanks, Price. Great to have you.
Appreciate it.
All right. Let's go ahead and do this. All right. All right. I did want to just spend a second, or a few minutes, actually, just talking a little bit about the add-on that we've also developed with Price. As I was introducing Price, I talked about how Price was kind of one of the first people we worked on, or that I worked with, not that we as a company, but me personally worked with, and just the insight that he had into trading helped shape kind of a lot of the way I look at stocks and the markets and just everything else as well. So we are on the third iteration of Price Headley's Big Trend Toolkit 3. Just going to talk for a second a little about that. In terms, and I don't have really, we're kind of a little bit over time, but in terms of methodologies and stuff like that, Price Headley has been rated #1 in the Market Timers Digest in terms of identifying good trades. And if you're looking for a toolbox that incorporates all of the trading methodologies that he's designed, this is the comprehensive collection. Literally, I think there's 18 or 19 methodologies. I'm not going to count them right here. But they all are complete built-in systems. So actually it's 17 experts, 17 scans, 17 tests. You can go in and test the different trading ideas, see how they work, see what the drawdown looks like. One of our most popular, most successful add-ons. It's done really, really well over the years. And I just wanted to kind of highlight one of these systems, just because we don't have we're out of time. But I just want to kind of give you an idea of how one of these methodologies would actually work. And so let me kind of come in here. While Price was talking, I ran a little bit of an exploration for one of the methodologies, and I like all of them, but one of the methodologies that actually combines Price's favorite indicators. It's called the BTTK score. It's one of those 17 methodologies. So I scanned, do I still have the scan report open? I guess not. That's okay. I scanned the NASDAQ 100 and 2 stocks came up, Thermo, TMO, and then the other one that came out was the CBOE, okay? Both of these were kind of showing up as a buy signal a little bit earlier today when we were scanning for it. And what I like about this is it actually kind of combines a lot of Price's favorite indicators into just like a methodology that you can use. So you can see exactly kind of which indicators that he's using, because it tells you right here. The bullish, the Williams percent R is bullish. 2 days ago, the Williams percent R was bullish. The CCI is bullish. The efficiency ratio is bullish. His acceleration bands is actually neutral, but you can kind of go through here. I'm not going to read it all, but it combines a lot of the indicators and the methodologies that he likes into kind of a system. I liked the concept of the score breakdown so much that we actually incorporated into all of the systems. So even if you're running like the the scan that does any of the other scans. Let's just say it that way. If you're running any of the other scans, it's actually going to give you this score. Okay. In this particular case, you'll see yesterday it issued a setup signal. This is an alert that a buy signal might happen today. And today, when it traded up above the high, it actually gave us a buy signal. And so one of the things I really like about Price, I kind of use him as kind of a template for how good commentary should work. So when we're designing out commentary, I really like the way that he understood the assignment. I'm saying, okay, well, when a signal comes up, what I want to do is be able to kind of really explain it to a customer, tell them what they should do with it, what they should look for. And he did a great job with that. So if we look here, traders interested in taking advantage of this opportunity should look to buy the stock or call options 2 months before expiration. If you're aggressive, you could look to do this. If you're conservative, you should look to do this. Typically, you look for an option that is out of the money or near the money that costs $200 or less. You can look at one strike in the money if you want to be more conservative, and it also gives you complete instructions on when to get out of that trade. So right now, it will exit a trade on the chart as well for you. So as soon as you run your exploration, you can kind of go in, you can get up the instructions that you need to execute that trade. And it is built around all 17 methodologies that Headley has built over the years while in his cooperation with MetaStock that has to span for like decades now. Such a great collection of tools that he's created for it. 17 experts, 17 scans, 17 system tests, one low price. So normally this is $699 as a one-time cost. Here at the conference, it's a $399 price tag. There's training that comes with it that we put together right after the release of the third version of the Big Trend Toolkit. We back it with a money-back guarantee. So you can try it out, you can play with it, you can test the ideas, you can go look at it. If it's not helpful for you, you can get a refund. Great risk reward there. $399, I want to reiterate that's a one-time cost. If you haven't tried MetaStock yet, we've probably heard about it a little bit over the course of the conference, but it has been rated the #1 software in its price category for 32 years in a row. And that's because I believe it's helpful. Like every day I run my market scans. I'm about ready to start one. Being able, and I think that's one of the things that we do best, but the ability to go in and just say, okay, out of this list of 3,000 stocks, which one should I focus on? I want to focus on the opportunities, not the non-opportunities. And then to be able to go in and kind of have recommendations on just like what you saw with Price, the expirations, that kind of stuff. So if you've not tried MetaStock before, we'll give you a free trial with your purchase. We'll give you a money-back guarantee, regardless of whether or not you have MetaStock. If you've been using MetaStock for a while, thank you. We appreciate that. $699 is the normal price, though. At the conference, it's only going to be $399, which is cheap. You can call us at 800-882-3040. You go to metastock.com/saleschat. You can also go to metastock.com/bigtrendsa. So if you have any questions, make sure to let us know. We'd love to hear from you. Let's go ahead and move on. I want to say thank you before we kind of move into our next speaker to Stocks and Commodities Magazine. Stocks and Commodities Magazine has been sponsoring the events that we do, and they've been sponsoring them for about 16 years, I think, ever since we started our crazy events. They've been kind of supporting and helping us with it. It's also a great magazine. They've been publishing, as you can see, since 1982. They've done 17,000 articles over the years. As a subscriber, you'll get access to a searchable, indexed archive of all 17,000 articles, and just a great magazine. I think it's important when you're a trader to kind of stay sharp, keep improving, keep doing keep getting better. And that's why I like Stocks and Commodities, is every month you get a physical magazine in the mail. If you're in the US, they mail out magazines. If you're overseas, they basically send you a PDF copy, but contains a lot of information about new ideas, new things that you can implement, and something to learn. So www.traders.com, a big thank you to Stocks and Commodities Magazine for supporting us over the years. Much appreciated. It is time, and I am ready to give away a prize. Our next guest is Scott Brown, and since He is the president of MetaStock. I'm going to have him help us give away a prize.
Ooh.
Woo! There you go. Can you hear me?
How are you, buddy?
Good.
Man, you look good today, Jeff.
Oh, well, thank you. Go on.
I mean, that MetaStock shirt is just, you're flexing it out. I love it.
We're going to give away this book. You're going to help me.
Okay.
High Profit Candlestick Patterns. A good friend of mine, Steve Bigelow, wrote it. A big partner of MetaStock.
Yeah,
Actually,
big partner.
Another person that had a huge impact on how I trade, actually. So we're going to give away one copy of this. If you're lucky, I will be mailing a copy of this to you next week when I go to the post office. So
Ooh.
what we do, Scott, just because anybody that registers to go to the event can win a prize. They're entered into a random drawing. We give away prizes almost between every speaker.
Yeah.
If you're watching this in GoToWebinar, you don't need to, you've already registered because that's how you got your link. If you're watching us on YouTube, there's a link at the very top that's pinned that says to qualify for the prizes, register here. That'll put you on the list. The only thing I need from you, Scott, is any number between 2, because there's a header row, and 6,011.
How about we go with 6,002?
Okay, let's see who that is. That is William with a mail.com, not a gmail.com address. A William here in the US with a mail.com address.
Ooh.
BB Will.
Okay.
So, if
BB Will, you're the winner.
Good job. If you're here, say hi. All right.
That's right.
All right. Let me recognize you. Let me go ahead and make you the presenter here.
Okay.
It should just pop up and ask you if you want to share your screen. Oh man, talk about looking good. I just found your camera.
Yep. And I will show my screen.
And while he does that, just to give a little bit of an intro, Scott is the owner of MetaStock. He has been, how long have you been working at MetaStock now?
25 years. 25
years. So kind of a new
less than you though. I mean, Jeff, you're like what, 42?
27 will be 30, so 28-ish. Yeah. Scott,
Jeff, I'm trying to show my screen and it's not letting me.
Okay. I will come in there and figure it out for you in just a second. Scott is great. He's a great presenter. He is a very, very cool guy, very nice guy. He's also my boss's boss, so he looks exceptionally handsome because of that. And I'm gonna go help him share his screen. You'll see me in Scott's room in just a second.
That's right. Well, everyone, I am thrilled to be here with you. And we will get this presentation going here in just a sec. Right here, usually okay, there we go. Cool. Okay. Okay, perfect. Well, welcome everyone. While we have my man here, Jeff, we need to give a huge shout out to him and a big thanks. Can you imagine trying to put 50 speakers at one time in a conference? That's a lot of people. And he organizes it. He invites everybody to do it. And the really cool part, it's free. It's free for you as a trader, to come and be a part of something bigger and really try to, find ways to become a better trader. And that's why we're here. I mean, obviously you're not here to see me, hear me. All you're trying to do is pull out a few tidbits of, what can I do to become a better trader? And the one before me, man, Price Headley, he is so great. And the add-on he created with us, fantastic. And that's something you should definitely try out. and his services. He's a good one. But again, a huge thank you to Jeff Gibby. He's the best of the best. There's no doubt about it. So let's jump in. We are going to have an exciting hour on the forecaster and really what the forecaster can do for you. And it's built into MetaStock. I'm using the latest version of MetaStock, which is MetaStock 19. So everything you see that I'm doing, you know, if you're a current user of MetaStock, you'll want to upgrade to MetaStock 19. Or, you know, if you're a new user, when you buy MetaStock, you'll get version 19, okay? So let's kind of jump into this. And obviously, the first thing we have is the disclaimer. And it talks about this demonstration is designed to instruct you on using MetaStock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So there's the disclaimer. The rest of it, you can kind of overlook that. Our attorneys will be happy that we went through that with you. And it is important to know, with any of the speakers that you're going to listen to today, or any book that you're reading, or any video that you're watching online, that there is inherent risk and there's no guarantees. If anybody starts talking about a guarantee and how you can make all this money, you need to run. You know, if they're not telling you that there's risk involved, run, right? Because there is risk. And people that have been around trading, you know, get that more and more and more. And it's just, it's important that you realize that. We're going to jump into our first slide here. It's the MetaStock forecaster. And we're only going to spend just a few minutes inside of PowerPoint. And then we're going to jump inside of the software and really get into it and learn and have some more fun with it. So let me take you back on a little ride and give you a little bit of background before we jump into the forecaster. So like Jeff said, I've been with the company 25 years. He's been with the company 28 years. Our average employee's been here about 17 years. MetaStock is a great company to work for, okay? We love our employees, and when I first started with MetaStock, we were owned by Reuters, and then Thomson bought Reuters, so it became Thomson Reuters. And during the housing, you know, crash, there was an opportunity where I had a boss, and he came from Deutsche Bank, and he managed all the trading over there, billions of dollars that he did. And he was out of New York City, and I'm in Salt Lake City. So about a month after he was working for Reuters, I reached out to him and said, look, hey, you're my boss. We own Thomson Reuters owns a software company based out of Salt Lake City. And, you know, I'm going to come out to New York and show you a little bit about MetaStock. And he was pretty excited. He goes, great, you know, come out and see me. And so the morning of, I walk into the office. It's right there in Times Square. And it's about 9 in the morning. And the German guy, and he's like, has high-end liquor all over the office. And he's like, hey, would you like a shot of this, you know, Russian vodka? And I don't know if that was a test or, you know, what he was thinking. And I said, no, I'm good. And he started talking about how Thomson Reuters, during this housing crash, the stock price was down, and they had to focus on, you know, really what was core business to them. And whenever you hear someone talk about they got to focus on the core business, what it means is they're going to divest other parts of the business that aren't with that core to really strengthen the company. So I've been talking to him about 10 minutes, and he kept talking about the core business. So I just said to him, hey, are you going to sell us? And he said, yes. And without hesitation, I said, well, can I buy it? And he said, sure. And it took us about a year to close the transaction. And I've owned MetaStock since 2013. And it's so weird to say that we're coming up on 13 years of ownership. And so, you know, it's insane, and it's just a side story, but we had a programmer, and this programmer was a part of Thomson Reuters. And when he was a part of Thomson Reuters, he would build all these cool things that you could do with the chart. But Thomson Reuters would just come back and say, we don't need that. We don't like that. And so he got a bit frustrated, and he's so talented. He goes, you know what? I'm gonna quit and figure out what I want to do. So he did this when about 2 or 3 years, probably 2 years before I bought MetaStock. And me and him would keep in contact. We'd go to lunch, you know, probably every 6 months. And we'd meet there and talk about things. And he started to show me what he was building. He goes, look, was one of the first individuals to ever program back testing. He's been with MetaStock for over, I think, 38 years. He's coming up on 40 years. And he's a programmer, and he goes, look, I've programmed back testing, and it's just looking at how it performed historically. What I want to do is build something that looks into the future, that looks at the history, because that's what technical analysis is. But then what I want it to do is when the buyer sell signal point happens, an event marker, if you click on it, I want to draw a cloud into the future. And this cloud is going to give the user the capability to know if this cloud is, if there's a strong indication that the price is going to move into this cloud, or if it's not going to move into this cloud. So it's really emphasizing the future. And so I told Ken, look, hey, I'm going to buy MetaStock. I would love for you to come back. And he said yes. And so what we did is we took this piece of software that he had built and we put it inside of MetaStock. As we've said, as Jeff said, I thought it was only 31 years, but it's 32 years that we've received the award for the best trading software from Technical Analysis of Stocks and Commodities magazine from the readers, okay? So the MetaStock forecaster analyzes price action after historical events to determine the probabilities of future price action. And it really answers that question, where are the prices most likely to be in the future after one of these events occurs? So an event can be anything from an indicator like, you know, stochastics, something that's divergence, overbought, oversold, a MACD, something that's trending. So you can draw your own patterns inside of MetaStock Forecaster. I'll show you how to do that. We can copy patterns directly from the chart. We can rank recognized events, and also there's some recognizers that are in there. So here's some of those predefined event recognizers. We have everything from, as you can see, at MACDs and commodity channel index and money flow index, moving averages. This is just a brief look into how many we have, and we'll show you more about those. So here's actually the forecaster in action. So when it comes on, you're going to see, notice that there's a chart right there on the screen. And then these yellow rectangles, or excuse me, triangles, are event markers. And it doesn't matter if it's upside down or right side up. When you click on one of those, that is when there was a buy or sell entry into the event. So this one is the moving average 50 cross down, okay? And when you click on it, it's gonna draw a cloud. And when you can see the cloud over here, there's a probability scale. The brighter the color, the higher probability that the price will move into that. Now, again, there's no guarantee that this is correct, right? I wanna be very clear. We can also look at a cloud in a 30-day, 90-day, or 180 day, okay? So once you click on it, you can see where that goes. Now, there's two things up here. There's price, volume, and event markers, and there's also past performance. The price, volume, and event markers, that's a static image. So when I click on that, it will bring up the static image. And that static image will never change. So I could go back to this event marker, click on it, and it would be the same event marker that occurred on the day of around May 1st. And I could click on it, even though it could be in September, it will always be the same. But then you ask yourself, well, there's all these bars coming in. Wouldn't it be great if the cloud could evolve with these different bars that are moving in? So that's where this past performance comes in. When you click on that, it will take every bar up to today's bar, and it will show you exactly where we're at in regards to that event. It's going to show you 7, 14, 30, 60, 90 days. And really right now we're at 0%, but where is it trending? It's saying, hey, look, you know, in the next 180 days, it might be up around 10%. Now, who would love something like this? Well, every trader out there would love something like this. But let's say you're an options trader and you could look out in 6 months and think, boy, if Adobe's going to be up 10%, I might be able to buy some very cheap calls, right? And so by doing so, it gives options traders a definite edge over any other one, you know, traders that are trying to do this. So this can really help, and also a regular investor or trader that just wants to say, hey, here's an opportunity in the next 6 months that it might be up 10%. Again, no guarantee of that, but we'll show you how this works. So here's Adobe, and we click on the event marker there, and it builds out a cloud, okay? And as you can see, look, you can see that the cloud and the price action followed pretty closely right there. So to get to it inside of MetaStock, you just click on Forecaster. We also have 67 different event scans in the Explorer. And we're actually going to be doing some explorations on some of these forecasters. And we'll show you kind of how to do that. Another thing that you can do is there's a lot of different rankings. And we're going to go into those rankings inside the software. Now, this piece of what the forecaster can do is second to none. You can actually draw your own patterns inside of the forecaster. I can't tell you how many times I have presented MetaStock hundreds of times all over the world. I think I've been to 60 or 70 different countries. And I've flown 2.1 million miles on Delta. So that should give you an idea of about, you know, where I've been and trying to present and promote MetaStock. But a lot of people, whenever we go over patterns inside of MetaStock, people will say things such as, hey, you know, does it do this type of pattern, this type of pattern? And most of the time we have all the patterns. But then there's going to be people that are like, man, I want to do this with a pattern. What if you could get inside of MetaStock, take your mouse, and inside of it, you could draw your own pattern with your mouse. And then we would create all the formula language in the background, and you could actually put that pattern on the chart. Well, with the MetaStock forecaster, you can do that. You can draw your own pattern. You can copy any pattern directly from the chart. You can quick test it against the security to look for matches, and it will actually draw the cloud into the future. And we're going to do some examples of that. So here's a double top, and someone built that double top. Okay, let's go into the software, and we're going to actually do all kinds of things. We're going to analyze, we're going to look at some analysis of the E-mini, Bitcoin, crude oil, the euro, and Tesla, okay? So let's go ahead and take a look at these different things. If you're ever looking at a chart inside of MetaStock and you right click and go to forecaster, it will take that individual security and push it into the forecaster. You can also go up here to the Power Console. The Power Console is inside of MetaStock 19, and the Power Console will allow you to do analysis on all of these different things on over here. So you can do the chart, get quotes, exploration, system test, forecaster, or option scope. And so if I type in any instrument right here and click Start Forecaster, it will go ahead and bring up that individual security. Now I can bring up any security that I have data for, and I can do it on a 1 minute, 5 minute, daily, weekly, on any of those. So let's dive here into the forecaster. Let's look at IBM first. Let's do a stock first to get everybody comfortable with this. And what we're going to do is, here's the recognizer library. We have over 80 different event recognizers, and you can see all of those right there, right? There's so many of them. And then we can come here to the forecast analysis. When I bring up a security like I did IBM, it is going to show me all the event markers for every one of those recognizers in my library. So if I come down here and say, I'm interested in the MACD cross up, I will select that and it will show me every event marker for it. Now, since we're looking here at IBM, what we can do is we can come in here and we can sort those recognizers, those indicators by different ways inside of the forecaster. The first one, we can sort them on highest profit potential. We can do highest profit potential long, highest profit potential short. We can do most accurate current forecast. We can do most pronounced current breakout. We can do most distinct forecast cloud, most recent event, or most events. Now on all of these up here that I have, these 6, we're going to actually select a different one every time. But in the first one, let's select highest profit potential, and let's look at the moving average 200 cross up. Let's do that. So what we do is we get information here, and what it tells us is a statistical report on this side of the forecaster. Now, if you're a technical trader, you love statistics. You love to look at history, because what you think is going to happen is we have all this data historically of the chart. And if we can get these individual event markers and we think that history will repeat itself, then this really is valuable to us, right? So in here it says, hey, look, the event occurs 7 times between November 11th, 2020 and 2025. On average, the event occurs every 165 price bars. And then it goes into statistics, right? Statistically, 14 bars after the event occurs, and with a probability of 95%, the closing price appears to be about 1.9% higher, with a standard deviation of 0.0645. The statistical margin of error is 37%. Now, the statistical margin of error will go down if we can get more event markers that have occurred. So if we come down here and it says, look, this one has occurred 87 times, our statistical margin of error drops to 10%, okay? So let's just say 200 cross up right there. And let's start with a 30 bar. And we're going to go ahead and click on that. See, I wanted to show you something really interesting with the cloud. So when the cloud comes on here, the brighter the cloud, the greater the chance, the probability the price goes through. So on September 8th, it went right through the cloud, but this isn't an interesting one. It really diverges. And one of them goes up here and one of them goes down. It says, look, it's not going to keep going straight. And that's your sign of what occurred there. This one, we're looking at a daily chart here. Let's come back in here and show you one in real time. So we could come in here and say IBM. Let's look at a 60-minute chart. We'll bring that in the forecaster. Now, I wanted to bring this up for you in the beginning because 7 times to have a buy or sell signal happen in 5 years is not a lot. So the statistical margin of error is big. So if we go 90 bars, you can see it misses all of that upside there, okay? It's not always correct. So let's do this. Let's go to the 60-minute, and we're gonna find something that's occurred, let's say at least 15 times or more, okay? And really what I'm trying to show you here is that this presentation isn't just like, I'm gonna show you, you know, everything that's curve fitted and well, I'm trying to really give you the analysis on how you can do this and how it works. So here's Scott's pattern indicator. It's happened 33 times. And let's kind of see how this has worked historically. Let's put it on for 30 bars. And we'll come back here on some of these. Okay, and it shows you that it kind of just goes right through there. In the future, look, it went right through that bright spot. It gaps up a little bit. And then if you want to see a long distance, you can go 180 bars. Again, this is a 60-minute chart. And this is going to show you over the 180, 60-minute bars where it thinks it's going to go. It says, hey, look, we think it could go from maybe 315 all the way up to 335. So it could jump maybe 20 points in the next 180, 60-minute bars, okay? So that's really kind of how that works there. And we can come back here and look at different things and we can say, okay, let's look at this bar. And how did that perform for 180 bars? Wow, look at that. Look at that. So the probability was super high with the yellow on the probability scale. We went 180 bars and it just followed it really well, didn't it? So if we would have been trading this and it was at 240 and we saw this cloud potentially going to 265, you know, you could have put in, you know, maybe an option or a call 25 points higher and probably bought those quite cheap, okay? Now let's come over here. Let's look at the euro for any of our currency traders. This is a daily chart that we're looking at, and we're going to look at the most accurate current forecast. Again, here's the list of all of those, and we're going to look at the stochastics oversold. Okay. Again, I like to look at something with at least 15 event markers that have occurred. This one is great. There's been 30 event markers that occurred. And again, statistically, 30 bars after the event occurs, and with a probability of 95%, The closing price appears to be about 0.2% higher with a standard deviation of 0.0236. The statistical margin of error is approximately 18%. So we can come in here and say, okay, we can look at these historical bars and see how did those match. We're looking at the euro here. Okay, let's move that along. Is it pretty accurate? It seems like it's gone higher than what is being shown here. And you can kind of just play with it and really look at the different event markers, how they performed. And then we could get here to the end and say, well, let's see how it's performed. It's gone right through that cloud. We can see a 90 bar. Now, the interesting thing is, remember, if you took a trade on one of these event markers, and now you have, again, maybe 3 weeks of new data right there, and you're wondering where it's going, jump right here into the forecast cloud. The forecast cloud is going to take in every new bar and reshape the cloud for you. You know, it truly is an amazing way that every new bar, it's calculating, it's learning, and it's going to show you, you know, on probability scale of where it's going to go in the future. Okay, so that's a little bit about the euro there and kind of where we're going. We looked at the stochastics oversold. Now let's look at a different one. Let's look at crude oil. Again, this is a daily chart. And I want to show you charts that are going up, going down, that are oscillating. Man, this chart right here is the perfect example why traders lose money, right? It's all over the place, and it can be really tough. So the next one we're going to look at is we're going to look at the event organizers by the most pronounced current breakout. We're going to look at the moving average 50 cross up, and we're just going to kind of click on these and take a look. Wow, look at that one. That is so cool. We see a probability on this one, and you see a dark, or excuse me, a bright cloud. It was yellow and then bright red and then pink. So it was going from maybe a 90 down to a 60 probability down to a 50, and this is a 90 bar. And look at these purple spots. It says, hey, look, you might have about a 50% chance that the price goes through it. And look at that. It went right through that. And again, that could be very helpful for someone that is investing in this or trading or has options, you know, those types of things inside here. Wow, that is a really cool cloud. Remember, come up here to forecast cloud, and you can see where all the current bars of data are making that cloud and seeing where it is. So as of today, it says, look, that's 0%, but in the next 90 days, you know, you might be down 5 to 7% on crude oil, okay? Our next one, come on, all the people out there that are trading Bitcoin, right? They want to see some Bitcoin. We're going to look at the most distinct forecast cloud here. And we're going to look at a trending top that has 15 events that have occurred. Now, let's start with 30 bars. And we can kind of come back here and say, what do these look like? Are they accurate? Yeah, that looks really accurate. And then let's break out here for the most recent ones here. Let's kind of see how they've done. Okay, so it's gone and it's above where that price action is a little bit there on the 30 bar. Let's see where the current forecast cloud is. And it's really kind of trending in the middle. Really not much of a change, you know, for Bitcoin, as it's kind of saying, maybe trending down a little bit. Our next one that we're going to look at is the E-mini, and this is a 60-minute chart. Let's look at the most events that have occurred, and I created one at one of these conferences, and it's called the Jeff Best MetaStock Employee Ever. Come on, who doesn't love the name of that? So if you come on here, you can click on these and we'll put them on a 30-day. It happened 142 times. And again, the more times you have event markers, in my opinion and in my experience with using the forecaster, the more accurate that forecast cloud is, because it has so much more historical data to go on, right? So let's click on some of these clouds. And let's see where our latest one wants to go. So the E-mini on a 60-minute chart, it dropped there. Let's look at a 90-day where we think it's headed. Okay, looks like it's gonna go down a little bit. And then let's look at 180. So it looks like, you know, all these, based on this pattern we created, look like it's gonna be in a downtrend right there. So let me show you some really cool things you can do inside of MetaStock here. So let's zoom in here. And let's say, have you ever looked at a chart and you're like, that is the specific pattern that I love and I want to trade that setup? Well, let's say that you want to look at 1, 2, 3, 4, 5 bars in a row that have gone up. They open and close higher. If you go right here and select user defined pattern select, you can come in here and you can highlight those. Okay, so I highlight it and it says, do you want to capture the pattern? I say yes. And let's enter the new name in here. Let's name it 5 bar pattern up. Okay, so we click save, and this will actually just created all the formula language in the background. And now I can come in here and say, let's just select that and let's rescan the selected analysis on E-mini 60-minute chart. And it's going to show me that pattern, and any time that pattern occurred on the chart, it's going to create an event marker when it's 75% or higher in match confidence. This one is 78%. This one right here is 78. This one right here is 85, right? And you can see 80 as it goes along here. And then you can select one of these. And it will draw a pattern based on that pattern I created. And you can see here, man, it followed that really quite well. I mean, to have something show you 90 bars in advance and to be somewhat close is pretty impressive. So let me show you another thing you can do here. So remember when I was talking in the beginning, how you can use your mouse and you can go ahead and create your own pattern? Well, let's create a pattern of a long-term bullish. And what we're going to do here is just kind of create this going up. And that's the pattern I want to look for, okay? You can invert these patterns, you can reverse them, you can do all of those things here, okay? And then I can click save, and I can say, I don't want the 5 bar pattern up. Oh, we created that right there. Let's scan the selected analysis. We just did that one. Let's go back here. Long-term bullish. Okay, cool. So it did do that. Okay. I just wanted to make sure that we had them both. So long-term bullish, and what it's saying is on that pattern that I created with my mouse, and then we created all the back end formula language for you building it, you can get on here and you can say, okay, here's the patterns. We can come in here. We can select those. Look at that. That is cool. We can select other ones. It's so cool. So you can see these clouds and how they match and how they develop and where you think the price is going to go. That's what the forecaster does. Now, inside of MetaStock, we actually have, if we go here to the Power Console, again, this is MetaStock 19. Everything I'm doing today is in MetaStock 19. If you have a version prior to MetaStock 19, you're going to want to upgrade, and it's just a small cost. If you're a prospect, you need MetaStock 19. All these speakers of the 40 or 50 that are doing it this week use MetaStock, okay? That should tell you something. We've been around since the late 80s, okay? Or actually early 80s. We've been around for a very, very long time. I can come in here and scan. So I'm going to say, hey, look, I want to look for events that occurred on the stochastic oversold. And then I'm going to start that exploration. And it's going to scan the NASDAQ 100. It's going to bring back stocks that have occurred or stocks that are maybe have a stochastic oscillator that have occurred inside of it. And look, it says that maybe one or two. So Picard and Tesla, if we come in here, we can double click right here and it will open up Tesla. And then I can come in here and put the forecaster and it will actually bring Tesla right here in the forecaster. And I can come into the recognizer library, enable all of them, and rescan all analyses. And it's creating that. And then what it will do, it will show you Tesla and all the event markers that occurred. And then we could look at the stochastic oscillator from the Explorer that's showing us, hey, there's something that occurred with the stochastic oscillator, and we can do a bit of research on that. And so, you know, there's a lot of things you can do here with the forecaster. Number one, it's going to identify different events that have occurred on your chart. Once you click on that event marker, it will show you the probability of where that cloud is moving, right? And it shows you based on a moving average 200 cross up. This is a 60-minute chart. The brighter the color, the better the probability the price will go through it. Again, I just want to explain there's no guarantees, right? This is just probability. But this is such an interesting tool because instead of always just showing you the history, it's also forecasting the future. You can draw your own pattern like I just showed you with your mouse. You can also go back on the chart and you can highlight the bars and you can create your own pattern based on whatever bars you want to choose, which is such a powerful tool, right? The MetaStock forecaster, you need it. It's in MetaStock 19, and it's something that really, really will help you out. So let's go back into our PowerPoint. So how much does this cost? we have two different versions of MetaStock. The first one is our real-time version. And to get MetaStock and the real-time data, it costs $265 a month, okay? If you want to do this on a daily chart or includes intraday, you get MetaStock and the data, it's only $69 a month, okay? Real-time data is expensive, and that's why you see that the bigger price difference there. So what are we gonna do for you today? We're gonna put you on a 3-month trial. You can buy 1 month, get 2 free. It includes MetaStock 19, the data for the region of your choice, white glove installation support. Our support is the best support in the industry. I've worked here 25 years. Every single month we analyze our support. If you contact our support, we send you a survey on how they performed. And I've never seen customer satisfaction below 90%. In fact, sometimes we get 100% for the month. Unleash the power of MetaStock. It's going to show you how to do back testing, forecasting, use something like the Armo, use the expert advisor, the Explorer, the quote center, those types of things. Boy, you really should call in or get on the internet and log into our webpage and subscribe to this, because I'm telling you, if we've been around 40 years, we even have institutional customers, right? Banks using this. 25% of our revenue comes from that type of thing. And it's been around for so long, we are the industry standard. This is not a fly-by, get-rich-quick scheme. This is a software built for someone that wants to use different tools, whether they're trading stocks, options, futures, commodities. If you want to do Bitcoin, crypto, whatever it is, we can help you out. If you call 1-800-882-3040, you can get the 3-month trial. We have all of our sales reps here today. You can buy 1 month and get 2 free. It makes it so cheap, and you get 3 months. 1-800-882-3040. Or you can go right to our website and you can chat with our sales reps. They can do it. And we also have a landing page, www.metastock.com/conf-promo. And you can go ahead and log on that way and do this. So do what thousands and thousands of other users do, and use the software that really institutional and professional people use. And that's MetaStock, okay? I knew 13 years ago when I bought MetaStock, it was a no-brainer, because we are the best of the best in technical analysis and charting software. Definitely put it to the test. And again, if you're a MetaStock user, you haven't been using it for a while, call in and log in, right? Get that latest version of MetaStock 19. You really need it. This is something that will really, really help your trading out. We're excited to help you out, and please put us to the test. With that, Jeff, I appreciate your time, everyone, and there we go.
Thanks, Scotty. Hey, I have something for you.
Okay.
We got another book to give away. Woo! This is also by Steve Bigelow, Eliminating.
Oh, let's go. That's a good one.
It is. They're all good.
They are.
We do have some of his Santa Claus books. Maybe we'll do that a little bit later.
Oh, we have. It's the holidays, Jeff. Black Friday's coming up. Christmas and Thanksgiving.
All right, it's the next prize. Spoiler alert. For now, though, what I need from you, just give me another number between 2 and 6,011.
57.
Ooh. That is a WA first name, WA, with a Gmail address. And then Kelly doesn't like me to say their full name because he feels like we're doxing people on the internet. So just WA with a Gmail.
Let's go, WA.
Good job.
Let's go. Hey,
all right.
Jeff, you are crushing this. I just want to also say again, everyone, This guy right here puts in countless hours, and he does this for you guys so you can learn how to become better traders. Come on, show me other examples where there's 40 or 50, experts in the market that are doing this for free for you guys. And the only reason they do that is because of Jeff Gibby and the relationship they have with MetaStock. So thanks, Jeff. You're amazing. You're a superstar.
Can do it without all these great attendees and the great speakers. Thanks, Scott.
Thank you.
All right.
Kick me out.
Oh, yeah. Actually, you can just leave. I set you up so in such a way that you can just hit the X. But if you prefer to be booted.
Nope, I'll quit.
Okay. See you later. All right. Thanks a lot for that, Scott. Let me go ahead and make me the presenter again real quick. We already did the giveaway. All right. Do this. You should be able to see my screen now. I do want to reiterate that offer. MetaStock, it's been rated #1 32 years straight. I just ran a scan. I'm looking through some stocks. I made a decision to buy a few. Went through about 1,900 stocks and found just a handful of the ones that I wanted to take a closer look at through scanning. I love the ability to scan and identify those opportunities. And I haven't seen a software out there that does it as good as MetaStock. You can do any market you want. You can, it has over 300 exchanges you can use. I just love it. I wouldn't trade without MetaStock. In addition to scanning, of course, you're going to get the testing abilities, the ability to go in and get expert feedback, expert advisor. Scott just spent an hour on the forecaster. I'm just going to say the reason that MetaStock's been rated the best software in its price category is because of all of the tools. And I've seen so many software out there that can kind of do a little bit for you, but you quickly outgrow. And then you've wasted a lot of time and maybe some money actually learning with it. The thing I love about MetaStock is over the decades I've been using it, the times my trading has changed and evolved and maybe gotten better, it's always been something that MetaStock can grow with. And so there's a huge amount of value there. So if you pay for a month, it'll be $75 for our DC version. You'll get the second and the third month for free. That's about $25 a month is what you pay. That'll get you going until well into 2026, like January 11th. And you'll have a lot of time to play with it during the holidays. You can go through all the training. You go through that white glove installation appointment. If it's not helpful for you, no commitment to keep it. So the links are in the chat, metastock.com/conf promo, 800-882-3040, or metastock.com/sales chat. So looks like we're just a little bit, maybe 3 minutes behind, but I do want to say again, real quick before we go to our next speaker, I want to say thank you to the Traders Forum, thetradersforum.com, for sponsoring the event. We do some really cool events with the Traders Forum. It's a growing community. We share ideas, we run scans, we kind of talk about what we like, we talk about the markets, we get silly. We have experts in, we do lessons on indicators, we do there's a lot of fun. All of that stuff is free. And all you have to do if you want to join our community, go to thetradersforum.com. You can just fill out, you can set up your profile and you can start chatting with us right now. I'd love to see you there. So I look forward to seeing you there at thetradersforum.com. So our next speaker is also a friend of mine. I'm a bit of a broken record today, but Rahul has been working with us for a number of years. He works very closely with Vince Flora, who spoke, I think it was on Monday, but it might have been Tuesday. Rahul, just to kind of give you some background on him, is a CPA. I was trying to make sure that I got that correct, and hopefully I did. Rahul, you'll have to correct me if I get anything wrong here. He has been doing a lot of work on the back end with Vince for a number of years. We've been working with Vince for 15 years. I've known him for that whole time. Great guy. He's developed a trading methodology that he's been kind of using. He's going to show you receipts. He's going to show you some of the trades that they've taken, and you're going to enjoy it. Let's go ahead and get you started, Rahul.
Hey, Jeff.
Hey, I can see you and I can hear you. This is going great today.
I've got the trading setup going here. I've got the big monitor here, which may be taking up a little bit of space. Let me know if it's bugging you, and I'll get that out of the way. Otherwise, I thought I had a man crush on you until I met this man named Scott. He seems like he's
Oh.
a bigger man crush on you than I do.
All right. Well, before I start blushing or getting jealous, I'm going to get out of the way. It's your turn. Go.
Can you see the velocity PDF?
See it? Yeah. Not expanded yet, but we can see that, and I can see MetaStock behind it.
Yeah, I'm going to leave it as is because I'm going to go back and forth. We're going to spend most of our time on the charts. I saw some questions earlier about pricing for things. I think that's one of the things we pride ourselves on. The pricing is very transparent. We try to be very transparent in everything we do. And I'm going to show you all about that. Jeff, thank you. Thank you for having me on. I appreciate it. My name is Rahul Arora. I am, as Jeff mentioned, Jeff and I have known each other about 12, 13 years or so now. And I work with Vince Vora, and the three of us have been working together. We designed a few systems for Vince, including OFTS. Jeff, as is tradition, I'm going to open my Diet Coke to get started. So we've designed our favorite trade setup, winning momentum strategy. After that, we did veracity, and we're currently on Victory 2.0. Victory 3.0 is in the works right now as well. So keeping with the same V taxonomy, we designed this system called Velocity over the last 5 years. Since the pandemic, the market has gone through a lot of changes, and what used to work prior to 2020, even prior to 2022 when we had the down year, or 2023, doesn't necessarily work now. So with the help of things like AI and the systems that we have and the programmers that are available at MetaStock, we wanted to design something that, one, most importantly, was about preservation of capital. We wanted to design a system that if you got in and a trade didn't work, you would get an exit very quickly. I'm going to show you all of that momentarily. As I mentioned, it's 7 minutes past 1 now. I'm going to go till about 1:50 Eastern. And then I'm going to hand it over to Jeff. He's going to tell you about commentary on the system, scanning capabilities on the system. And I think that's one of the things that really makes this stand out, is the ability to scan, to shorten your research time, and to have a starting point. Instead of looking at a universe of 7,500 stocks in a local market without even considering what's overseas, this is going to help you shorten your research time. So let's get going. Before we get started, of course, this is not financial advice. We're not financial advisors. We are technical analysis experts, and we're showing you what we do. And I want to make a very important point here about risk. My risk tolerance and my background as a CPA has just made me really, really risk averse. When you're going through the training to become a CPA, one of the hallmarks of accounting and audit is this conservatism principle. We're always conservative. If there's an option to be aggressive in treatment of an item versus conservative, we would always choose the conservative portion. In 1998, I graduated from university, joined a Big Four firm, and had some of the best experience I could in the world of general business. I was in the audit stream. So I would go out and look at these businesses, and some of them were, you would never think that this is a business doing $10 million a year. You know, they're making, for example, on this can, they're making just the tabs. And we would say, oh, you make the cans and the tabs? No, we just make the tabs and we sell them to Coca-Cola or Pepsi or whatever. And that's our business. Something very specific. What came out of that, more importantly, was the ability to read financial statements. And I didn't realize how important that would be until I got into the investing and trading side of things about 5 years later. The ability to read financial statements, and now because of the availability of things like ChatGPT, et cetera, you don't really need to. You just need to know what questions to ask to make sure that you're getting the answer that you really, really want. And I'll give you an example. The notes to the financial statements are generally where the bodies are buried. So you have your balance sheet, your income statement, your statement of cash flows, all good. But when you get into the notes, you'll see how some of those numbers that are questionable were made up. And you're seeing this a lot with companies like Carvana, companies like CoreWeave, companies, and that's a more recent example, where just the idea that you're depreciating something over 10 years instead of over 5 years has such a great impact on your net income number. So the EPS number that you see every quarter, fantastic, stock shoots up, but eventually, and when I say eventually, I mean fundamentals eventually will catch up to the stock price. But in the meantime, a stock price can do a whole lot of things. Look at Palantir right now. So for fundamentals, I put a 5 to 10 year range on when it catches up with the stock price. In the meantime, we're going to focus on the technicals. The fundamentals do play a role, and I'll get to that momentarily. So I joined the firm 98, kind of was just trading on my own. We had nothing to do early on when we started. There wasn't junior accountants, not a whole lot to do there for us. And this is right around the time of the .com boom. So we're trading eBay, Cisco, JDS Uniphase, you probably remember all those names, Research in Motion. And I found out very quickly that I had no business trading, and I had no business trading options specifically, because it looks like easy money, but that is what the market makers are hoping for, that you have that confidence, you come in, and I managed to turn $10,000 into $1,500, maybe $1,600 very quickly. I think it was within a couple of weeks, couple of months. And this is before the gamification of trading with Robinhood and stuff, where you get the little bells and whistles when you trade. I did it without bells and whistles. That's how old I am. So I said, I want to learn. I gotta find a way. I gotta find an edge. And I'd been, into gambling, table games, sports betting, and stuff like that. Not because I wanted the rush. I had a math background, and I said, I gotta figure out there's got to be some kind of edge. And in trading, you don't need a big edge. You just need enough of an edge that you can exploit on a regular basis. And that is what is the thing that becomes a trap for most traders. It's that lack of consistency. You have rules, you'll break rules. You have rules, you'll bend rules because you'll see something on TV. You'll see a talking head saying something. You'll read something on social media. Your job as a trader is to follow your rules. That's your job. The stock's job is to go up or down depending on what your hypothesis is. So you've got a job, the stock has a job. Do your job. So I traded on my own since 2000, and 2011, 2012, I met Vince, who took me under his wing and kind of taught me this whole concept behind technical analysis. From 2000 onward, I was using a mix. I didn't really have a system in place. I was using a mix of technical analysis as well as fundamental analysis. And the ability to read financial statements certainly did help during that time. So how did we get here? Let's start with the headline here. I'm going to bring up our performance year to date. And this is what we have done for our clients. And this is all documented through our Microsoft Teams channel. Let me just move this out of the way here. Pardon me. Okay. This is all documented through our Microsoft Teams channel here. In fact, we just had an alert today. This was during our market chat, and all of this is included when you purchase this. This was posted, if we go into our conversation on SLV, I beg your pardon, at 10:20 a.m. Eastern time. We're scaling out of half of our 45.55 call debit spread for $3.15. We'll consider a roll for the remainder. And our position on this started, I believe, at 212. Let's go, we'll take a look. So our SLV position, this is the last one of our SLV positions that we have open this year. We started SLV back in June of this year. Was it even earlier? Was it 32, 30, 40? Let's go here. We started with a 32.42 call debit spread that we rolled out a few times. And remember, all of this is documented on the Teams channel. If you would like a copy of the spreadsheet, You can put a note in the questions here, and we'll get it to you, or you can send us an email to info@tradingwins.com. If you've sent an email before and we didn't respond to it, it's very possible that it may have landed in spam. So if you would like to put it here, happy to send you a copy of the sheet here, because we want to be, like I said, completely transparent. I've highlighted some of the areas where we've had more than 100% gains on individual trades. There are 1, 2, 3, 6, 7, 9 of them here throughout the course of the year. We didn't have a loss. Following this system, following the rules, we did not have a loss on this in this system until July of this year. And even this loss here, this 40.5% on this option trade, we had actually taken profits on it earlier for 36%. So this almost becomes a break-even trade. Recent activity in the market has been a little bit more volatile, and you can see we've had a little bit more chop, and I'm going to show you how we're going to work on avoiding that in the future. So SLV, we have not updated this one yet, so it's still open, but we have now taken at least a 56% profit on that SLV trade. Okay, so how did we get here? Let's go back now to the presentation. Most of you are retail traders. Most of you do not have the ability to move the markets with the amount that you're trading. So what are we trying to do here? We're trying to find a system that's going to give us just enough of an edge. And more importantly than that, we want to find a system, combine that with a proper trade structure. And in this market, and as I was saying, if you go back to my comments on what's happened over the last 5 years, it's no longer about expressing an opinion on whether you want to go long or short, buy or sell. It is more about, and with the number of products that are now available out there, it is more about looking at the probability distribution, and I'm drawing a bell curve, a probability distribution of where price can go and what is the best way to take advantage of it. Is it a leveraged ETF? They have their own perils. Is it options? Very, very complicated. Is it just buying long and short? Simple, but unlimited risk. I guess if you're long, your risk is down to 0. Short, it could be unlimited. So we want to have an opinion on something, and then find the best way to structure that trade so that we are in that probability area where the risk reward on the trade matches the probability of that trade actually succeeding. If it doesn't succeed, we want to have an exit plan. And when that exit does hit, we want that to be a pinch instead of a gut punch. And as I mentioned, when you get this in our Monday, Wednesday, Friday training sessions, we talk about this, we talk about money management. There are entire courses that we have that are all included with this here. Okay, so we want just that tiny edge. We know we're not going to move the markets with our 10, 50, 100 option contracts or 1,000 shares. We want to see what the big money is doing. We want to spot that. We want to spot that price action. We're going to show you how to do that. And we want to structure the trade so that when it goes well, we make a lot of money. When it doesn't go well, we lose a little bit of money. So high reward, low risk. We can go back, and if you go back and you review all of these things, there's a lot of survivorship bias. When you look at some of these unusual options activity companies, they will always highlight the ones that work, but I would say for every one that worked, there are probably 9 that didn't work, because you have no idea what is happening in the background. Is it a company that's trying to cover? Is it a company that's trying to hedge? Is it a company that's trying to delever? Our goal is to start with our hypothesis and maybe use some of the unusual options activity to confirm our hypothesis. But I would say for me, technical analysis is 70%, 20% is fundamental. And I'm going to put fundamental and overall market sentiment in that 20%. And then the last 10% is if there's anything unusual that's happening, or news-based events that may be upcoming. Okay, and we're going to talk about how to do all of this stuff here. This is probably going to be the simplest system that you're going to see, if not today, the whole week. You really don't need any moving averages. You just need an eye for support and resistance. You could do this. You don't need any special tools. You just need to eyeball it. And I'm going to show you how to structure everything as well. And there's a commentary that shows you all that stuff. So number one, we're going to look and scan for long and short setups. I've done a scan already. We can discuss that. Number two, we're going to assess support and resistance and then decide on a strategy. That's it. And if for you, commons is comfortable, continue trading the commons. I would say that over the last 5 years, the increase in options activity really should give you a signal that it's a field that you should at least get yourself familiar with. You will not only have more confidence in how to structure trades, so you can sleep well at night. You know that if you wake up in the morning and there's a gap down, that it's not going to impact your account to a point where you can't trade the next day. Remember, they ring the opening bell Monday to Friday, unless it's a holiday, but there's always another day to trade. Okay, now let's start with our charts, okay? So on this chart here, you're only going to see one indicator, and that is just there for reference. It does not have any function. It is just there for reference and to maybe confirm your opinion on longs and shorts. Okay, this is the NASDAQ, and I encourage you. These are not screenshots. This is live. This is live market data. If you would like me to look at a symbol, please type it in the question panel. I'd be very, very happy to do that for you. We're going to look at the major indices, some other names, but if there's something specific that you'd like me to look at, please do put that in the question panel here. Okay. So on the NASDAQ here, which we're using, and we're using the Qs to track it, you're going to see a long. You're going to see this arrow here. This is a short. And you're going to see these flags. These are exits. Okay, these S3 and R3 we're going to get to momentarily. So let's go back to our rules for a moment. Look or scan for long and short setups. Okay, that's rule number one. Rule number two is assess support and resistance. So our setup comes, I'm going to zoom in a little bit for you here. So in the background on this here, there's a set of indicators that are flashing this signal here. Okay, we're above the 20. That's a good sign. And if you recall, this is going into Liberation Day, and then the recovery post Liberation Day when tariffs were rolled back or for some time. So our entry comes on the 9th of May 2025. Is this a valid entry? And I would say it's not a valid entry just yet because of rule number two, assess support and resistance. And this is very, very simple. Again, nothing, you're not drawing any Fibonacci's or anything like that. We want to make this trading as mechanical as possible so that your emotions don't get in the way of you having a really great trade. Most traders will have a problem not with getting in, but when the heck to get out and to keep most of your profits, if not all. Okay. So the way we're going to assess support and resistance is here comes our entry. We're going to look to the left and we're going to find the most recent clearly defined pivot high in the direction of the trade. Okay, I'll say that again. We're going to look for the most recent clearly defined pivot high in the direction of the trade. So if I take my drawing tool, okay, here's a 3-bar pivot. I'm going to take that drawing tool and just go across it from the high, not from the close, from the high. In most cases, it will not make a difference, but in some cases where the bar is of a significant size, it may make a difference. Okay. Jeff and his team were kind enough to program the indicator so that when you're in a long trade, the bars are all turned colored green. And when you're in a short trade, the bars are all colored red. Now, if you just get in and you wait for the bars to change color without assessing the trade in between, and by assessing, I mean taking profits along the way, rolling your options, etc. With some long cases, with some long ideas, you're going to have really great trades. You would just stay in them for months, sometimes years. Okay. So this is, and we have programmed, this is the daily chart that I'm showing you. So that's the D down here. When you get this system, you'll also get a day trader version, which is a little bit more sensitive to the movements on a 5, 10, 15, 30, 60-minute chart. This is not as sensitive to those because we're looking for swing trades on this. So when I first started trading, one of the mentors that I had at the time, I would say to him, hey, why would I want to make $10 over 3 months when I can just make 30 cents in an hour on a stock? And he said, great, I annualized, that's amazing. You're going to do really well. However, you're going to have many more losses along the way. And why would you want to capture 30 cents on a trade when you can capture everything from 492 in this case to where we currently are, 617, and where the high was 635? That to me seems like a much better trade without a lot of sweating, and I'm not stuck to my computer screen. And that really clicked for me, that instead of trying to make 30 cents, 50 cents, $1, $2 here and there, and for those of you that day trade, hats off to you, because that's a tough gig. I've tried it. It just doesn't suit my personality. I just don't like that stress or that constant need to make decisions. And we were talking about this in the market chat earlier today. I think that's also where I am, the stage I'm at in life, where spending time with family, spending time with friends, quality time doing things that I want to do is much more important than being stuck to a computer screen. And if in the end, my return is going to be even greater than what it would be if I'm churning out day trades, why would I not do it this way? But everyone has a preference, and I understand that. And we talked about risk tolerance. We can talk about preferences as well. And if your preference is to do this on a 5-minute, 15-minute, 30-minute time frame, technical analysis is just that it's going to be more choppy. But if you're okay with that, and if you're, again, structuring the trades properly, the system will work. The system will work just as well as this here on the, it will work as well as it has for the swing trading strategy for us. So let's go back now. Is this a valid trade? We close at the lower end of the bar. Does that worry me? No. Does it make me happy? It also doesn't make me happy. So I want to see a clear break of this previous pivot high. Okay, so we have the close here, call it around 490 or so, and we don't have a break here. Here the close is 487. The next day, we actually do have a very clear break. So now there's a few things happening here. We have a breakout. We have a breakout above a previous pivot high. We have our long signal in place. Oh, incidentally, this bar here also was very fortuitous to us when we were trading the VIX. So this was the Friday, the 9th of May. And because we had already gotten the long signal on velocity, the VIX just seemed a little overpriced at the time. And these are options that we bought for 35 cents on the Friday. It was a 1 week to expiry, $20 put, 20 put. And we ended up selling it on that Monday when we had that big spike for $1.85. So this trade worked out really, really well for us. So for those of you that are interested or proponents of legging into a trade, this is one way to do it. So we've got an upside bias. You could take the trade here or take a quarter or a half position to start the trade and then get to your full position or the next leg of your position when you get confirmation. For me, the comfort level, again, going back to how conservative I am versus how conservative or aggressive you might be, for me, this here is just the right strategy. So I want to have confirmation. I don't want to have to guess which way the market is going. The question that you should be asking right now is, well, look, Rahul, you've missed all this big gain here. Agreed, I have. And I'm okay with missing that because I'm hoping to catch a much bigger gain by getting in here and making sure that I've confirmed the entry rather than getting in here and getting, pardon me, closed out for a small loss, okay? So here's my entry here. Now let's go back. The third step, what's our strategy? Is it just buying the commons? Is it just buying options? Is it something different like a leverage fund, etc.? So in this case, with a stock that is 400, I call it 500, it's 506, whatever, say $500. To tie up $50,000 for 100 shares, to me, does not seem like a good use of capital. So in this case, what I would prefer, and my preferred strategy, and I do have, but there's no one option strategy that is perfect for everybody. But my preferred strategy is looking at call debit spreads for long positions. I feel that the theta is minimized enough, I have enough upside, and if I'm getting a 1 to 4 or a 1 to 3 kind of risk reward for a call debit spread, that to me, depending on the volatility and depending on the skew, the chain, if I can get a 1 for 3, I'm very, very happy with that. And it's not really even a 1 for 3 because of the way we set up our exits is that if you get closed out, you're not going to lose that entire one unless there's a gap, and gaps can happen. We've got to be prepared for those. Options gives us the security that we need, that even a gap is not going to hurt us that badly. But if it does close below our exit level or our stop loss level, we're going to close that trade out, and out of that one, the equivalent of one that we put up, we might lose 20 cents. But when it goes in our favor like it does here, we're likely going to capture most of that 3 to the upside. So I look at it on the surface, yes, it's a 1 for 3 or a 1 for 4, but really it's more of a 1 for 5, 8, 1 for 10. And that's the kind of risk reward. Remember, we go back to talking about probability distributions. We want to look to see where we're going to get the asymmetric nature of a trade. Risk 1, make 4, risk 2, make 8, etc., etc. Okay. Now, you've got to make a decision here. You take this trade, let's say you take it here. Where do you put your stop loss? Okay. Any ideas? Does anyone Okay, I put my stop loss on ETFs at a maximum of 5%. So if this thing is trading at 500, my stop loss would be a close below 475. If I get an exit on the system before that, that supersedes my 5%. So if the exit happens within 2%, 3%, that trade is finished for me. I'm out and I'm looking for the next trade. Okay. So we've now done everything. We've taken all three, we've checked off all 3 boxes on our trade plan. We've got the signal. We've broken a previous pivot high. We've structured the trade. Actually, we haven't structured the trade yet. So $500 stock. In this case, I would consider something like 90 days to expiry, a 500, 550 call. On these indices, you may not be able to get more than a 1 for 2 or 1 for 1.5. So I may look at something different, or I may look at a deep in the money call, which allows me to have a bit of a stock replacement without putting up $50,000. So I may put up 10, I may put up 8, depending on how the strikes are and how far I'm going out in expiry. But generally, I would like to stick with a call debit spread because, again, my theta is minimized. I've got gamma, I've got enough delta. And for me, it's just the right amount of comfort. So what do we do here once we're in the trade? Remember, your job is to watch for the stop loss. The stock's job is to start going up, which it does for a bit. Now, looking back on it, if we're looking at and doing a back test of this trade, of course, we'd want to get out here for our first bit of profit, but you don't know that until this is all played out. So general rule is on ETFs, if you go up 5%, you would take your first set of profits. Okay, so in this case, we go up, it looks like about 2% or so. And a lot of this, you'll have to make the judgment call on what is a number that is comfortable for you. So on the options, when you gain 50% on an options trade, that's your first level of profit. So we go back and review our spreadsheet here. You can see most of our option trades. Now, going back and we'd have to review the notes here. Why did we do 22%? But most of the options trade, you can see 53, 60, 59, 50. I've got a 35 in there, 40, 71, 37. Recently, the market has been a little bit more choppy, and you can see these numbers here. We're starting to take profits a little bit more quickly than we were earlier in the year. When we had that turn up from post Liberation Day, the market was fast and loose, and we were happy to hang on to these positions for a little bit longer before taking profits on it. So as the market changes, and if you're in the group on the Monday, Wednesday, Friday calls, this is exactly the kind of, these are the nuances that we deal with. And today the entire discussion was, well, most of the discussion was about gold and where we are with gold. Silver doing really well, and as I mentioned, we already did take some profits on it. But when you come to those sessions, you're going to get access to traders who've been doing this, and I would say the combined knowledge of traders is probably in the multiple hundreds of years there. So that is going to dictate, or that's going to help you figure out what strategy is right for you. So for me, 50% generally, depending on the market, 50% on the options gain is the first level, then 100%. And with options, there's so many different things you can do. We can close it out, we can roll it forward. A lot of stuff that we don't have the time to discuss here, but we will discuss, and there are courses available as well for you to review. Our friend Stephen is here with us today. Stephen, always nice to see you. And there was a different Stephen as well that was asking for a look at Tesla. So why don't we take a look at Tesla? Any questions about the steps here, or about the stop loss level or the take profit levels? Okay, so if there are no questions, we'll move on to Tesla. Okay, now remember rule number 2. So if you look here, rule number 2 was we need to see a break above a previous pivot high on a long trade, pivot low on a short trade here. So let's go back to June. We get our long here, we get our short here. Is this a valid trade? It is not, because we need to break below the low here on the 6.5 bar. Okay, so this, we stay out of this trade. Here comes our next long. Do we break a previous pivot high, which is clearly defined? There. Okay, we don't even come close. So we don't take that trade. On this one here, do we take this trade? Our low on Tesla comes in there. And you're only assessing a short trade when you're in a short position. So if you break a previous pivot low, but the momentum has shifted to the bullish side, you're no longer looking for that. Now we get this long. Do we take this trade? Our previous pivot high is there. So the answer is no, we don't take that trade either. Then we get this trade here. Do we take this one? We don't. We wait for a break of the previous pivot high, which happens there. Now this one is questionable. Do we take this trade here, which closes right at it? For somebody who's a little bit more risk inclined, you would take that trade. If not, you wait for the next bar. This bar kind of closes in the middle, and we've got courses that talk about how to read these things bar by bar. Sometimes I think there may be a little bit of overthinking on this stuff. We have broken above that previous pivot high. Yes, we settled a little bit lower than where we were during the day, but regardless, we have broken that high. So this is the trade right here at 339. So from 339 on ETFs, I generally like to use 5%. On stocks, I like to use 10% as my stop loss level, unless an exit gets hit before. Unless an exit such as that one, that exit flag, gets hit before. Let me just make sure we've got no more questions. Okay. So here's our entry right here on Tesla. We come back down. We test our limits a little bit here. So if we get in at 339, our stop loss would be about $33 below. So 306, I want to say. Do we get close to 306? Remember, it has to be a close below our stop loss level, not a move, not an intraday move below that stop loss. And you can see we never actually get close. We do come back, and we come back down a little bit. So in this case, let's go back to our 3 rules here. Look for a long and short setup. We did. Assess support and resistance, kept us out of 3 or 4 bad trades, and decide on a strategy. On Tesla, the options are very richly priced, as you probably know. So on Tesla, I would certainly consider a call option, a call debit spread. But on Tesla, I may also consider a far out of the money leap because of the convexity there. And in fact, with that far out of the money leap, I may want to sell some shares short so that in the event that Tesla does retrace, that we make up for some of the loss that we have on that leap. Okay, so again, another strategy. There's not one that fits perfectly for everything. We want to look to see when earnings are. We want to look to see if there are any announcements upcoming, and we want to see what the overall market is doing. So right around now, the overall market is really starting to hum. If we look at the S&P and QQQ from May 9th onward, Tesla was actually a little behind. So we get this trade here that we take on the 11th of August, and we never really do look back. So 339, and we hit a high. I believe this is the high, 474. And it's all green bars. In fact, today is an interesting day because it's the first time that we've had a reversal in the trend since our entry back here on August 11th. So this will be interesting to watch, and you can see it did close below. It is going to close below the 20-day simple moving average. So if I'm in that trade and I'm not in Tesla, I am in the Mag 7. So Tesla is a part of that. So I may have to make an adjustment on it. But in this case, as long as the Mag 7 is doing okay, there's nothing for me to do here. So I know my job, which is to watch for stop losses. And the stock's job is to go up if I'm long and to go down if I'm short. Okay, so that's Tesla. Any other names? Because we can look at quite a few. So let's look at NVIDIA. And a lot of these things, and I hate those people that come on and and say, you know, if you had just bought NVIDIA back in 2010, you'd be a millionaire. Yes, that's very true. Or if you had bought Apple when the iPhone came out, you'd be a millionaire. Also true. But at the time, you didn't know that. At the time, you could have bought BlackBerry because they were the dominant phone provider, and you would not be a millionaire. In fact, you would be a bit of a bag holder, as I am, because I bought BlackBerry, or back when it was called Research in Motion, for a price that's more than 10 times what it is now. And it was in the retirement account. And I just held on to it because of the belief that it would come back. This is going back, I think, 2006, 2007. So it's very easy to look back and say, oh, if you had just done this, yes, of course. You don't know at the time that NVIDIA is going to be the winner, and it's not going to be Cisco. You could have bought Cisco back after, you know, in 2000, and you'd be just above water now, 25 years later. So if we look at NVIDIA, and let's do that same analysis. So let's go back. This is the beginning of the year here. Here's our first long. I'm going to zoom in a little bit. So there's our first long. And remember, rule number 2, we need to break above a previous pivot high. Okay. Do we break above that high? We do not. Okay. On the short side, here's our signal here. Do we break above a previous pivot low? And it's a little bit lower than where it is, but you get the idea. So we would break above that previous pivot low right around on this bar here, 111.44. And you can see we actually do come down a little bit and go up a little bit, never hit an exit, and we get to a low of approximately $86 here. Okay, so again, you wait for that rule, you wait for that break of the previous pivot low, and you've got a nice trade here. If you were to stay in this trade until things turn, you're likely going to get out at a break even, or maybe even at a loss. On the upside, you can, as we saw in Tesla, even if when that exit signal comes today, or when the exit signal does come, you're going to get out for a gain. So for the shorts, to the short side, the max you can make is the price of the shares, because it can go to 0. The max you can make on the upside, of course, is unlimited. Same analysis here. So we stay out of this trade here on the long side. We're in this trade. This turns into a winner. Let's do our assessment here. And on NVIDIA, my thoughts really on the breaking of a previous pivot high is I want to see a break of a previous pivot high that's the same color as the direction of the trade that I'm taking. So ideally, this would be the area that I want to trade above. Now you could say clearly defined previous pivot high is there. I wouldn't fault you. For me, it might be a little bit aggressive, and depending on what else is happening in the markets, and I want to make this as mechanical as possible, that when I see a move that's that strong and it's above a pretty good level of resistance, I would be inclined to at least open a position here and maybe put a stop loss at the bottom of that bar. And if that gets hit, I'm okay with that. And then add when I get confirmation. And that confirmation comes right around, I would say here or so, 143. So from 143, you can see we've had some ups and downs, but here's 183 to the upside. And I think we did get a high of 207. And if you notice, you've been in this trade from this area here, approximately a close of 129, call it 130, to where you are at 192 right now. So even if the stop gets hit, this is going to work out to be a really, really good trade for you. So to sum up, that's what we're trying to do. We're trying to keep, and in the ones that we've assessed today, and you can go back and you can play with this system and back test it whichever way you'd like. We're trying to keep our losses small, and the ones we've looked at today, we haven't had any losses. You are going to have losses. We're trying to find a small edge that we can exploit. We can put together a proper trade strategy, and there isn't one standard uniform one for every trade. We want to take advantage of what we think is going to happen, while keeping our losses low and our risk to reward very, very high. Okay. Now, I'm going to hand it over to Jeff. He's going to tell you about the scanning capabilities and the expert commentary. And if you would like a copy of the sheet, please send us a message, info@tradingwinds.com, or you can put it in the chat box here, and we'll send you a link to that. Jeff?
That was going to be my main question. We've had a number of requests on how to get the spreadsheet in the chat in YouTube. So I'm going to go ahead and put that in as info@tradingwinds.com and make sure I'm spelling it right.
Yeah, somebody on our recent YouTube video that you and I did together was commenting that they sent us a message but didn't get the sheet. If that happens, it could be that it may have gone into our spam. So I'll check that spam box over the next few days to make sure we've got everybody covered.
Perfect.
And Jeff, you've been following this sheet since May when we started doing it.
Absolutely.
And all documented and timestamped on the Teams channel.
And receipts. Yeah, like I said, you bring your receipts.
That's right.
All right. Very cool. Thank you so much, Rahul. Appreciate it.
Thank you, Jeff. Always a pleasure. Do you want me to stay on, or do you want me to kick myself out?
I think we got we've got all the good questions taken care of. I think we're good there.
Okay.
I do think it's important for me to note that we haven't actually audited the spreadsheet, which is an important legal distinction.
Thank you and I want to thank you for pointing that out, Jeff. As a former auditor myself, transparency and verifying information is very important. So,
but I have been looking at it every time you come in, you show it, and I've been seeing it since May. So
yes, and if the group has any questions or anyone has any questions, we would invite you to ask those questions because there's nothing really to hide here.
Perfect. All right, you should be able to see my screen. Thanks for joining us, Rahul.
My pleasure.
All right, I'm going to eject you. All right, very cool. Let's talk a little bit more about this. The velocity system, yeah, very popular system. It's been rated really, people using it like it. It's been very well received. Very, very simple, very straightforward. Rahul does such a great job with it. So as part of the system, you are going to get, of course, market scans, because you're going to be able to want to find those experts and all that kind of, you're going to want to be able to find the signals. Walter, I was just reading your phone number and it kind of threw me off a little bit. You'll be able to get daily intraday scans, long and short signal detection. It has an intraday and a real-time version as well. So like a version you can use for daily charts and a version you can use for intraday charts as well. Those are both included for free, or as part of the package. I shouldn't say for free because you do pay for the package, but they're included as part of it. You will get the commentary, the expert advisor, they'll give you the signals. I like how we put the targets and the stop losses right on the chart for you. I like those little special touches that just make it a little bit easier to read. You'll get complete definitions in terms of what the signal is telling you, what you should do with it, put to you, given to you, all in plain English. It's great. Okay. As part of this subscription, you are going to get the Trading Winds service. That includes your daily trading ideas. That includes market sessions. You're going to get the on-demand technical analysis training. You're going to get the option trade ideas. All of that stuff is going to be included. It's normally $97 a month. And I love it how they, both Vince and Rahul will throw that in because they want to make sure that you kind of have some backup. It's a brand new system for you. You're going to have questions. You can go to the live sessions. They're 3 times a week. All of our, it's funny. I was talking to Rahul and he's like, I'm surprised how many of the MetaStock customers actually show up for these live sessions. And I'm like, I'm not. It's a great way to get basically some feedback on what you're doing, some guidance on what you're doing, and ask questions. And as you know, Rahul answered every single question he got. So that's all included for free. Normally the retail cost on this would be $19.97. The Trading Winds membership would be $11.64. We did record a boot camp to help you get started as fast as possible. That's included for free. If you don't have MetaStock, of course, we'll throw in a free trial for you. We want you to try it. We'll give you a money back guarantee on this. We're going to discount the price down from $3,426 to $997. And we're going to back it with our money back guarantee. So if you try it out, you'll pay $997 today. You can get your free trial of MetaStock if you need it. You'll be able to go through all the training that's included, go to some of the live sessions. The bottom line is if you don't think it's going to be helpful for you, if it's not going to help you find those trades that you're interested in, there's a very low risk, high reward offer for you. We'll give you a money back guarantee. So to do that, you can give us a call, 800-882-3040. I'm preparing to type and talk at the same time. You can go to metastock.com/velocity for this. I'm really good at typing and talking at the same time, because not today. You can also go to metastock.com/sales chat. We're happy to talk to you. If you have any questions, if you want to kind of take a look at it, if you want to see some more charts, let us know. We love talking to you. So again, give it a go. It's a 30-day money back guarantee. $9.97 is the price that you're going to pay for it. So very, very good. Before we go on to our next speaker, I want to say thank you to AAII, the American Association of Individual Investors. They're a nonprofit. They do a really, really good job. They've been a sponsor of MetaStock for a couple of years now, and I'm sure you've probably heard of the AAII Investor Sentiment Survey. They do that. They do a lot of market research. They do a lot of training and education. They have an active investor division. They've been a nonprofit that's been very well respected since the 1970s. So check them out, AAII.com. So Walter, I do see your request for the spreadsheet. Yeah, I'm going to forward that information over to Rahul so he can send it over to you. So I do see that in the chat. I'll make sure to copy that out in just a second. All of the offers that we do that we have available that we're going to provide are available at metastock.com/conf promo. You can call us at 800-882-3040, metastock.com/sales chat. Our next guest is Melissa Armo. Melissa talks about gaps and how to identify gaps, and she does a really, really good job with it. She doesn't know it yet, but she's going to help me out right now. Melissa, how are you doing?
Testing, testing. Can you hear me?
I can hear you. Can you hear me okay?
I can.
Good. Okay. Let's see. Let me go ahead. Are you curious as to what you're going to help me with?
I have no idea, but I'm here to help.
All right. So we do raffles, we do giveaways. And so in order to get a giveaway, all you have to do is register for the conference. So all of the people that are there in the YouTube, everybody, if you're watching us and GoToWebinar, you've already registered, you're qualified to win. If you're watching us on YouTube, click on the link up at the top of the chat. It's pinned to the top, and it will allow you to register, and then you can be eligible to win the prizes. We have a bit of an interesting prize this time, Melissa. Okay. We are going to give away. Do you know Steve Bigelow by any chance?
No, I don't.
He's the late Steve Bigelow. But he was a good friend of ours. He did a lot of work in candlestick analysis and pattern analysis. Very, very funny guy. Great technician. We loved him. But we're going to give away he wrote 2 books on Christmas. One of them is Who is Santa? By Steve Bigelow. The other one is a very, very detailed history of the North Pole.
Wow.
In the spirit of.
I did not expect. I thought they were going to be trading books.
Yeah. We've given away a couple of his trading books, but I've got a couple of these too. And actually, I wouldn't give away my own copies, but I thought it'd be fun to give away a couple copies of those. So that's what we're going to do.
Wonderful. You want me to pick a lucky number?
Yeah, let me give you so it has to be at least 2 because there's a header row in my spreadsheet, but it can be between 2 and 6,011.
2 and 6,011?
Yeah. Mm-hmm.
How many numbers am I picking?
Just one.
705.
Okay, and that is Eileen B with a Yahoo address in the USA.
Eileen B. Congratulations.
Yeah. Kelly doesn't like it when I give away last names on the internet. He feels like I'm doxing people. So, so congratulations, Eileen. If you're in the room or if you're watching us live, chime in, because we love it when people are here that win live, or that are attending, that are actually watching live and win a prize. So congratulations. These are actually really good books. I've read both of them. So
Well, it's a good time of year. It's the holidays.
yeah, it's a perfect time. I'll make sure to get them off to you next week too. Walter in the chat says, Melissa Armo is my girl. You've made my day. He's very excited to hear you talk.
Oh, that's nice.
So I think I did a pretty good job of introducing you. How many of these have you done with us now? It's been quite a number now.
I don't know. I've lost track, Jeff. I can't even believe it's almost 2026.
Right.
In fact, Thanksgiving is in 2 weeks from tomorrow. 2 weeks from tomorrow is Thanksgiving. Can you believe it?
I can believe. Yeah. I can't wait. Actually, I can see your screen. I'm going to get out of the way. It's your turn.
Thank you. Thanks so much for having me, Jeff. Yes, I've been discussing charts and gaps for quite a number of years with Jeff, and again, he always does a nice introduction. Today we're going to talk specifically about what I do, which is I trade gaps for a living. I do day trades and I do options. And if you have any questions, you can plop it in the chat. I think I can see everybody's chat. And again, we're going to get started here right now. So if you have questions, you can email me at melissa@thestockswoosh.com. You can follow me on X, Facebook, YouTube, or Pinterest. Again, it's been a very interesting year, very interesting last, I'd say, 4, 5, 6 weeks in the market, a lot of things going on. But if you're somebody that has the market bug, you've been trading for a long time, you haven't really quite gotten to where you want to go with it, but you keep, trading, coming back to it, trading, coming back to it. Maybe you're not doing it as your full-time career yet, like me. But I always say when people have the market bug, they're bit. That's it. They've got it. You've got to figure out a way to make it happen for yourself so you can become successful if you're not there yet. Don't think that quitting is going to stop the market bug if you've been bit. Because trust me when I say, I've been teaching people, I've been trading for a long time now. I have people that come to me, they're interested, then they leave, they come back. They want to do it. Just, I'd say jump into it. If you really know that you want to do this, then be committed to it. Because the sooner you're committed to doing it, guess what? The sooner you're going to be successful. So don't give up. I always tell people don't give up if this is your dream. Because if the market bug has you, then you really want to trade, you really want to make money trading, and you have to find a way to become successful, okay? And the fact is that you can make money trading the US stock market. You could live anywhere in the world. You don't have to be in the United States. I happen to live in New York. I live in Manhattan, but you can live anywhere. So the market hours are between 9:30 and 4, and I focus specifically on the morning. So we're trading usually between 9:30 and 10, maybe 10:15, 10:30. So if you've got that first half an hour, first hour of the day available, you'd be able to trade my system. But like I said, the question is, how can you become successful? How can you make money? Because a lot of people are out there attempting to trade and they don't know where to go, what to do. Now, we had a very bullish spring and summer in the market. So if you went long from pretty much the tariff reprieve at the beginning of April up until I'd say about July, August or so, you could have gone long a lot of stocks. You could have bought dips. You could have bought a lot of things and you could have made money without even knowing what to do. But those types of environments don't last long. We're already out of that environment right now, immediately, even in the last few days. And I think it's becoming increasingly difficult for people that did a certain thing for months and months and months because of the market was so bullish to now trade. They're buying stocks, it's not working, they're not following through, or they're doing calls and options. And so what I developed when I first started trading in 2008 was a strategy that I actually focused on shorting. I will go long, but I do focus on shorting, and it's something where I can do it in any market environment. So like, let's just say the market would sell off. Say we have a sell off between now and the end of the year. I can make money shorting. What if the market goes up, makes brand new all-time highs again, which it did a couple weeks ago? I can make money shorting. So again, I have a system that I developed and use that I can trade in any market, bullish or bearish. It is true though that it is extremely difficult to short or to go long in a bearish market. And so again, it's different if the market's strong, okay, to go long. But again, if the market falls, okay, and you've got the market against you, very difficult to go long or have any follow through, okay? So it's your best bet to be successful to do this long term is to find a strategy and a focus and a system that works on any market conditions. okay? Whether the market's with you, whether it's against you or not, okay? And so I developed a system specifically focusing on shorts because short moves, selling moves, moves to the downside happen faster and bigger than moves to the upside. Again, longs take longer. So I typically like to focus on shorts just because I want to do the fast day trades. And again, I'm doing puts, okay, which is an option too. But either way, I'm using the exact same system when I trade, whether I'm doing options or day trades. Now, here was a nice trade that we did recently. This was Oracle. I'm going to show you the chart here in a minute. This was a put. So we bought the 265 puts. Again, this was a trade that we did that expired last week. Did it on the day before Halloween. Cost was $7, sold at 24, was a really nice trade. Profit was 243% return on investment. This is an advanced trader risk. You could do one contract. You don't have to do as much size as me. You could do more. You could do one, you could do two, okay? But here was the chart. Again, I called this trade on the 30th. So stock closed here, gap down, and again, we did the 265 puts. See where it dropped, boom, boom. In fact, you could have even held this longer than I held it. I typically do not always hold a trade into the very, very last day, but I just want to show you, here was the Oracle, okay? And it went down. Again, when you're doing a put is a short, and it fell $25 through the strike in the time that I called it, in the week that I called it. And again, I called this at 9:44 in the morning, so it was in the morning, okay? Sometimes I call trades in the before the open, but this was one that I called, again, right after the open. So you would have bought the put. Actually, you could have bought the put and got out the day I called it. But you could have bought the put, waited for the drop, boom. Got in, got out. So I'm trading momentum. In this case here, again, Oracle, the momentum's what? To the downside. It's selling momentum. So again, to be able to make that kind of money, and again, you could have risked money and made over 200% in one contract or 5 contracts or half the size that I did. But the idea is that trading is fun when you make money and when you're feeling confident in a specific strategy, when you're feeling confident in your trades. Again, it's easy for people to say, well, I'm up, I'm green. When the trade wiggles and jiggles or it goes against you before it goes green, that's when people tend to lose their confidence. They make mistakes, they kill the trade, they take a loss, and the trade goes on to work, and so on and so forth. You have to be able to take a trade, feel confident it's going to work, put the risk on, whether it's small, big, or medium, and then let the trade play out to its natural conclusion. Okay, you set your risk, you decide how much you're risking per trade. But feeling confident in a strategy makes a huge difference in your ability to be able to make money. And I found a lot of people really lack confidence in their trading. They lack confidence in their abilities, or they don't even have a strategy at all, okay, which is also problematic. So unlock the keys to your success with one strategy. And for me, like I said, I'm trading gaps. So again, what is a gap? A gap is actually the difference between the close and the open. So almost everything gaps every single day. But you totally can unlock the keys to your own personal profit potential in the market just by trading. Again, whether you do options or day trades or both. You need a margin account to do day trades where we're shorting the stock on shares, which I will go over some of those trades here in a minute. But again, if you're someone that is interested in what I'm saying, if anything today makes sense, you can learn how to trade gaps. Gaps have big moves. You can get 100%, 200%, 300% moves trading gaps. And as far as I'm concerned, again, as long as I've been trading, it's almost 18 years now, gap trading is where the real money comes from. The real money, the moves, the momentum in the market. And again, you get gaps in the overall market, and the QQQs are the SPY. And again, you have bullish gaps and bearish gaps, which we'll talk about both. But trading gaps makes it possible to trade for a living because you get the big moves. Because everybody has some trades that don't work. So sometimes I take trades that lose, but I have more winners than losers. But because I have some big winners and more winners than losers, they cover the losers. And that's how you're able to move ahead and actually make a career of this if in fact you want to do it. Now let's just talk about the basics here about what is a gap. So this is the market, it's QQQs. So a gap is the difference between the close and the open. So at 4 o'clock, the market closes, and then at 9:30, the market opens. So we had a gap in the market from November 3rd to November 4th, the gap down, okay? So again, we closed at one price and we opened at a lower price. This was Monday to Tuesday. Again, this was a week ago. Now you also have bullish gaps. I'm going to go back here. This was Friday to Monday where you had a close and then it opened that was higher than the close. Okay, so this is a bullish gap. Again, this was last Friday, Monday, then we gapped up, rally. Okay, so this is a gap down. This is a gap up. Okay, so I played both, but like I was telling you, I prefer to short. But again, the principal point I'm trying to make is that one quality strategy is really all you need. One quality strategy is all you need to pay yourself on a regular basis. Doing all over the place, being a jack of all trades, it's not going to get you where you want to be to make the real money to do this. Knowing one good strategy you can replicate over and over for profits can actually change your whole trading world. Having one powerful strategy that pays you will open up your eyes to the true profit potential for the market, and the market can offer you a real lifelong career if you have a strategy that makes money consistently. Professional gaps are a high income paying strategy. And again, it's the idea of getting the big move, you know, like I was just showing you with the Oracle where something drops 25 points, even in a week, even for a stock like Oracle, that is a very big move. Okay, so let's talk more about gaps. What is a professional gap? A professional gap is a gap that moves in the direction of the gap. Okay, so when I'm looking for a gap down, I'm looking to short. When I'm looking for a gap up, I'm looking to go long. Now, can you go long every gap up? No. Can you short every gap down? No. So I developed a rating system to qualify the gap to determine if in fact it is going to follow through. If it doesn't, per my rating system, I don't do it at all. In other words, I don't flip it. Okay. But I'm trying to find ones that will go. And again, the market did, and so did Oracle. Anyways, it's called a professional gap because professional traders and investors are making and creating the gap. And again, I'm only trading stocks that have volume. I'm not trading penny stocks or low float stocks. In the case of a bullish gap, professionals are buying the stock. Therefore, the stock moves higher in the trading day. Okay. In the case of a bearish gap, professionals are shorting the stock. Therefore, the stock moves lower in the day. And again, I prefer to short just because stocks fall so much quicker than they rally. But I name my gap rating system the golden gap because finding gaps at rate per my system is like finding gold in the market. So I developed a 26-point rating system. I'm not looking for a perfect score. I'm looking for 20 points or more. Okay. If I get 20 points or more, I feel a high level of confidence that the stock will go and fall and drop like Oracle, and therefore I take a trade in it. Again, whether I do a day trade or a put, it's up to you, or if you follow me, you do what I do, but that's what I'm looking for. So golden gaps are professional gaps. They are the gaps that have a high odds of working on the day in the correct direction of the gap with a large momentum move. And that's, again, where you're making money, whether you're doing a small size or a big size, okay? Any questions here so far? Everybody doing okay? So the whole point is to take a trade that you feel is going to work. You don't take trades with a 50-50 crapshoot. That's just like a waste of money, okay? So the golden gap is about high probability. Anything you can put the odds in your favor to trade will give you an edge. And the 26-point golden gap rating system gives you an edge. It reads the price of the gap and using technical analysis on an advanced level, pinpoints which stock to trade that day and in what direction. The high probability is the quality and detail in the rating system. Now, I always get this question, how long does it take to figure it out? 26 points is a lot. Yes, that's true. But that's where I'm getting the idea where it's putting the odds in my favor. It takes me about 5 to 10 minutes to rate one gap, and it could be less than 5 minutes if you're experienced and you've been doing this for a long time like me. So let's look at another one here. We did this Oracle, it was the 270s. So in 1021, again, expiration 1031, we shorted it, again, bought the put, cost $7, sold it at 13, 86% return on investment. Let's take a look at the chart, 1021. Oh shoot, we don't have 1021 here. I don't know why we don't have 1021, but 1021, the stock was way up here. I don't know what happened here. We don't have 1021, but 1021 Oracle, well, you can see where it did drop in here on the 30th. But on 1021, if you want to pull up your own chart, you can see there was a gap on 1021 in the Oracle. And again, when I'm doing something, I'm always shorting a gap down or going long a bullish gap. So I don't have 1021 for some reason on this chart, but if you want to pull up your own chart, you can see that Oracle had a gap down on this particular day, okay? So again, it's the idea of getting the move, which this had, and the follow through. So again, you see where this went. It went more than $10 through the strike because we were in the 270s, and that dropped and broke 260 on October 30th, okay? So who makes gaps? Large institutional money, big traders, professional traders. Again, hedge funds. They take positions in stocks. They buy and they sell. Gaps are created with large institutional money, and that's what makes a gap in the first place. The professional gaps that happen and play out in stocks are formed by one thing and one thing only, large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap, and then confirm that the large money will flow with it. By having a formula to rate and qualify the gap, you will get confirmation and conviction that the large institutional money is on your side, and then you play it. Gaps are an event, and they create a sense of urgency, like hurry, 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 buy this or sell it, you know, whatever's going on in the stock. Could be news, could be earnings, could be lots of reasons why something could be moving up or down. But it's the idea that an action is being forced by participants of the stock, and this is why gap trading is incredibly powerful. Trading gaps is a powerful and profitable way to trade because you're trading on the side of power money. And again, that's where you're going to get the move to be able to take the trade and profit. So here was another one we did. This was another put. It was TXN. This was pretty cheap. Cost was $1.50, sold at $2.70. Profit was 83% return investment. We did this 1022 and got out 1031. I don't have 1022 in this either. Sorry about that. Anyways, here was the drop in the TXN. You see here now we did this, got the drop through here, came down in here, broke 158. And again, we did the 160s. So you see here how this came down through the strike. Again, it was another short. Here you can really see the day this sold off here on the 29th. Actually could have entered a new trade here on the 29th. I'm just seeing that. You could have actually done a new trade here at a higher strike, actually, if you wanted to take it down here. Someone's asking a question. How did I arrive at 1997? I don't know what you mean by 1997. Was that question for me? I didn't understand that. How did I arrive at 1997 retail cost? Are you talking to me, Roy? What 1997 are you talking about? You lost me. Roy, was that question for me? Because I don't know what chart you're talking about or what you're talking about. Roy, if you can write that explanation. Okay, here we go. The next thing, yeah, we'll just pull up your chart and you can look at any of these ones. I'm just showing here the last 2 weeks. We got the last 2 weeks on these charts, but if you find the date that I'm showing here that I called the trade, you'll see there was a gap. You'll see there was a gap there. And again, you can see here on these how these fell into the end of October and went in the money. They were in the money. Do you know what I mean? So again, when you're taking an option, you have a fixed time frame. You've got to get the momentum, okay? And it has to go within the time of before it expires, preferably, you know, sooner than later. Okay. Okay. All right. Any other questions? Let me know. Getting back to my point was, though, you learn how to do it and then you do it. And, you know, I just had a class, last month's class. The person's already in trading. They, you know, have a lot of questions. One of the guys that was in the class, another girl that was in the class has never traded before. Another person, 50-50, has traded a little bit, but really not familiar with options. So everybody has a different story. Every time I'm teaching people, I have a different group. Some people are experienced, some people are not experienced. You can follow me even if you are not experienced. I don't think I'm hard to follow because I'm usually doing one trade a day. And we're always really doing, usually, mostly to the short side. So again, even people that have been trading with me for a long time, or they've been trading a long time, they come to do the class, they don't know what I know about gaps. So again, maybe have a shorter learning curve than somebody that's brand new, but I do my best to explain things to people so they understand it. Everybody's got a different story. Everyone has a different experience with trading. I've taught people, like I said, that are brand new that never traded before. I've taught people that have and haven't had success. I've taught people that are trading, making money, but they don't have a good system or not as good as mine. So everybody has a different place where they're coming from. And, you know, it's not like anybody's just born and then all of a sudden they start making money trading. No one does that, okay? And when I started trading, I ended up teaching myself the system that I created, which took me 3 years. So it's a lot easier for you to come and learn it from me than to develop your own system, which can take years and years and a long time and a lot of money, and there's no guarantees you're ever going to figure anything out. So by following me in the live room and taking the trades, it shortens the learning curve for you where you can see it more and you can make money as you're going, as you're learning. But the learning part of it is really important, because if you understand what to do, you will trade better, you will make more money, you will be less stressed, okay? Any other questions? The chat isn't working properly. There's not a place to type in your message. I don't know, Jeff, if you saw that.
Yeah, I'm typing that with GoToWebinar. I actually was typing an answer, but with GoToWebinar, when groups are this size, they don't allow for open chat. It all goes through questions. So if you have a question, or if you want to make a comment, do it in the questions box for GoToWebinar. Okay, thank you. Anyways, getting back to what I was saying, don't make it harder than it is. Because if you make it harder than it is to trade, it inevitably will be hard for you. It'll be hard, it'll be frustrating. First of all, there's no getting away from the fact that you're risking money. You can't make money unless you're willing to take risks, period, end of story. But you want to be as less stressed as possible. So you're like, okay, well, how can I be less stressed, Melissa? Have a system, have a pick every day, have a specific thing that you're looking for when you're trading, and focus on that one system and don't do anything else. Again, I only trade and focus in the morning. I'm not trading all day long. So right there, I've locked it down to a certain time frame I'm looking for. I'm also looking for certain criteria. And if I don't get that criteria, guess what? I don't do any trades that day. I will tell you that we didn't do any trades today. There was no gaps today that met my criteria. I thought the market gap up would fail. It did. We fell in the morning. I don't know where we are right now, but we didn't do any trades today. Again, I didn't even rate anything today. That's how bad the picks were today. Now, there are earnings tonight. There are earnings tomorrow morning. We are going to get something tomorrow because there's too many things out tonight, tomorrow morning, and some will affect the market. But today we didn't do anything. So again, don't make it harder than it is. You're not going to get away from the difficulty of taking risk, but make it fun to take the risk, because you're like, okay, well, if I risk this $1,000, I can make $5,000. Well, that makes sense, but it doesn't make sense in every single stock that's out there, every single day, all the time, or even every gap. You have to have a specific reason why you're taking the trade and why you want to do it. That makes sense. So anyways, trading as a career really is a fun job though, once you get it down pat, because you can make thousands of dollars in less than an hour. That's a great job. And there's no other job that you can really do that in. So you need to see results. You want to see what counts. And I was talking about that, and specifically because, again, if you're following me in the room, you can mimic my trades. Whether you want to take a small size or a big size, or how much size you're going to take, is up to you, and should depend on the size of your cash in your account. But again, I'm using golden gaps for day trades and for options trades. And the idea is to see real income, real money when you're doing the trades. Now, this was a big trade. This was Friday. Now, you're saying, well, this was the market. Yes, this was a day trade. You could have done a put. We were already in puts, but I want to show you this is Friday's trade. So market close here, gap down. This was the 6th and the 7th, and we fell off a cliff. Target was 600, actually broke 600. It was a beautiful, beautiful short. This was, again, less than a week ago. If you think about it, today's only Wednesday. It's 4 days ago. Shorted the market at 607.05, exited the market at 599.25. I think we went down to 598 and change. It was ridiculous.
So you could have made $21,840 in this trade. This is a margin trade. Now, again, if you don't have a margin account, you could have bought a put. Could have bought a put that expired actually the 7th. They have daily expirations of the market. We were already in puts. We were in puts actually going into Friday. But a put is cheaper than a margin trade. I do both, okay? But it depends. If you don't have an account to do margin trades, you can do puts. And you could have done a daily expiration put as a day trade on that queue. Again, that's not what I did, for the day trade here, but I'm showing you what I did. But if you have a margin account, you could have done this trade. You could have taken less size, okay? But this is a day trade, okay? So getting back to what I was saying, making money fast is fun. It's definitely what I think is extremely important in reference to the short side. Fast is good. You take the trade, get the move, get out. Take the trade, get the move, get out. And again, I'm focusing on the morning. But again, to give you some perspective on the money you can make in the market, it was a great example. And I could give you 1,000 examples. I could be here and talk for the next 12 hours and give you a million other examples of things we did this week, last week, and in the last month. It's the idea, though, that we're doing the replication where we're getting up every morning and I'm processing through, going through, making a watch list, rating the gaps, determining if there is any that rate for my system or if there isn't, and then if I'm going to do any trades in anything or how many I'm going to do. Okay, but it's just like, so many people are all over the place and they want to do this and they want to be successful, but they're really not throwing themselves into it enough. If you don't take trading seriously enough, you're not going to be successful. If you do take it serious and you really want to be successful, it's very empowering. Stop giving your power away to the market, feeling like someone's stealing your money, or people say, oh, the market's rigged or it's rigged against me. No, a lot of times people are taking trades they have no business taking. And there's no strategy behind them whatsoever at all, or they don't understand and they're following people blindly. No one in the room is following me blindly. Everyone in my trading room has taken my class. It's a prerequisite to actually be in the room and take my trades, because I want everyone to understand what they're doing when they're risking their money, okay? Because I'm not taking the trade for you. You're taking the trade. So like I said, I developed a system. It's called the Golden Gap 26-point rating system. It looks at a 26-point checklist to trade. And the purpose of this is to find a stock that has a high odds of working on the day. So I'm looking at, number one, a high probability of directional bias for the entire day, hopefully, okay? Oracle is a good example of that. And number two, big move on the day, really want a big move. That's how, it doesn't matter if you have a small size or a big size. 3, early confirmation of my bias in the move between 9:30 and 10. Again, got to get that morning period. And precise entries with follow through and a good risk to reward. So again, I'm trading on the 1 minute. So I'm trading on the 1 minute, I'm entering the 1 minute, I'm exiting the 1 minute, but I'm looking at the point system on the daily. When I'm trading options, same thing. I might be getting an option trade very early, but I'm holding my options longer. So I'm not getting an options trade and getting out in 5, 6, 7, 10 minutes. I'm getting an options trade, I'm holding it throughout the whole day or maybe for a couple of days. Again, I'm getting momentum. It's the same thing with momentum, but holding options overnight sometimes can be extremely profitable because you can get a bigger move. I don't use anything. Someone's asking how important is scamming your decision to make a position. I'm not using anything other than my 26-point rating system to take the position. If the gap rate's 20 points or more, I'm taking it in the direction of the gap. How you decide to take that trade, if you're doing a day trade or an option, again, is up to you. But I'm looking at it and saying this is going to have momentum. So again, sometimes I'll take a trade on a Monday that expires on a Friday. It may not go till Thursday or the last day. That's obviously I want it to go as soon as possible, but I'm not looking at anything other than the gap, okay? So again, how do you make money trading options? You got to have momentum. Again, whether it goes the same day or the last day, you've got to have the momentum, or it just doesn't make sense even to do the position. Again, people like options because you can open up an options account, a cash account with as little as $2,000. You don't need the $25,000 minimum as margin. But the real benefit of doing options is not the fact that it's cheaper. The benefit of doing options is you can get much, much larger moves with a fixed risk. It's like the insurance, because again, you are only risking $500 or $1,000 or whatever. And if the trade goes against you overnight, that's all you lose. So it's a fixed risk, but you have the benefit of getting a bigger move that could carry through for overnight several days. You follow me? That's really the benefit, quite frankly. That's a good question. Any other questions? Anyways, let's get back to the philosophy behind the golden gap system is to analyze a large time frame to make the trend decision on the directional bias for the gap. All large traders of every kind look at large time frames to make decisions, particularly institutional traders, okay? And to make entry decisions and exit decisions based on a small time frame with a 1-minute chart, which has a high degree of focus and accuracy. Again, I teach that in the class. And then using the daily chart to make the decision for the stock pick allows for accuracy in the direction. And then using the 1-minute chart allows for good risk reward trades with accuracy, which obviously I am trying to do. But I'm looking for, could be 1 to 2 to 3 payout. If you hold to a target, or maybe even a larger target, you could get, 400, 500% return on investment trades. So we've had some really big trades recently. Again, we've been shorting, the markets fell, and we got that sell-off that happened last week, and we were in it early. And Oracle was another one, and BA was another one we did. These are some of the big trades that we've had, which have had some huge risk reward potential that we've done in the last several days. Again, if you're somebody that doesn't understand how to short, you will learn how to short, and to get comfortable with shorting in my class can be very profitable. You're going long a day like Thursday last week or Friday last week, you are struggling, you are losing, you are not making money, okay? Any other questions here? I apologize for the noise. I have a cleaning person here right now. If you hear any noise in the background, hopefully you can't hear that. Let's talk about anyways, get back to what I was saying. The golden gap strategy uses a rating system, okay, which pinpoints opportunity for you to enter before the big move happens. So again, I'm getting in pretty early. We get a short, I'm pretty much in it usually at the high of the day. I mean, again, that's aggressive. You could say, well, I figured it out. I went with the system. It rated 20 points or more. You take it. You put the risk on. You got to do it. Again, if you're trying to make a set amount of money, $500 a day, $1,000 a day, whatever is that you're trying to make to achieve your own results, you got to risk that amount minimum. So again, risk the amount you want to take and try to turn it over once. And I think that's normal. And again, I'm not scalping. Okay, so I'm not taking like 10,000 shares to like make $1,000. No, that's what I call a scalp. If I'm risking 1,000, I'm trying to make 1,000. Okay, and that's totally reasonable. But once you know how to make money in the market, trust me, you can set your own course. You could take days off if you want to. You could do options. You could do day trades. You could even use my system for swing trades, which I'm not doing right now. It helps you with long-term investments, especially if you have someone that's looking at your retirement account. You can use gaps to determine long-term positions too. You could do it for yourself. And again, whether you do this on the side with a full-time job or you want to do this full-time, it's up to you. It's a very profitable way to make money where you are working for yourself. If you are someone, like I said, that wants to trade and you are very entrepreneurial and you want to work for yourself, it's a great way to do it. The only caveat is this isn't like, oh, you start a job tomorrow and you get paid immediately. No, you got to get good. You got to get good. And that's the whole point of learning it and understanding it and getting good so that, a month from now, 3 months from now, 6 months from now, come January 2026, you're where you want to be, where you're making the money you want to be. And if you have a small account, you're going to have to build it up. There's just no way of getting around that. If you start with a small account with $5,000, you're trading options, you got to look to build it to 7, then to 10, then 10 to 12, 12 to 15. And I say chunk it out because that is how you have to look at it. You can't be a pig in every trade, especially if you have a small account, but I won't be a pig if you have a big account either. Any questions here? Okay. Anyways, getting back to what I was saying, if you are a certain age in your life where you are not doing as well as you feel you should be financially, there's a lot of people that feel like that. I'd say since COVID, really. Inflation, cost of everything has gone up. If you feel like you're not where you really want to be, maybe you're close to retirement, maybe you're in retirement, maybe you're young and you can't afford to buy a house yet, or you feel in debt. Again, a lot of people are feeling like this with high inflation since COVID for the last 5 years, all right? Prices may never go back to where they were in 2019 before COVID. I mean, they were saying inflation went down. Yeah, I guess a little, but I mean, I don't think we ever see 2019, 2018 prices again. So, I mean, depends how you look at it. You have to make more money. Again, interest rates came down slightly this year. I wouldn't be shocked if they don't drop them in December. They may not. They might, but again, interest rates are still high. Even if they drop them a quarter a point, interest rates are still high compared to where they were. No, I did not do the CRWV gap. I did not like that gap. I trade gaps for earnings for lots and lots of reasons. I trade earnings gaps, I trade news gaps, I trade gaps with the market, I trade sector gaps. So there could be lots of reasons for gaps. What else? What's today, the 12th? Yesterday was the 11th. I didn't like that gap. I don't know what it did. I looked at it. I didn't like it. I don't know if it worked. We did NVDA yesterday. The trade worked. It was a nice short. That's what we did yesterday. What else? You buy puts. What if you have a large position in a stock? You buy puts. What if you have a large position in stock and you want to sell calls to obtain income, avoid having the shares called away or system work as scenario? If you have, someone's asking specifically if that's more a broker question, I would set up 2 separate accounts is what I would do. So you can set it. In fact, sometimes people have 2 separate accounts for options and day trades on margin. So they have an options account that's set up as a cash account, not a margin account. They do options in that account. Then they might have a prop account, could be someplace else, or they might have a margin account, a different account at the same broker as a margin account. So in that case where you have long-term investments, again, I would speak to your broker about that, what would be involved. I would open up a second account, and you could stay at the same broker, you go to a different broker. What else? There's something else I was going to say. Anyways, oh, we were talking about age and places in life. I've been teaching people for a long time. Okay, so I've taught people older than me, younger than me, whatever. I'm telling you, it doesn't matter what age you are. You're never too old to learn something new. Never. So again, in fact, if you're over the age of 65, you should be keeping your mind more activated. I don't care if you're retired or you're working still. You should be using your brain as much as possible to stay sharp. So again, I think that's important for young people too. But again, it doesn't matter your age. You can always, always, always learn something new. You can always, always learn something new and get to a point where you could change your circumstances. You are not in a set place where you can't change your circumstances unless you're dead. When you're dead, you're dead. Other than that, if you're alive and you're here and you're on this planet, I don't care what your financial position is right now. I don't care at all. You can change it. You can improve it. You can make changes in your life. A lot of times people feel so stuck and they do the same thing over and over and over and over and over again. People are doing this right now. People are doing this right now, even with the chop in the market in the last few weeks. And people don't want to get out of the rut that they're in. They don't want to change what they're doing. But you must, okay? If you are losing, you're going to keep losing unless you change what you're doing. Period. End of story. That's it. So again, there's no point in complaining. I get sometimes people are frustrated. They may have taken other classes and lost money, and now they feel down on taking classes. They may have traded the market and lost money, and they feel down about trading. Again, if you're bitten by the market bug, you're probably not going to give up trading. So that's just get to reality with that. And if it's really something you want to do, I'm telling you could do it. I'm telling you could do it. I've taught people. I've had people with me for a long time now, more than 10 years, that are still with me in the room. And just because you've taken and spent money on some class doesn't mean that every class stinks. That's not true. It's absolutely not true. And you know that if you think about it. The reality is that you've got to do something to improve your situation. If you want to improve your situation, there's no way around it. Doing the same thing is not going to fix it. Okay. And the sooner you get to the point where you can grasp that reality, the faster you're going to move forward. Okay. So we're just talking about all of these things, but Another thing is, it's a separate topic related, is job security. Today's world is not the same as 25 years ago, 10 years ago, even 5 years ago. It's one of the reasons why I'm on the fence here about what the Fed's going to do with the rate cuts in December. I don't know. It's going to depend a lot on the unemployment numbers. And of course, we're still in the shutdown. We're still in the government shutdown. That's probably going to affect things too, once the numbers hit. But what we think is a secure job today may be gone tomorrow. Then what are you going to do? Look at the world economy and the decisions that lawmakers are making for you. And it seems out of your control. I mean, you can go vote, but right now, look at what's happening. Do you want to create your own future, or do you want someone else to determine it? And this is where it comes where you have to be more independent minded. Then you can rely on yourself. There's just no downside in learning how to trade, even if you love your job now. Because we can be great employees, productive, outgoing, hardworking, and it may not even matter to our boss in the end if our company can't keep you on. If a company has poor management, they might fail, and it has nothing to do with you, or your industry might fail, it has nothing to do with you. Again, I did mortgages, and then there was the bank collapse. I kept working through it. I didn't lose my job, but it was tough to get loans approved. Definitely didn't make as much money. And things really never went right with that, even after the bailout. Just, banks became very skittish about actually lending. And again, I'm talking like, a long time ago. But right now, like, people are not working because of the shutdown. And what are people doing? Again, you could be a skilled person with a great mind. You could work for yourself in the market, but you got to learn how to do it. So it's worth the effort and energy and time and money is what I'm saying, because it's always a fallback. Even if you like what you do, you can create your own job security. You can create your own opportunity by taking it upon yourself to learn how to trade the market and make money. Okay. And so that is the benefit, the real benefit also of doing this. So getting back to what I was saying, the more often you make money on a consistent basis, the more confidence you will build in yourself and the more conviction you will have in your own ability to trade well. One of the most valuable things that you learn during the Golden Gap course is to have conviction in the Golden Gap strategy, which helps you trade. Again, no matter how much money you're putting out at risk, this conviction will help you produce positive results. Staying positive might be a challenge for some traders, but it is a requirement for success. And this is a requirement for success for anyone who wants to earn money in the market in any amount. Again, even if it's $100 a day, you got to have the right attitude. You've got to have the attitude that you can do it and that you will figure it out. And that, again, you come take my class, that you're going to learn from me and it's going to work and it's going to be worth it. If you want to make it big, that's fine, but you have to look at how much cash you have to risk. You can't go hog wild if you have a small account. Again, that's another discussion for another day, but you can certainly build it. You can certainly build it up, okay? So I teach a class once a month. The Golden Gap course teaches a 26-point professional bearish gap rating system. The purpose of this system is to help you evaluate which gap to trade each morning using a checklist. The course teaches a strategy on how to trade gaps. The course teaches a 26-point rating system to find the best stock to trade every day. That's what I'm looking for. And the course also teaches students how to play the stock of the day. The course teaches students chart analysis and technical analysis on an advanced level. Now, we did here, what did we do here? The market on, what day was this? The 27th. Here was a day trade. We do have this day in here. This is the 27th. So again, actually, this was a long. We went long on this day. We bought it. We bought the market. Again, you could have done a call, 625.40, exit at 627.35. Here's an example of a long. So again, I don't have the previous day before the 27th, but this was a gap up in the market. We gapped up, we rallied, we got in, got out. So this was 10:27, but I don't have the 26th the day before, but the market had a bullish gap on this day prior to the day before. Then on the 28th, we went long here. Here we are. Here's 27th. Here was NVDA, gapped up, rally. We went long here, got in, got out. Entry was 193.60. Exit was 195.10. Got out, made 37.50. Again, this was a day trade. You could have bought a call if you didn't want to do the day trade. And then we also did the NVDA here, which actually, even though it closed red, we actually made money going long before it dropped. This closed here, gapped up. We got the rally. We got out. 210 was my target. It hit it. Actually went through it before it fell. Got in at 207.90, exited 210.20. Again, you could have done a call here if you didn't want to do the day trade, but we got in, got out, done, and then we fell here into the close on that day, the 29th. And then the next day here was the 30th. and then we gap down, and we've been wiggly jiggly ever since. Let me see if somebody has another question. Someone's asking where you find gaps. You can find gaps. There's thousands and thousands of gaps. To be honest with you, a million places, or almost everything gaps. So it'd be really rare, actually, for something not to gap. Like, again, it's something could close at 2202 and open tomorrow at 2202. That would be a neutral gap or not really a gap at all, but that's rare. So finding gaps is not hard. There's a bazillion. Almost everything gaps. The market, everything. Again, could gap up, could gap down, but it doesn't mean it's a good gap. And what do I mean by a good gap, or what I coined the term a golden gap? It doesn't mean it's predictable, that it's gonna go in the direction of the gap or have a big move that you could predict. That's the whole point. It's predicting it, because most stocks in any given day, to be honest with you, actually trade with the market. That's what the market's made up of, those stocks. So whatever the market's doing right now, if you scanned 1,000 things, most things are probably going with the market. And the market's hard to predict every day. So again, I don't get it right all the time. Sometimes I do, but I don't all the time. I mean, I showed you some market trades, but I don't get the market right all the time. I never thought the market would make 27 million brand new all-time highs this year. We might have set the high for the year, though. I will say that. We might not make any more new highs this year. That's probably likely. Anyways, there's a million places to find gaps. That's not hard. I do my analysis before the open. I know what I'm doing right out of the gate before the open. Otherwise, it's a crapshoot. I don't look at stuff at night, but you could. You could if you live in a different time zone where you like to get organized at night, but I'm an early morning person, so I do it in the morning. That's a good question too. Any other questions? So again, think about what I'm saying. Empower yourself in your own world to trade, because then you feel like you have a level of control over what you're doing. You may have traded, and you may take a trade and you lose, and you feel that it's out of your control. But let me tell you something. Not even good traders. I'm a good trader. I take some trades that lose. Sometimes I retake it, get the timing off. Sometimes it doesn't work because something happens out of nowhere that you don't expect. Trump tweets or something. You never know. But the reality is, more trades I take work than don't work, because I'm using a system and I'm staying on top of that system. I mean, I'm not changing anything I'm doing, and I'm using that and only that instead of looking at a million other things. Because if you're trying to follow the news or make decisions of fundamentals or make decisions about what the Fed's going to do or Trump's going to tweet, you don't know. Those are all 50-50 crapshoots. I'm looking at the chart. I'm looking at the chart and determining it based on the technical analysis. It's in the daily chart. I'm using the same system now, like I said, for almost 18 years. So when you have something that you can rely on the chart, the knowledge, the price action, that's where you're going to get the confidence, and that's where you're going to get the conviction. And then anything else that happens, it happens. Whatever happens, happens. Okay. I'm talking. Can everybody hear me? Jeff just said he doesn't hear anything.
No, I can hear you. You sound great to me.
Oh, okay.
I didn't hear the cleaning crew. That was a minute ago.
Oh, okay. Wonderful. He went to a different room now, but it was earlier. There's nothing I could do. I had it scheduled for today. Very good. Okay. So we were talking about what? Trading, changing your life. Okay. Doing something fun, which quite frankly, trading is fun. Making money is fun. Losing is not fun. If you're trading and you're losing, you're probably miserable. So decide not to lose anymore. Just say, I don't want to be miserable anymore. I don't want to lose. I want to win. And I've got to learn how to do it. And I'm telling you that you can do it. Whether you do it for yourself, whether you do it for your family, whether you do it for whatever reasons you have, that you want to do it for a full-time job, you want to quit your job, you want to do it on the side, it doesn't matter, but you should know your reasons. You should know your reasons, and you should have certain goals. And you've got to make the time to start trading. Again, I teach the class on the weekends on Saturdays and Sundays because I'm trading during the week. And usually people work during the week, but you have to block off the time to do it during the weekend. You've got to make the time. So the class is called the Golden Gap Course. It's a complete system that I use to trade. And again, you'll learn the 26-point rating system, all the entries and exits in the class. So the Golden Gap system is a 26-point professional bearish gap rating system. The purpose of the system is to evaluate which gap to trade each morning using a checklist. This checklist tells you what to trade, when, and in what direction. The 26-point checklist predicts directional bias and a stop. And I'm telling you that one strategy is all you need to be successful. And I'm mostly short in a bearish market and a bullish market, and I've done it since I started trading. You do not need a general overall broad-based view to make money. In fact, it could hurt you because you could be looking at all kinds of things and not really knowing what to do or what to look at, okay? Tons of people have that and fail all the time. Learn how to read institutional money and price patterns and gaps, and you don't need to do anything else, because if your reason for doing this is to make money, okay, this will make you money. So the class, the last class for 2025, I can't believe it, the year is almost over, is December 13th and 14th, 9 a.m. to 5 p.m. Eastern time, last class of the year. If you want to join, class tuition is $6,999. I'm doing a fall special. I took that picture with my phone. It's a gorgeous picture. Right now is beautiful in New York City in Central Park. Of course, we've had some rain the last 24 hours, so I don't know how many leaves are still in the trees, but this was a couple days ago. Beautiful scenery right now in the park. If you sign up by Friday, November 14th, what's today? Wednesday. I'm doing a special. You will get the trading room free for 1 year and the options newsletter free for 1 year. Again, this ends on Friday, and then you'll be joining and you can get in and start trading with us before the class, which is December 13th and 14th. Someone's saying it's only a crapshoot because you don't know advance, but there's more things. There's more things than Trump. You don't know what the Fed's going to do. You already saw a turnabout. You already saw a turnaround where at first they said 2 months ago they were going to drop rates in December. You already saw a turnabout, whatever that was, 2 weeks ago. I have to look at a calendar now if it was 2 weeks ago, where now they may not drop rates in December. So there's a million things that can happen and that are not predictable. But again, I'm doing a day trade where I'm getting in and out in 5-10 minutes. I'm doing an option where I'm in and out the same day or within a few days. I'm not doing leaps, okay? So I'm trading momentum, which are fast trades. Even the options are fast trades. So that's what I'm doing, and I'm using the daily chart based on technical analysis. Because if you're trying to trade the news, you're not doing very well right now. And in fact, today, I don't know. I don't have the news on. The House is going to vote on the shutdown today. Is it going to pass? Are we going to be through it? I don't know. But I can tell you one thing: if it doesn't pass, if the vote doesn't pass today, it probably goes into next week. And then all the air travel, I feel so bad for people that have to travel for the Thanksgiving weekend, or the Thanksgiving week. It's going to be a mess. They need probably a week to get all that organized. People back at work, get stuff organized. So if this doesn't pass today, it's going to be hell in a hand bucket going into next week to get things orderly. Again, I mean, I live in Manhattan, like I said. It's plane. It's just been a nightmare for people that have been traveling out of JFK, Newark Airport, and LaGuardia. It's just been crazy. And maybe they will pass today. Maybe it'll be over today, but maybe it won't be. Nobody knows. You know? Any other questions? How are we doing? So if you're interested,
you're doing great.
Oh, thanks. If you have any questions, you can email me at melissa@thestockswoosh.com. I'll just type my email in here. What were we going to say, Jeff?
Oh, that's all I had. And I just put your email in the chat so people can get a hold of you. You're welcome.
Wonderful. Listen, if I don't talk to you, Jeff, have a happy Thanksgiving.
Will do. Thank you. Yes, you too.
And happy Thanksgiving, everyone else. And if you have questions, you can email me at melissa@thestockswoosh.com. Think about what I said today. If you have questions, you can always call me too. And again, have a wonderful, wonderful week.
All right. Thank you very much, Melissa.
Thank you.
All right. Appreciate it. Okay. And then I did put that in the chat, so if you want to get in touch with Melissa, you definitely can. Let me go ahead and kind of migrate over here a little bit. we do have a few extra minutes, and so let's go ahead and we'll talk about some of our fabulous sponsors and how you can get some of the specials that are here today. So moving back a little bit, I do want to thank, how are we doing? I'll pass that along. Walter says, so Melissa, get a noise canceling microphone to cut out the background noise. I didn't hear a lot of background noise on Melissa. However, I'll let her know. I do want to spend a few minutes just because we have a few minutes extra. Maybe we'll give away a prize as well. But I do want to say thank you to all of our speakers so far. I think everybody's done a very, very good job. Thanks for being here. Thanks for asking questions. If you have anything that you think we could do better, any suggestions for upcoming events, et cetera, or just want to say hi, feel free to email me. My email address is jeffrey.gibby@metastock.com. I'm going to put that in the chat. Maybe if you have a suggestion in terms of who you want to see speak at a future event, just let me know. So here we go. There's my email address. There it is in the YouTube as well. I do want to also thank all of our individual sponsors. So we've got AAII. AAII is a hugely well-respected, well-reputed organization. You can find out more about them at aaii.com. They've been supporting the conferences that we do for a couple of years. We really appreciate them. They've been a nonprofit organization with, like I said, a lot of respect since the 1970s. So, 1970s. Partner of ours for a couple of years. Want to thank Stocks and Commodities Magazine. Stocks and Commodities Magazine is really very good. A great magazine. They've been publishing since 1982. They've done 17,000 different trading articles. They've got 1.3 million subscribers. Really appreciate the work that they've done over the years and supporting us. Want to say thank you to the Traders Forum. The Traders Forum is an online community. You can go in there, you can talk about trades, you can learn about trades, you can learn about technical analysis. We do a lot of really cool events. Like a lot of the people that we've had on here will come in and we'll just do like a little bit of a podcast. We'll talk about the markets. We'll talk about kind of how people got involved in the markets, biggest lessons they've learned over the years. It's a really, really cool event. We call that Ticker Talk. In addition to that, we'll post up stocks that we like, things that we're looking at, news that we think is important, and we also get pretty silly in there. We'll talk about indicators. All of that's for free. You can join the community at thetradersforum.com. Jeanette, it's really good to see you. I was getting a little nervous. I thought we might have to send out somebody to find you. Of course, we are MetaStock. MetaStock's been rated the highest software program in its price category every single year for the last 32 years. I love it because every day I can run my scan. In a couple minutes, I can go through and see what stocks I want to look at and what stocks I want to maybe consider based on my criteria. There's tons of scans in there. You can scan for just about anything. Somebody during the last said, well, how do you find the gaps? There's a really, really good gap scanner. You can run it on any market you want. There's about 300 exchanges. It'll find gaps for you. So, of course, we've talked about testing. Scott did a little bit of a demo of the patented forecaster a few minutes ago, or a few hours ago. You get real-time commentary, alerts, signals, all of this award-winning software backed with the data. All of that's available at $75 a month. If you buy a month, we'll give you the second and third month for free. A little bit of math tells me that for less than $25 a month, you can try this till January. During that time, you'll get training, you'll get all the stuff that you need. I would not be able to trade as successfully as I do without MetaStock. You should give it a go. You can do that at metastock.com/conf-promo. You can give us a call at 800-882-3040. And you can also chat online with us at metastock.com/sales-chat. Right? Okay. Woo! Our next guest is Jeanette Sims. Jeanette's been a big, but Jeanette, this is her second presentation. I've worked with Jeanette for a number of years. She runs a company called Trade Thirsty. She's been doing this for a long time. I met her when I was just a child back in the 1990s.
Just
Yeah.
a child. That's funny.
What was it? We were in the 90s, like when we met at the Traders Expo, right?
Oh, the 90s. I remember those.
Yeah, we were both children then.
I'm gonna switch mics here. Tell me if you can still hear me okay.
I can hear you.
Okay. I had this mic on earlier in Zoom and it acted up on me. So just making sure. Does it sound better?
Yeah, and we can hear you. Which we had some, well, anyway, that's beyond, but we don't need to go into the problems we had yesterday technically. I can hear you great. Do you want to help me
I
out?
want to hear about problems. Don't be putting that bad juju on me, Gibby.
I won't. I will say everything's been flawless today since we switched to the old interface instead of the new interface. So I want you to help me though, Jeanette. Are you willing to give me a hand?
All day.
Okay. So one of the things that we do as part of this event is between every speaker, we give out a prize. And I'm going to have you give out a prize. So
Okay.
let me figure out which one. I'm going to go to my list of prizes. Larry McMillan, he spoke yesterday, and he wrote Options as a Strategic Investment. A lot of people consider that a Bible when it comes to options trading and a required reading. I should read it. But he's great. He's a very, very well-established expert. He publishes 3 newsletters, and Jeanette right here is going to help us decide who wins.
Oh,
you ready?
Lord. Okay. What are the rules?
This is easy. I'm not going to ask you to do anything very complicated. All I need from you is to pick a number between 2 and 6,011.
17.
My goodness. Okay. We're rewarding somebody that was an early registrant. And that is Joyce V in the Netherlands. So Joyce V, if you're in the Netherlands, you might, I'm not sure what time it is in the Netherlands, but it's probably early evening. If you're watching live, you just want a prize, let us know you won the prize. Otherwise, Larry's team will reach out to you next week to kind of tell you how to get those 3 newsletters. Jeanette, let's go ahead. Oh, here we go. Oh, I thought we had, anyway, let me go ahead and make you the presenter here.
You spelled my name wrong, Gibby.
How so?
It's only got 1 M, like Mary.
Oh, I should know that. Okay.
I know, like Sims the game.
You know, if you right click on your name, you can change it.
Well, that's what I'm going to do. How about that?
Okay, yeah. Just go to the list, right click on.
I know how to do that. I'm acting like I've not been here before.
Yeah, you know.
I've been a million times. Let's see. There we go.
I should know that by now, though.
It's okay. Well, it's not. You know what it's doing to me? It's not letting me. Like when it opens up boxes, it's not letting me see the full box.
Oh, okay.
You know what? It's if I take it off one screen. It's stupid thing. This thing's wonky today, isn't it? But no, never mind. No bad juju. Okay, there, I did it. It's fixed.
All right, cool. You should have the presentation now. I should have asked you if you want to share your screen.
Okay. Let me move all this crappity crap around.
And you're going to be talking to us about the profit 3 time-based setups for trade traders, right?
That, yeah.
Okay.
Let me go find it. I always want to, Scott, I'm sure that you could teach me this, Jeff. There's a way to get rid of all my stuff up here. And I don't know how, on my taskbar. We can do that another day.
I'd be happy to help you with that, but let's do it another time.
That's what I said. Let's do it another time.
Yeah. All right. I'm gonna get out of the way. I can see your PowerPoint. I can see you. You sound and look great. Go.
Okay. Thank you. Okay. Thanks. Hey everybody, it's Jeanette Sims. I'm gonna go ahead and turn my camera off because camera's all around me. It's very distracting, but hey, I'm here. I'm live, and I want to thank Jeff and the whole team over at MetaStock for having me here today. They're a great group of people over there. I've enjoyed working with them like Jeff said, I don't even know how long it's been. He's trying to put some 90s on it over there, and that's fine. I'll take the 90s all day long. Let me get this questions box open so I can see. I get Jeff, if something happens with my sound, just butt in. Go. Clockwork profit patterns. I'm going to be talking about time-based setups for trend traders. And really, this will resonate more with those of you who are day trading or trying to learn about day trading, because that's my baby, is day trading. I do position trade and have several long-term holdings, but today's going to be the focus of the joy of my life, which is day trading. So there's the risk disclaimer, and the lawyers make us throw this up. I say the lawyers, really, it's the most important thing that you can do is treat it like past performance does not guarantee future results, and that's in your trading and my trading in the whole world, right? No guarantees, no guarantees. There's a little more, and the things I'm going to be talking about today, I'll have some historical data in here, and so I just want everybody to realize that if there's a number on here that's not exactly right, I appreciate any help you guys have to give me, but for the most part, it's just for informational purposes. So don't go making any big old milk money trades with whatever you learn from me today. I'm here to just train. Do your own homework. That's what it says really big. Do your own homework before you put real money in the market. Okay, so today I'm going to give you 3 time-based setups, and they're designed to help you find high probability trades. It's like to try to finally replace that stressful all-day guesswork that you are doing or may be doing with a calm, data-driven process. And if you stay to the very end, I'm going to give away 4 stock picks, and I'm just going to rattle those off at the very end. So hopefully you will stick with me and hold me to that. So let me introduce myself a little bit. I'm Jeanette Sims. That's me. That's the office I'm in right now. Wow, it was really clean that day. Those are my dogs. They're insane. Those are my children, Jack and Sarah. And then that's a big family picture we took last Thanksgiving out on my porch. And 2 Huskies. My mama lives with me, and she's amazing, and I'm thankful to have her here with me. I started Trade Thirsty in 2013. Actually started trading futures in 2001. It feels like a bajillion, squillion years ago. Okay, so I've rehashed this presentation up a little bit. Let me know if you're here. Put in the questions box that you've seen me give today's presentation. So I've got this, this 6 is my number. I've got this 6 up here, but I'm not actually gonna, there's a couple of pieces in here that aren't gonna be talked about at length today, but for the most part, all this is gonna be covered. And so we're gonna go ahead and start with the 24-hour market. So if you are trading and you don't recognize that there is this 24-hour market out there, then you're in big trouble, because especially for day traders, right? For position traders, you need to be aware of what I'm about to teach you. But I find it interesting that there are stock traders out there that have been trading 2, 3, 5, 10 years, and they are not aware that the futures trade around the clock. And there's this big whole world that happens after we go to sleep, and things that that could drive into the day market. Big news that happens overnight that's already priced in. And a lot of people don't realize that, and they get up thinking, oh, we're gonna have this big, whatever, good, bad, unbelievable thing happen overnight. And they come into the day thinking it's going to run the entire day when it's actually already priced in. News is usually already priced in. So I've laid this out for you starting at 1700 Central. And so this is taking you into key times during the night, starting at 5 o'clock Central, where the US futures open up. And then we roll into Germany with the DAX, and then the Nikkei, and then the Hang Seng, and then back to the DAX at 3 a.m. Those are key times for the DAX. The futures in the cash. And then we come right back around to New York and NASDAQ equities opening up at 8:30. And so that 24-hour clock is really critical to understand what's happening in today's market and what drove it. And so I made this picture a very, very, very long time ago. Yes, when I say Central Time, I mean Mobile, Alabama. That's where I live. Chicago time, Central Time. A lot of people talking Eastern, just add an hour. You know, Central Time, 5 p.m. Central Time is 6 p.m. Eastern, New York. So it's just a +1. And feel free, you know, take some pictures of the slides that I have up if you'd like to be able to take this information home with you. That's the easy way to be able to recap. That's what I do. Okay, so think about it like this, and it's like 4 quadrants of the world. Asia is number 1, and that's going to be from 5 p.m. Central till 3:30 in the morning, and that's the Asian markets are going to control what's going on big picture wise on the U.S. futures side. Then we roll into Europe. They take the ball, 3:30 to 8:30. Then the U.S., I broke it up into 2 time frames. The morning and the afternoon, they behave significantly different. And there are rules to trading for day traders in those 2 big, we'll call them groups. There's times within times that we'll talk about in a little bit. But these are the 4 big, think of it as just, you know, it's just the globe, right? But instead of starting in the U.S. morning, we're going to start over in Asia and think of it as all priced in. Is that clear enough, everybody? I know it looks simple on the screen, but a lot of people want me to put the U.S. in number 1, and that's not really if you think about the big picture, that's not really the way it works. So let's take a minute, and we're gonna slow down here, and I'm gonna give you all the information that you need to understand the futures indexes and what we're talking about today. So these are some peak volume periods for day traders during the day market. The first 2 hours of the market, Central Time, remember, just add an hour to be Eastern. First 2 hours are really the best time of day, I believe, to be day trading if you're trading futures. And then there's what I call the lunch rush. It's a setup I'm going to teach you today. And then into the close. There's a whole nother time frame there into the close of opportunity if you know what to look for. So we'll just call these peak volume periods. And here's just a couple of highlights from that. Now, I have grown to really love the NASDAQ. It has become my baby. And I don't really know or remember when that happened. I sort of morphed from the E-mini S&P to the Dow, and then from the Dow to the NASDAQ. It is most active during the day market hours. We wouldn't trade the NASDAQ in the night hours. So if I'm going to trade the NASDAQ futures, I'm going to trade it during the US day market, 8:30 a.m. to 3:15 p.m. Central. For the night, you would be looking at markets like the E-mini S&P and the German DAX. Those are, for the futures, those are going to be your 2 opportunistic places to go. And then, of course, I said it and I'm going to say it again, the NASDAQ is best traded during day market hours. I would not consider it as, it's not going to be as clean of a trend as you will find in the E-mini S&P if you're a night trader. At night, you have a slower developing trend, and it has less risk because there's less movement at night. But then there's also the fact that it's night, right? So you have to be one of those people that can set it and forget it and walk away and not get caught up in the every tick, tick, tick of the night market because it's so slow. It will put you to sleep, which is really where you should be. So if you can't set and forget it, don't go into the trading in the night market. It could ruin a lot of parts of your life, your sleep, your relationships, a lot of other things. Okay, so before I go into the 3 time-based setups, I'm going to talk about 5 habits that you should practice. And these are habits that, for me, like when I thought about building this out, I could go on and on and on and chart bust y'all all day with chart after chart after chart after chart. And really, when I dug deep about what has helped me be successful and have repeatable setups in the markets, it all came from me mastering habits. When I originally started trading, I was a gunslinger, and I didn't really have any respect for the market or the numbers. I treated it like a video game, and make money in the morning, give it back in the afternoon. No respect for the work I'd done in the morning or what the market had paid me, just greed. And then fear too, right? Lose money in the market, go back in the afternoon just because I didn't want to have a losing day. And all that, you got to put all that aside if you really want to be great at this game. I would really love for you guys to put one word, list of one word that comes to mind for you that you believe is like the number one habit you've had to master, or hell, it could be the one unmastered habit, right? I lack discipline in my personal life, but I have a lot of discipline when it comes to the market, because when I say in my personal life, like making sure I exercise, making sure I go to bed early, making sure I drink a ton of water, all the stuff that water, sunshine, oxygen, and things that it takes for us to tick. But in the markets, like it's a lock, stock, barrel. There's a set of rules I follow, and it's a daily grind of looking at the information. Because here's the thing, if I don't look at that information, I'm not going to trade. If I don't go through my setup, I'm going to show you here in a little bit, then I'm not going to trade. It doesn't make sense for me, for my family, for my wealth, for my future, to try to go in without having all the information I need. And what I see right now is the answers are rolling in now. I love that all these answers have the word management in them. I think that is time management, risk management, discipline and management. How about kid management, dog management, food management? Yeah, so risk and time those are two things that are, you got to have them if you're going to trade. You got to manage your time, and we're going to talk about that really hardcore here in a minute. The risk as well, you got to manage that risk, or you won't be around to even be able to put money in the market. You'll just be coming to training sessions like this to time, because you spent all your instead of learning, you went to the school of hard knocks and lost the money. And that's I see that happen time and time again, and it's awful because there's so much information out there now to learn first. And paper trade, hell, we didn't have paper trading whenever I first got here. We were calling the floor and placing our orders. That was paper trading. It literally was paper trading. I was writing it down on a piece of paper and then watching it tick, 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 And then if I walked away, I'd have to go back and check time and sales to see if my stop would have been hit. Paper trading now is like lickety split. It's if you're new, that's the best way to start, because then you can go learn the platform and learn what right click and left click are, all the good things. Okay, so number one is master one strategy first. If you refuse to master one strategy, you are maximizing decision overload, potential for decision overload. And so each day you should say to yourself, like, what strategy am I using today? Instead of saying, should I use volume profile? Should I use MACD or that new bot I got, or whatever it is? You got to pick one and stick with it for a little while and test it. Because if you bounce around like that, you're really not gonna know what the potential could have been. With AI now, there's a lot of things you can do to back test strategies with ChatGPT or Claude, any of those. You can go in and use those tools and ask it to tell you how you would have done. Now, I'm not saying that all that data is going to be as exact as you want it to be. You almost want to back test that they give you, but it's a great way to sort of put your toe in the water with different strategies without having to do a ton of research. But if you're out there trying to figure out which strategy of the day, soup du jour, you're going to be stuck in a state of constant confusion. Half the time that'll even be before the market opens. Bruce Lee, I fear not the man who has practiced 10,000 kicks once, but the man who has practiced one kick 10,000 times. And that's what trading is. You got to keep practicing that same trade over and over and over and over and over until you can do it in your sleep with your hands tied behind you, you know, with one leg in the water and one leg out. You got to be able to do it, know it, just marry up to it, where you've practiced it enough that you can do it, and you also recognize if it truly works, or if it's just one of those you just need to let go in the wind. Okay, habit number 2, plan your trades, trade your plan. And the truth is that a lot of you let your thoughts and your emotions get in the way of generating cash. So it's happened to me more times than I can count. That's why I'm putting it out there. The most successful, the most consistent, the most repeatable process traders allow the plan to rule them, regardless of emotion, and just 100% disregarding the emotion. Trading without a plan forces you to make every critical decision, entry, exit, stop, size, all that in the heat of the moment. And this is why a good profit can be erased in a heartbeat. And it's 100% unnecessary. So I want you to take a minute and write this down, okay? And not just write it down for you to have right now, but the next time you go to enter a trade or paper trade, take some time to write these down. Now I'm a big football fan, so of course I named it my pick 6 trading plan. If you watch football, you know what I'm talking about. But here's what they are. It's pick the right market, pick the market, right? Who knows what the right one is every time? If we knew that, it'd be crystal ball day. Figure out the trend and what strategy you're going to use. Define your entry, define a profit target, and then make sure you know where you're wrong. And that's number 5, your stop. And then you're going to manage it from there. And that's the bottom line. If you're testing the waters on a new strategy, or heck, you're just getting started in the game, then you really want to look at number 5 and live with it. Put in a stop and live with it. Or you won't blow up just one account, you'll blow up several. I mean, I'm personally in a trade right now where I was seeing higher highs. I was up about 6 points on it, and I didn't have a stop in. I was like breaking my rules, right? And then over a series of 3 or 4 days recently, I saw that trade turning against me, and it was like a wake-up call. And so I went in and I put in my stop. And sometimes it's like you feel like, well, it's not going to go that far against me, so why do I need to put it in right now? I'll just make a decision when it gets close. But that's BS. Even me being here as long as I've been, I waited until I checked the trade one morning to find out that some bad news had hit, and it was all based on ETH. It's a trade that I'm in that is based on the price of Ethereum, which is a crypto, and put the stop in. That's all I can say. And write all that stuff down and follow it. If you don't have it written down, like if I don't write something down, if I don't write down my grocery list or things that, you know, I literally have to write down, remember to call my daughter back. If I'm 2 hours into some webinar or some grind I'm in and she calls me, like if I don't write it down, I might not remember till late that evening. Oh, I haven't talked to her today. And I'm like, crap, she called me earlier. You know, write it down, just put it in front of you. It's trading the same as life, right? Consistent trading routine. So markets love patterns, and so should you. Midday check-ins, end-of-day. Keep it tight, keep it repeatable. Stock market is made up of patterns, and people are patterns. And so when people break pattern, you put up your internal radar and start watching for other off things about them. Well, the market is exactly the same. So let's transition for a second and talk about your pattern. How do you start your day in the market when you get up? Like, what's your playbook? Is it check the news? Is it check positions, check profits and losses, gather data, prayer, whatever it is to get you started in your day? This is always it's interesting to me to see the difference in the answers that I get when I ask how people start their day. And while I give you all a minute to think about that, starting your day, your personal routine in the market, but I'm going to tell you a little bit about mine. Overnight market, I've already talked about that a lot. The numbers. So I was trained on time and price So the price action and time of day of when that price action occurred. And so I don't really have indicators or there's just a couple of basic things like a certain average range that I'm going to look at, big support and resistance numbers. I'm not really going to get super involved with having lines crossing and a bunch of indicators slapping themselves on my charts, but that's me. That doesn't mean it won't. It's you. You have to do it your own way. I look at the calendars and figure out what's going on in the big news and what's going on with me personally. And I look for the opportunities, plan the trade the plan. I know that sounds boring, plan the trade the plan. That is, ask anybody. You'll hear it over and over and over in this industry that you got to plan it and then you got to follow it. Okay, I see some people chiming in now. Shane, Phil, Craig, Myra. What's up, Myra? Hey, Pam. All right, so you guys have something that you're doing to kick your day off in the markets. That's great. If you're not serious about treating it like that, like it's a business, you can attend all the freebie stuff you want like this and gather information, but you probably won't be good at it ever because you're not thinking about it like that, like it's a business. And I've seen it too many times in my career. All right, so I'm going to break down some of that stuff I just put on the screen for y'all. On the morning prep, I have a little template that I have for myself where I just write in the numbers that I need, and I fill it out daily. It builds discipline. It gets my mind dialed into what the numbers are. When I say the numbers, like what the high and the low of yesterday were, what the high and the low of the week are, what the big resistance and the big support are, any big numbers that stand out to me in a particular market that I'm looking at. And I've been doing that since the very beginning. I was mentored by a day trader for 10 years, and I learned I'm going to say all the good and all the bad of how the market can take from you. And so that one discipline of having the numbers in front of me every morning is something that I've lived by. All right, so I'm going to fill this in a minute, and then you can take a picture of it if you want. But my daily routine is like this. I'm looking at opening price. See that number one on there? Opening price. The year, the month, the week, and the day. I'm going to take this through an example in a minute. But the year, the month, the week, the day, that should be mapped right now for you in the S&P, the NASDAQ, the Dow, and then whatever market you're going to trade. And when I say S&P, NASDAQ, and Dow, I'm talking about the futures indexes. And you're looking for a pattern. You're looking for, are there higher highs? Are there lower lows? Are there lower highs? Are there higher lows? You're looking for something that gets in sync. Are they in sync or are they diverging? And all that it's all just clues to help you figure out what's going to happen or what could happen. It's all about forecasting, predicting. So I get all that. Then I go look at, like I said, calendar stuff, the overnight markets. Look at Europe and Asia, the indexes we talked about earlier. It could be the CAC, the DAX, the FTSE, the Swiss. And then over in Asia, the Hang Seng and the Nikkei, tomato. And then I look at big scheduled news. I personally love Forex Factory. I've never traded Forex really, but I've always used Forex Factory for my news because they break it all down for you and tell you what's important, give you the expectations, previous info. It's color coded. I mean, like I said, I've never ever traded Forex, but it's a killer site for news. If you guys have good sites for news, I've not searched for a new news site in a long time. I would love to know which ones y'all are using. And of course, opportunity. So figure out what tools I'm going to use to scan for my setups, adjust current positions, and then back to the plan, right? Pick the market, pick the trend, plan the trade. This goes back to the pick six. All this down here in opportunity is the pick six. I think of it like this, and a lot of people disagree with me, but I think of every trade starting as a day trade. So if I say I got into, I don't know, a position in Amazon today, and I had certain targets already defined, for that market, even if I was gonna, planning on holding it for 6 months or a year or whatever the reason was, I would look at it when it makes big runs and it pays you, take some risk off the table. Even if it happens in that same day, take some risk off the table. Because when you have big moves in just a handful of days on something that you were really thinking about holding longer, that's the unicorn, right? It's paying you. Take some risk off the table. You can always add to the position later if you find that there's another sweet spot, but that's how I think about it. A lot of people just get in, they're throwing the Hail Mary. I can't throw the Hail Mary every time. It's no way to trade in my opinion. All right, take the losses and move on. Hope, not a strategy. When the trade fails, get out, take the hit and wait for the next opportunity. So if you do this, you're just a screwball. You need to go into the house. Moving your stop lower to give the trade more room is asinine. Don't do it. You're going to want to do it. You're going to be like, oh, I just believe in this trade, so I'm just going to move the stop. No, don't do it. I've been there, done that. And if you don't have your stop at like a percentage you chose or a dollar amount of risk, or based on key market levels, which is what I do, just put it in there and let the market come get you. If it gets you, take a knee, take the loss. That's the best piece of advice I can give you right now is A, put the stop in, and B, do not move it away from the market because your ego says you're right. Unless you have some fact-based piece of information that there's going to be a blip and it could run through your number, but then regroup and head back in your direction. I don't know anybody that knows how to do that either. So if y'all got somebody that could tell you that, I'd love to know. One thing that I do as far as losses goes is I put a couple of ideas on here, right? I will not take more than 3 trades each day if you're a day trader. I will not trade past 11 a.m., whatever. I will not. These are all just ideas, okay? Get your own idea. Mine is I will absolutely stop. If I'm day trading, if I have 3 losing trades in a row in one day, something ain't right. Because I know I've put all the odds in my favor. I've trading during the right time of day. I'm trading the right market that I understand. I know my numbers. I know all the things that could affect it. But even having all that, the market, she don't care. She don't care. She'll just come get you. And so if I'm having 3 in a row, it's me, it's the market, something's off. It's just time to take it to the house. I'm done. Okay, now on the future side for trade management, and you can use the same trade management style for stock positions. You can do it any way you want to do it. But I think of it like scaling out in thirds. So if I had 10 contracts, I would pick my targets, predetermine my targets, and take a third off at the first target, a third off at the second target, and then just trail my stop and let the rest run. So I've put an example here on the screen of the NASDAQ. And this is all hypothetical, but I'm trying to make you start thinking about what that looks like visually of scaling out in threes. So if I bought 3 contracts of the NASDAQ futures, and that's what we call it, so 3 lot or 3 contracts, the price on this particular example is 25.5. So if I sold one at 9 points later, and then I sold another one 14 points, these are all from entry, then I would move my stop to break even. Now I put on here break even was $4.99, even though I got in at 500, but that's how my brain works of profits and stops on the 9s and the 4s. That's a bigger day than today, but I guess that's why I did it that way, because that's just how my math is going to work every time. I'm never going to put it right at a double zero. So this is what it looks like if you were trading the NASDAQ. Now you can trade the mini NASDAQ, which is only $5, and it's a lot cheaper for you to trade, and it's going to be a lot. I'm sorry, I think maybe actually I don't trade the mini NASDAQ. Maybe it's 2. Maybe it's a 50 cents a quarter, $2 a point. I think that's what it is. Anyway, I'm talking about the big NASDAQ right here. The mini is a great place to start if you're just fresh and new, because they trade exactly the same side by side. It's just less risk for you. It's gonna be less reward too, but the goal is to get good at it before you earn the right to trade the big boy. So in the math of what I just said, 9 points at 20 bucks is $180, and then that's your first one off that risk is off the table now. The second one, 14 points, $20. I put tick, it should say point, 200 bucks. So in this particular situation, you've banked 360 bucks. Whether if you move your stop, let's just say in this example, I would move my stop in the NASDAQ, I would trail it 9 points back. Worst case scenario in this trade, I walk away with 280 bucks. Sometimes I'll trail it right from dead even, or, 9 points back from where we're trading at the time is not going to be a loss because I just took profits off the table. So there's a lot of different ways to manipulate when you're trying to figure out where to put your stop. Just get you a strategy and master it. This is something that I've spent so much time studying and understanding as far as what my personal approach would be to money management. I don't care what you do, but pick one and stay with it. And hard stops, not mental ones. When you're testing a new strategy or just getting in the market, you have to have a stop. When I say hard stop, I mean not in your brain, but on paper, just like the trade I was just telling you about. It's in BMNR. I've been in it for a while, and it's, it started to go against me, and I finally just said, I've been being an idiot, and I went and put my stop in. So the one in your brain, that's what we call a mental stop. It won't cut it. Even if you have the discipline to actually get out when it hits your mental number, or if the doorbell rings or your doctor is up on your foot, which has happened to me. What if I'm talking like in a trade, well, and that, what am I going to do? Am I going to sit here with the puke all over me and him running around, getting it everywhere? What if you had to get up and leave the trade, even for a fraction of a minute? If you don't have your stop in, big news could happen, or the market could just decide it's done and turn. And when you have a hard stop in, that is the safe play. And think of it like laying up in golf instead of trying to clear the water. This water is shark infested. It's a lot different than the greens at Augusta. The layup is going to be the best play every time in the market. All right, 36 minutes in. Okay, so I've got my calculations 22 minutes. All right, let's go through these time-based setups. You guys have questions, please post them in the chat box for me, or the questions box. I say chat, it's always questions. When you're using GoToWebinar, it's in the questions box. All right, now there's going to be a pop quiz at the end of this section, and the first person to answer it correctly is going to get a swag bag from me. So I got to know that everybody's playing. So I need you to put an LFG in the questions box. Let me know you're here and you're listening. Sometimes you feel like you're on an island out here doing this stuff. I'm going to be great no matter what, but LFG, let's freaking go. Put it in there. Let me know you're listening, because this segment is critical to understanding not only the strategies that I'm talking about, but also winning some stuff. First person to answer is going to be the one that gets the swag. All right, so time-based trade number one. Using the opens to spot major trend shifts. And when I say open, I'm talking about the opening price on a chart. The opening price of the year, the opening price of the week, the opening price of the month, the opening price of the day. Y'all remember earlier when I had that blue thing up, a big image, and it had opening prices for the E-mini, the NASDAQ, and the Dow, and then whatever market you're trading. This is exactly that. This is exactly that same thing I talked about. Look at you LFGs. Let's go. All right, so let's get dialed in here, okay? I'm going to go through the SPY, and I'm going to go through the Qs. And I'm about to show you something that if you don't understand that this is what has been happening, this is about to change your life. And I'm not even kidding. So on January 2nd, the SPY had an opening price at 589.39. I put that white arrow up there to show you the 539. Okay, the ultimate benchmark on an up or down year for the market, right? It's all based on where did they open and then where did they finish. And you have to do this for every market that you trade. So this is the year in the SPY so far. So let's just talk about the numbers. 589, current month 634. These are the opening prices. This week, the opening price on Sunday night, 677. Today, the opening price, which actually happened yesterday, 684.79. Remember, because the futures are actually this is the SPY, 24 hours a day. So as a day trader, I also consider the 30-minute time frame and the 5-minute time frame, and that's more of a dialed-in situation. But I want to talk big picture here for you. So as you can see, that all those numbers are higher, right? 589, 634, 677, 684. Trickle, 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 right? Higher, higher, higher. Where she goes, nobody knows. So let's talk about what that price means, okay? So we're still talking about the SPY. We're still talking about this year, and the current open was 589.39. Well, on March the 4th, the SPY opened up at 579.71. It opened up 10 points lower than the yearly open. And if you look at the uptrend, and even when you look at the down moves, that's significant up to that point, right? And the indicators can help you see overbought or oversold trends, but the tape, when I say the tape, I mean the price, can forecast the next shift for you, okay? Now, let's just look at what happened days before the market, the whole market took a nosedive. So the sign was very clear that a major shift was potentially coming when we had an open below the yearly open. That March 4th open was like a, uh-oh. Remember what we talked about? Like your radar should be up, pattern shift, pattern change, people change. So it all tracks to lower prices in this particular move on the SPY until it finally found the bottom and rebounded. And you can see, let me see if I can get this, let me see if I can get this draw tool. All right. Da, da, da. Yeah, give me a second. I never use this draw tool because it's a pain in the ass. Let me see. Red pen color. Right. There we go. I'm giving up. I'm taking a knee on it, right? I can't get the draw tool to open up. The crunch I'm talking about, I don't know if you can see my mouse, is all right to the right of that big white arrow. It's this crunch right here, and then right here, and then off she goes. So it took a minute to get back where we were, but that was the big telltale that something was about to happen. Now, before we go look at the cues, I just want to give you a highlight of where we are right now for the year in the SPY. This is through today, roughly up 17.6%. You can see the price action. That's a 52-week range right there, going all the way back into the previous year. It's near its highs relative to the broader large cap market. So the trend is broad market strength, steady climb, large cap leadership, relatively lower volatility compared to the concentrated tech. What I just said is very important. Relatively lower volatility compared to concentrated tech. I've given you some big resistance here, 6,900 region, support 65, 6,600. All right. Well, let's go talk about tech for a second. We're going to do the same exercise for the cues. January open, 514.30. There it is on the chart. There it is. Okay, ultimate benchmark. Do this for every single market that you're trading. All right, so as I said before, we're going to look at the numbers and map it. 514, 553, 618, 624, up, higher, 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 right? current year, current month, current week, present day, all higher. The low of the year was made in April at a price of 402.39. And from where we are right now, that is a whole lot of room to the downside if this sucker decides to turn on us. So here's the same look feel that I just showed you on the SPY, but it's in the Q. Current year 514.30. On February 28th, the Qs opened up 14 points lower than the yearly open. And that was the signal. And it was 4 days ahead of the SPY. So the tape 100% forecasted this sharp sell-off. It actually, I'm going to say, triggered it, right? And it's important to track the major indexes as well as the markets you're trading so you can see that shift. The Qs led the way in this. So let's talk about year-to-date in the Qs. 21.3%. All these numbers, you can get them yourself. But basically what I'm saying here is it's more volatile. It's got more upside during rallies. The NASDAQ stocks do, trading the Qs, the ETF itself. Also more vulnerable if rotation or weakness in tech occurs. And weakness in tech right now is I mean, let me just say I've got some tech positions on and I'm watching that thing like a hawk because I'm going to be watching these daily, the weekly and the daily opens to see if I see the Qs sliding, because once I see that slide coming, I'm going to have to really tighten up my risk. Santa Claus rally, who knows? I surely hope so, but if not, I got to be prepared. Here's your pop quiz, ladies and gentlemen. Here's your pop quiz. Based on the method, open, high, low, and close. Those are 4 parts of the chart. What have I been talking about this whole time? What is the most, I say talking about it, I really haven't talked about the other 3 at all that much, but which have I identified as the most important? And first person that says it, I'm going to give you, a treat bag. Oh, hell, y'all already put it in there, so no matter. Brad got it. I'm sorry, Bradley. I was going to keep going and I gave it to y'all. It's the open. That's the answer. It's the open. Bradley G, give me your address and your phone number. If you don't want to put it in here, you can just put your email in here and I'll email you. You guys got it though. You got the opens. Last time I did this presentation, it was all over the place. It was like crickets or every other word but the open. It took a minute to get the right answer, but you guys are paying attention. I appreciate y'all being such a great crowd. Yes, the open. And we're going to take it right into another trade. I'm going to show you exactly how you would use it in a day trading setup. Time-based trade number 2, lunch rush rally. So the peak volume hours, we talked about this earlier, 8:30 to 10:30 a.m., which is 9:30 to 11:30 a.m. We're going to be talking about another time of day. This is the midday, right? 12:30 to 1. There's a setup that happens during the midday, especially for people who are, you're at your day job and you can't day trade the market in the peak hours. You can go look at what happens during this time of day for this sweet little setup I'm about to share. The market has a tendency to rise between 12:30 and 1, and that translates into higher moves into the close, roughly 63% of the time. So how would you like to know if the market could potentially rise into the afternoon? And then historically, it's doing it 63% of the time. And this trade that I'm about to talk about is one that I've been looking at this trade since, I guess since 2001. It's not like it's something I just made up or just figured out. This is some real life stuff over here, and you can figure it out for yourself by going and doing some math and looking at your market. But let's talk about it. Out of the first 150 trading days of this year, and I guess I need to go and update the number of trading days on this one, but SPY closed roughly 52% of those days higher. So out of 150 days, there were 78 days that this setup occurred so far this year. That meant that 78 days this year, this is up into the 150 trading day mark, there was an opportunity of a potential 63% move rally into the close. So that means that the odds that it could go higher into the close are 63%. A positive midday move likely increases the probability of further upside. Afternoon strength, right? So how can you use this? Number one, you can hold positions from the morning with a 63% chance that they're going to continue higher into the close. If you can get through that 12:30 to 1 o'clock grunt and you find that you have a higher price at 1 o'clock, 63% of the time, the market's going to go higher. The other opportunity would be to just put on a new position at 1 o'clock. Once you know it set that trend between 12:30 and 1, 63% chance it's going to go higher. All right, so Bradley, thank you so much, Brad. I got you. I got your email address, and I'll fire over something to you when I'm done with this, and we can get your address and send you some fun stuff. Okay, time-based trade. Now, I'm about to just give you the basics of a trade that I now train traders on, and it's a NASDAQ open breakout. I'm going to give you the basics here, but that is what I've got in an offer I'm going to give you in a little bit. It's going to be on learning to trade this NASDAQ open and really go top down in all futures markets. Learn all the intricacies of how it works, pick which market's yours, and then I'm going to show you how to trade it. So here's the rules of this trade. Track specific data off the market open. And when I'm talking about the market open, I'm talking about the day market open. So that would be off the 8:30 open. There's going to be risk that we're going to define the range that we capture. We're going to make sure we're not on top of major key numbers. The yearly open, the weekly open, high of the year. I mean, I guess we could be talking about the low of the year, but not today, ladies. Maybe another day. So the opens, we'll be looking at those big key numbers, any big numbers that if we're trading right on top of those, I'll just kind of take a knee and not participate in the trade at all because I don't know what's going to happen. It's too risky around big numbers. Preset the profit targets in the stop. I use NinjaTrader, and so I do a ATM strategy and put it all on, and then I wait. So here's the basics of the setup. We take the high and the low of the first 10 minutes off the open in the NASDAQ. We watch for a breakout higher or lower over the next 15 minutes. So all I'm doing is from 8:30 to 8:40, I'm going, okay, what was the high and the low of the NASDAQ in that first 10 minutes? And then I'm going to wait over the next 15 minutes and see if it breaks higher or if it breaks lower. That's the move I'm looking for. So this trade happens roughly like 15 minutes every day. It's got a 4 out of 5 win rate, and it produces anywhere from 100 to 250 per contract. And it's a trade that has a very specific set of rules with a predetermined risk. Now, you don't have to imagine a trade setup like that because I just gave you the basics of it. And if you want to get serious about futures, I'm about to tell you what's up. What's next for you is we've covered a lot of stuff today, and I hope it helped you. I would love for you guys to rate me. And look, I can take it. I'm tough. I grew up in a man's world in a garage with a bunch of army brats and mechanics. I got it. You can tell me it was a good, bad, ugly. What would you have rather seen? What could I have done better? I love that feedback. It helps me update things, make it fresh for people. I got a black book full of strategies like this. These are things I've learned and tested over the years from working with some of the best traders in the world. And one of the trades I learned was this one in the NASDAQ. It's the one I just went over the basics of, and it's a simple strategy for trading it off the open. And in this training that I'm offering, I'm going to release it to the MetaStock community. So I call it the NASDAQ Warrior. Really, I'm going to be covering the futures, time and price, and how to master it. We'll talk about Futures 101, using time and price in your trading and investing. I'll give you some AI techniques that'll help you do some of the things I talked about earlier. Go and do some back testing, go and figure out what certain strategies are able to produce. Give you lots of tips and tricks with AI to go and simplify some of the stuff you're doing over there that's hard and taking time-consuming stuff. I'm going to do a masterclass. I'm going to give it to you on demand, but I'm going to do a live one. So I'll give you some pregame materials for that. And the class is going to be on December the 2nd at 2 o'clock. When you join today, you're going to go ahead and get 2 previous classes that I taught, 2 live classes that are all the materials totally there for you. But then you'll also get this live session, which will be a hybrid where we can actually look at, I'll use NinjaTrader, but we'll look at some real setups and get into some nitty gritty. And this is something I've been wanting to do for a long time, this actual, this activity where we spend some time really getting focused on the setup and what to do when it goes against us, what to do when it goes with us. There's just a highlight, order types I like to use, the setups of the trade. I'll make sure I'll stay to the very end to get all of your information, questions answered, and the link to go to thirsty.com/. It should be, I dropped the price for Jeff today. Should be $195. Somebody check that for me. Let's see. I'm gonna send it to y'all, and I'm gonna put it in the chat box. I put it in the questions box, and I'm putting it in the chat box because in the chat box it's clickable. It's not clickable inside of the questions box. When you first sign into the members area, after you buy the class, you're gonna get you're gonna get an email with a login to go into this membership area that I had built, and you're gonna get this cheat sheet that also gives you. Now I said you need like a piece of paper on your desk with the information for this particular trade. I built a trading plan. It's in there for you. You can go ahead and download and keep it. I've got a trade tracker in there. It's a place for you to go and put your information in, and it does the math for you. You could use that trade tracker for anything really. It's I'd say highly worth downloading and grabbing and keeping, and just resave it and use it for whatever other markets you're trading in. Chart setup with order type examples. Those are Ninja charts, and because that's the platform I trade on. And there's the top down. December 2nd, 2 o'clock. After you buy, you'll get a link that'll give you a way to go register for the actual class. We'll send you reminders. I don't do like daily content or videos, or there's no big thing in here that I'm going to do that keeps you in the know every day. I mean, it's only $200, right? If you wanted me to do that, you'd have to pay me a lot more probably. But you can keep all this content. You can watch the recordings. You can come to the live class. It's $195. I just had a daughter $195 on Venmo paying old sorority bills. So there you go. It's called NASDAQ Warrior. TradeThirsty.com/NQ. We have time for questions. Am I okay here? Gibby, you need to come on. I got 3 minutes.
You're okay. You're fine.
You said you're okay. Look, I did it. All right, let me get these questions pulled up. Let's see. Da-da-da.
I want to rephrase my earlier comment.
Yeah.
When I said you're doing good, I meant to say you're doing great.
You're doing fantastic, unbelievable. That's what I want to see. When people ask me how my day is, even if it's bad, I'm like, it is unbelievable. Because, unbelievable could be a lot of things, right?
Yeah. It could be unbelievably good, right?
Yes. Okay, here we go.
I don't see a lot of questions coming in, though. If you have,
I know, because I must have done a really great job. I also asked them to rank me, and they didn't. All right, you mentioned the open as the most important price level. Can you explain why that's more powerful than the close or the high? I guess I can't really explain it, but I was trained that the open is going to be like where we're going. Not the close is where we've been. The high is going to be critical. The high and the low are important to me. The open is important to me. I don't usually even really factor the close in on my big key numbers. So that's just the basics of it's something that has worked for so long. I really actually haven't thought about that question in a long time. All right, if I want to know the setups, where do I enroll? Okay, this is the full system, James. This is the total full system. This is it right here on the screen for you. Should be slides. If you can't, you can go to TradeThirsty.com/NQ, and that's where you can get enrolled. You'll get the on-demand stuff, like I said. You'll get the materials that you can download now, and you'll get the $195 whoop-de-doo, which is the December 2nd class live with me at 2 Eastern. Okay, do I get access to it lifetime or just the bonuses? No, you get everything that's in there, you keep it. I'm not taking it back. You can keep it. You can log in, get it, own it, have it. As long as the site's working and everything's up, if the site breaks, I'll figure out another way to get it to you. But it's all there. It's yours for the taking. $195, you're getting, I can't even remember how many hours of, several hours of education on the topics that I'm going to cover in the live training. But the live training is also going to be more like a lab of us putting the theory to action. All right. Let me move this. Sorry, oop-de-doo. All right, I'm being asked about my stocks. Hang on a second. I'm going to rattle them off really quick. I promised y'all that. Look at y'all remembering. You're so smart. I like that you're paying attention. That makes it makes for a good day for all of us. All right, so you can write these down. First one's Tesla. I'm a big Tesla bull, and I'm looking at, I called for 600 in Tesla by the end of the year. So we'll see. We'll see what happens. 2026, we may see 800. We're calling for 5x by 2030, but I've been a Tesla bull for a long time. Heavily invested. Second one's Amazon. Price target around 270. Probably going to retest the old breakout around 232. I don't know, when I looked this up a couple days ago, it's like 10% lower than we were. Price target 270. The next one is NEE. NEE. And then let me give you the fourth one because I gotta go. All right, the fourth one is Alibaba. It's like the Amazon of Asia. It's BABA, Baba. You've probably heard about it. I heard people talk about it. So Baba's broken out a massive 3-year base. And so I'm going to look to enter some of the pullbacks at the current price. So down to around 150, maybe 142, but the 12-month price target on Baba is 220. If that wasn't worth $195, I don't know what, Gibby, right? Just gave away my farm. All right, so those are the big four. Hopefully you were taking notes and writing them down. I'm sure Jeff's going live with this.
I think you only promised 3, so like there you are.
Did I?
Delivering again.
I promised 4. Well, those are my big 4 right now. So
okay.
Big 4 and the numbers, and I think that's it. I think I'm up.
All right, a couple comments. You did get some feedback.
Oh, there you go. Futures prop. Yes, I like to mess around with the futures prop. And I know that it's like for the futures prop, it's something that everybody wants to do and wants to do well with. I haven't spent a lot of time really deep in trying to pass it. Like I tinker with it and then I see a squirrel. So if you guys are trading prop, let me know. Maybe I need to challenge myself. That's what I need to do, Jeff. I need to create a challenge.
You should, yeah. Everybody could use a good challenge. I want to read some of the comments you got. Let's see. Jerome says concise, honest, savvy.
Okay.
Let's see. TL says you're the best. And this guy named Jeff Gibby says he gives you 5 stars, 6 if you could.
5-star?
Yeah.
That's amazing. That's some Michelin stuff right there, buddy.
All right. So there you go. You've got the links in the comment. $195 of a full access to the course. Jeanette, that was great. Thank you for coming.
I appreciate you so much, buddy. Thanks for including me. Thanks for everybody that joined today, and I hope y'all have a very successful rest of the afternoon and week in your summit, Jeff.
All right. Thanks so much.
Later, Gator.
Okay. Before we get on to our last speaker of the day, I want to say thank you to one of our sponsors, thetradersforum.com. You should join thetradersforum.com. It won't cost you anything. You can come in, learn about technical analysis, candlestick patterns, get a weekly lesson, usually pretty good. We do lots of trader interviews. There's a lot of discussion about what stocks. There's a lot of resources in terms of things that you can look at and like just different market stuff. It's a great community. It's been growing. We kicked it off about a year ago, and we would love to have you there. thetradersforum.com. I'd encourage you to come, be part of it, that kind of stuff. So we are, of course, MetaStock, and we're going to give away the final prize of the day in just a second. But I want to remind you, MetaStock's been rated the best software in its price category for 32 years in a row. It can scan, it can test, it can do forecasting, it can give you real-time alerts, commentary signals, all that kind of stuff. Pricing on it starts at $75 a month. The prize of the day, the big prize of the day, we're going to give away 3 months of MetaStock real-time. We're going to give away 3 months of the MetaStock Zenith data, which is one of the best data sources available, in my opinion, built to really literally compete with Bloomberg as an institutional quality feed. It's really, really cool. We'll give you 3 months of that. We're going to give you 3 months of Learn MetaStock if you win the prize, that is. We're going to give you 3 months of an add-on called Magic Trader, which is an add-on that Peter's going to come in and talk about tomorrow. He runs a room service. We're going to give you 3 months of that. Huge prize. We're going to give it away. Erik, I'd like to invite you to come in here, and I'm going to have you help me give away the prize if you don't mind.
Okay, I believe you can hear me.
I can hear you. You sound good, which is good. What I'm going to do, I've got a list of everybody that's made a question or a comment today right now. It's open in my questions box, and I'm just going to kind of scroll through it. And I'll tell you when I start scrolling. I just want to tell you when to stop. And when you tell me when to stop, that's the person, whoever I'm on at that particular time, is going to be the person that won the prize.
Okay, it's like cutting a deck of cards.
You're right, exactly. And I will say that we've got several, probably hundreds of comments. There's tons and tons of comments, questions, that kind of stuff throughout the day today. So if you asked any questions, if you participated, if you answered a question, if you said, hey, Jeff, you've got something on your shirt, anything like that, you could very well win a prize right now. Are you ready to tell me when to stop, Erik?
Yes, I am.
All right, let's go. Okay, just tell me.
Stop.
Okay. Earlier today, Walter says, you never know in advance what Trump is going to tweet, but if you had advance notice of what Trump was going to tweet, you could probably use that to your advantage. I'm paraphrasing. Here's exactly what he said. There we go. We'll send that back to the chat. Congratulations, Walter, you won. I'm going to basically reach out to you and we'll get you set up for that big prize. Erik, thank you for the help too, by the way. I appreciate that. Coming over here, I want to give a little bit of an intro to you. Erik, what you have to talk about really kind of is very interesting to me, the automation of options and strategies and that kind of stuff. Erik, just to give you a bit of an intro to him, is the co-founder of AltaVest. It's a registered introducing brokerage firm. It has developed the Theta Trader software, which is a proprietary algorithm to create option spreads and manage risk and reward automatically. It's a very unique approach. The app is really cool. You're going to like what you see. Erik, let's go ahead and get you presented. Let me go ahead and make you the presenter.
Okay, great.
That way I don't have to read anymore.
All right, let's see if I can figure this out. How are we looking?
Yeah, perfect. First try. I can see it.
Okay.
I can hear you. You're sounding good. So I'm going to get out of the way. Take us home.
Yeah, thank you. Thank you, Jeff. It's always kind of fun to be here. I always like to listen to the other presenters as well. And we're going to talk about automated options trading. We use some technology that we've developed along the way after working with thousands of clients over the years. We have a really unique trade alert functionality as well, where you just respond to a trade alert and your order is magically placed for you by touching the screen on your phone or email. We use option spreads as a primary tool, and we use automation tracking risk and profit. So the option spread can be monitored, closed out for you. You don't have to screen watch. And along the way, it's more than just a technical platform. We are real people and we're here to help. So we're going to talk a bit about that. And we are speculating, and there is always risk when speculating. So let's take a look at that risk disclosure. And you're welcome to read every word, maybe on your own time, but we're limited in time. So take a screenshot of that if you'd like to read every word. Really, the main thing to be aware of is that when trading and speculating, you should be using risk capital, and then past performance is never a guarantee of future results. And AltaVest, as Jeff mentioned, we're introducing brokerage firm from 1997. So we've been doing this a while. We developed our proprietary technology over the years. We've traded tens of millions of futures and options contracts along the way. It's a picture I took on the trading floor. I think that was the Coffee, Sugar, Cocoa Exchange, as I recall, near the closing bell. And another picture I took. We are registered with the Commodity Futures Trading Commission, and we're members of the National Futures Association. We're located in California. And I have my BS in Business Administration from the University of Southern California, co-founder of AltaVest. I've had various securities investment licenses over the years, Series 6, 63, insurance. Currently have my Series 3, that's for commodity futures and options, and then my Series 65, that's for investment advisors. And maybe you've seen us before. We get a little bit of exposure, of course, in the internet space, but also in live events as well. We did a big event in Florida recently. There's a picture there in the ballroom there. That was a lot of fun. Market Watch and other publications, you might see us quoted every now and then. Here's, I think last week it was, asking about what's happening in the treasury markets and gold and palladium, or platinum, I believe. And so my partner here, Mike Armbruster, gave them some food for thought. So in any case, if you've never seen us, that's fine. And you're about to find out more in regards to exactly what we do. But here are the top 3 trading barriers I think most people tend to have. This is based on feedback over the years, so we kind of boiled it down, coalesced it into these 3 digestible bits here. So let me know which one you relate to the most, or if we're way off track. But just confusion caused by a lot of noise, conflicting targets and opinions and narratives, lots of clickbait these days. And I found this piece recently, so I thought I'd throw it in here. Information overload. It hinders our decision making. I think we can pretty much agree with that. And in detail, they talk about overloading with the number of sources. And I'm sure we've all been there, right? We're bombarded with material. Then also the information can be complex in terms of particular lingo and technical terms. Specialized vocabulary makes it challenging to digest at times. And how do you know what's important and what's not? So that's a big cause of overload. And it really impacts us with our decision making. We sometimes end up with analysis paralysis and decide I better do nothing. You have so much overwhelming data and competing choices, and you can lose focus on what really matters, what is key. You can fixate on minor details instead of the bigger picture, and that causes you fatigue and stress, and that's not going to bode well for your performance when it comes to managing your financial affairs. So the way to combat that might be priority, focused analysis, and how about automated data analysis and algorithms? And how about working with experts and specialists? So I think that's probably a good response and might help us avoid the dilemma this guy has here. He's got too much info to process. So that would be the number 1 barrier. How about this? Time and discipline. So a lot of us have our daily routines and so forth. We don't have time for this as much as we might like to do it. If you are able to do this with your day and it's working, then by all means, keep doing it, right? Don't fix it if it's not broken. But really, pragmatically speaking, most of us don't have time for this. We have our lives to lead, and a lot of day traders are spending up to 10 hours a day. This person said when the market's open, they're spending 4 to 5 hours actively trading. And again, it's just a function of the reality is we don't typically have time for that. We have other things to do, family, work, and entertainment, and whatever, just a life to live. And the third thing would be us. We get in our own way as humans. We've got a thing called emotion, especially when it comes to money. You end up getting fearful or greedy or both, and we end up on that emotional roller coaster. Here's a graph I found from this group, so I thought I'd throw it in here. You feel like euphoric and really smart when you're making a gob of money, and you're feeling not so smart and maybe like you're going to wave that white flag of surrender when things aren't going well. And then maybe you start to regain a little bit of composure, and before you know it, you're kind of on that up and down roller coaster. So we want to avoid that. We want to try to help control our emotions when it comes to money and trading. And it's difficult because it's an algo-driven landscape. Let's face it, it's machine-driven now. In fact, JP Morgan here estimates that systematic trading is over 90% of US equity trading volume. And I think we can all see it if you're paying attention to the flows and some of the activity. And the prior speaker, Jeanette, commented about the markets moving higher towards the close in the afternoons on the S&P, and that's absolutely right. They call it painting the tape, and that's just a lot of institutional money, a lot of machinery moving the markets. So it's not really, it's not a, what should I say? When you're trading, you're not really trading against another person such as yourself. You're typically trading against the machine, as they call it. And before we get further, we're going to learn some Greek, 2 letters in the Greek alphabet. Delta helps us determine probabilities when it comes to options trading. And delta is defined as how much does the option value change with the change in the underlying index or the underlying asset. It's also the approximate probability of an option expiring in the money. So that is how option traders look at delta. So if a delta is 0.25, that means there's a 25% chance it expires in the money. And conversely, a 75% chance it expires worthless. And remember, delta is always moving up and down as prices move, and of course, as time ticks away as well. And it is not the probability of a winning trade. So don't make the mistake of considering delta in terms of probabilities of winning or losing. Now, the other letter we're looking at here is theta. So every option is a wasting asset, has limited lifespan. So when you look at theta, that represents a negative number. It equals 1 day of time decay. So it's really just a measure of time, how much time is left on that option, and how do you value that? So if an option's at 10 points and theta is negative 0.05, the next day premium would decline to 9.95, and then slip to 9.90, and then 9.85, and so on and so forth. All other things remaining equal, just to illustrate the time loss. And here's what it looks like on a graph. And you can see as you approach time 0, the value of the option drops and drops and drops simply because it's losing time. And especially in the last 30 days, the option value declines more rapidly. So that's just called theta decay. So every option experiences theta decay. So how do insurance companies work? I think we all know how they work. They collect our premiums, right? So how might they trade options? If they were to trade options, what might they do? Well, they might use the same model where they get paid premiums to assume risk, and they sell and manage the time, and they insure themselves by hedging. They have a consistent process, and they're patient, and they look at probabilities, and they look at the longer term odds, and they're really looking at math and statistics and actuarials and that type of thing. So just a lot of math. And we're going to look at the same thing here in just a minute. We're going to jump into our demo. This was an article here I just kind of came across recently, just this week, I believe. and I thought it was worthwhile. So top 10 reasons why selling options is better than buying options. So I highlighted a few of them here in yellow. Managing risk like a professional. The professional approach distinguishes option sellers from novice speculators. And then they talk about longer term growth. This strategy often preferred by long-term investors who value consistency over high risk speculation. And then I asked Chat GPT actually, why do professionals sell options instead of buying them? They talk about the time decay advantage. So we just talked about that with theta decay. They looked at the higher probability of profit compared to buying an option because the seller receives the premium up front and then retains that premium if the option expires worthless. And we're going to talk a little bit about, this is a true statement, but when we do options trading and we're selling options, we do not hold on to that position until expiration date. We think we have a better way, so we'll go ahead and show you that in a second. And also income generation, that's one way to refer to collecting premium. Market neutrality, this is a big one. So there are strategies for markets that are moving down or up or even sideways. So we're going to look at some of these non-directional strategies. So really to summarize, selling options is a preferred strategy for many professionals. So I think that's a good summary there. So the Wall Street pros are trading option spreads to collect premium. And what does it exactly look like? Like visually speaking, what does that look like? So I did my best here to put together a few illustrations. These are very simple, but you can see this is what I call an out of the money call spread, or this is actually what it is. So you're selling an out of the money call spread represented by the red line is the call that you sell, and the blue line is the call that you buy as protection or hedge. But the net result is you still collect premium, and this happens to be on the E-mini S&P 500. And this is a strategy you would do if you're essentially neutral to bearish. And then what happens is you can see the market trading along here, and right at this point where I've got the arrow, and you can see the expiration date here is this vertical line. It's not that bold, but I'm just pointing it out here with the mouse. But you can see where you get a signal here with this arrow, and this blue box is called the risk thermal indicator. And that is the profit-taking signal that you would get in our technology, and I'll demonstrate that. But you can see that this position gets closed out well before expiration date. So that's essentially you sell it, collect the premium, and the market starts trading, and then you close it out, you buy it back for less than what you received for it. And then here's another non-directional strategy, or a non-directional strategy. It's called an iron condor, and you can see you sell an out-of-the-money call spread, just like in the prior example, but you also pair that with selling an out-of-the-money put spread. And you look for the market to stay essentially between those boundaries, generally speaking. And you can see here in this example, that's what happened. And there's also something called a dragonfly. If you've never heard of it, that's okay. It's something we came up with. And this is a strategy that we developed over the years and gave it this name. And it's a six-legged spread. So you can see this has four legs. You sell one call, you buy one, you sell another put, and you buy one. So a total of four different legs or strike prices. But the dragonfly actually has six legs, and you add an additional leg here and here on this strategy. So you end up actually buying this particular call and buying this particular put as an additional insurance or hedge on this strategy where you collect premium on the puts and the calls. And there's a trade-off there because you pay extra money for that additional insurance, so to speak. So it does limit your gains more so than a condor, but that additional insurance can actually pay off quite a bit. And I'll show you that in just a second. So here's an example of how the dragonfly would look. And you can see here, just like in the other example, right here where that arrow is, and you see the blue box, that's your signal to close out the position and take your profits and move on to the next trade. So now that's kind of the general idea of how professionals might trade with options using credit spreads. You're collecting the premium, but rookies mostly do this, and this is a nice little piece I found on YouTube a few years ago, but she did a good job describing options trading. But you can see the article here, but this quote here I think summarizes it well. Majority of small-time traders are buying the most basic call and put options, which have a much lower probability of profit versus advanced strategies like option spreads. And they even quote here on the bottom, John Foley, CEO of Options AI. He says, everybody in the business knows that if you're only buying out of the money calls, you're likely going to lose money over time. So that's kind of a good summary of the point I'd like to get across. And he goes on to say, look at this bottom section, this bottom yellow highlighted. The question of democratization shouldn't be, can I trade options? But can I have straightforward access to the option strategies that Wall Street uses? So that's what we try to do with what we do in our technology. And be sure to stick around. I'm going to show you a demo, and we're going to actually respond to an alert, a trade alert, using one touch. We're going to show you how that works. You simply just touch accept or reject, and that's all you have to do. And then our technology handles everything for you, so you never have to try to translate a trade alert or transpose it, I guess. So we've got these professional option spreads are created and managed for you by an algorithm, and that's done in our technology called Theta Trader. These are pre-built strategies called Theta Trades. We use one-touch responsive trade alerts as well. Bull market, bear market, neutral, flat market, it doesn't matter, strategies for all of those. And then we use automated risk and profit controls with something called the risk thermal indicator. So we're going to jump into the demo right now. Okay. I should have successfully navigated to the Theta Trader dashboard if I did it correctly. If I didn't, then someone should let me know. Okay, so I want to make sure I have my chat open, by the way, just in case. Okay, so this is the dashboard for Theta Trader. This is a demo account I use for presentations. You can see there are active trade alerts up here on the top, any Theta trades for the day, any open, short, or sold positions here, any long or bought positions here. So these will be debit spreads and these would be credit spreads. And then here is your account information. This is all integrated with your AltaVest trading account. And first thing I can do, we'll just start off here. You'll notice there are bullish strategies all pre-populated, and bearish, and then non-directional or neutral. And we're primarily trading three markets on the E-mini, S&P 500, NASDAQ 100, and Russell 2000. And the reason for that is that's where all the volume and liquidity is. So if you're doing multi-leg option spreads, you need a tight bid offer spread, and the E-minis allow us to really get execution in our favor, and also the strike price availability and all the various expirations as well are very flexible. So this is where the volume is, and I'll show you a few more facts and figures a little bit later about that. But we're going to look at the neutral strategy because we kind of touched on that with the Condor and the Dragonfly earlier. And you can see here the Theta trade for today is this strategy right here. And it gives us 38 days till expiration, and it picks our strike prices for us, our maximum profit potential, targeted annualized return. That's there to compare one opportunity to another. So the first thing I like to do is open up the trade, and we'll look at a table and a graph of the details. Any day now, computer. Okay, so this is a graph of the details of the trade, and here's an actual chart. So here's the current price, here's the expiration date. So it's selling an out of the money call spread and an out of the money put spread, and then you collect the premium for that. And the details here are, let's see if I can expand that, make it a little easier. We won't go over every nitty-gritty detail, but you can see the expiration date, settlement value of the strategy of the actual trade itself, put risk, call risk, commission, capital, cash required, profit potential, targeted return on cash, targeted annualized return. But let me get down to here. So the algorithm says you want to sell this NASDAQ 22,900 put, and the delta is 9.89. So there is over a 90% probability, according to the delta, that this option that's being sold, that you are selling to someone else, is going to expire out of the money. And you can see the call here that is being sold, 6.71 delta. So over 93% probability that this call you're selling to someone else will also expire out of the money. And then here's the put and the call that you buy as a hedge or protection, because these are not naked strategies. These are covered option strategies. Your risk is predefined. The cash required here, just under $1,800. Your maximum profit potential, just over $200. And it always defaults to a sell because you're selling the spread. And quantity is 1, but you can always, of course, increase it or decrease it if you'd like, depending on what you'd like to do. Maybe we'll go with 4 of these and we'll leave the value there. Try to collect 11.75 points, and that's it. It just assumes you're filled because it's a demo account. So it's just that simple to actually place a theta trade. So let me show you. That's the condor. Now I will show you the dragonfly. And then we're going to jump into the trade alerts as well. And we have a really cool tool, a simulator. And we'll get into that in just a second. For some reason, it's taking forever. Always during webinars too. Any day now. I know, I'll just refresh it. If it doesn't come here and render here in just a second, we'll just jump into the simulator, which is actually probably more fun anyway. Yeah, we'll just go ahead and do that. So this is a trade simulator that's part of Theta Trader. And you access it here up on the menu, but I've loaded a few to save us a little time. So here is a September end of month iron condor, and you can use these tools to go forward in time and backward in time. And you can see as day by day here, the market's moving, the P&L on the trade is changing. You get this green RTI, and that means good. Do nothing, just hang on to the trade. So we'll go ahead and play that. And then it gets yellow, a little elevated risk, but still do nothing. And then it turns blue, so that's a profit-taking signal. So with 5 days remaining, the Theta Trader algorithm says get out of the trade, take your profits, and move on. So that's a kind of a typical example. Even though the market's moving in sort of a bullish manner, so it's not necessarily non-directional. It's not like necessarily sideways, totally sideways, or flat or choppy. Theta decay is still working. So that's why these spreads give you a large margin of error, as I say. And let's see if the, here we go. We'll go back to the dragonfly. I just want to show you that here. So here's the dragonfly. And then we'll jump back to the simulator. But if you can see an actual dragonfly, the simulator might make a little more sense. Okay. So here we go. Here's the dragonfly for the NASDAQ, December expiration, 38 days till expiration. So you're selling this out of the money call spread and this out of the money put spread. You'll notice a quantity of 4 that you sell. You buy 3 further out and then 1 closer to the money. as your hedge or protection. And this one that you buy here and this one that you buy here can really pay dividends if the trade comes under pressure. And I'll show you that in the simulation. So this is the structure for one dragonfly. And you can see again on the table all the same types of details. And of course, the cash required is higher because you're selling 4 options, not just one, like on a condor. But notice again the delta, 9.89, 7.56. So again, you're selling options that are over 90% and 93% have a probability of expiring out of the money. And we'll go ahead and let's do 3 of these. So we'll place 3 of these. And it's just that simple. And now what I'll do is I'll go back. So we saw the condor, and now let's look at a dragonfly. That's the end of month September condor, and this is the end of month September dragonfly. Let me do this so we can see all of the screen. So the same trading activity, obviously just a different strategy on top of the market here. Then it gets yellow, slightly elevated risk, but still do nothing. But then you get a blue profit-taking signal with 7 days remaining. Compare that to the condor, your profit-taking signal was issued with 5 days remaining. So you're able to sometimes close out a position earlier with a dragonfly. It matures more quickly. And that's because you own this call option in this case. So the delta is higher and it's gaining in value more rapidly than the out-of-the-money calls that you sold. So here is another example. I'm not sure exactly, kind of lost track of these examples, but okay, this one turns profitable, this condor, 3 days till expiration. So you had to kind of wait for a while before you could get out of that one. And I will point out too, when it turns blue, you can automatically have your order placed for you, and I'll show you that. So when it turns blue for a profit or red for a risk, Theta Trader will automatically close out that trade for you. So this is the July end of month condor on the E-mini S&P 500. Now let's compare it to the dragonfly. Look at that, it turns blue with 15 days till expiration. So you compare, you had to wait in that trade, almost 2 weeks further if you had the condor compared to the dragonfly. So it's a big, big benefit of the dragonfly compared to the condor. And you do have to give up some profit potential though when you're doing a dragonfly. So here's another one. This is getting risky here, turning orange, so elevated risk, and then it finally turns red. Too much risk, close out the trade, take your loss and move on. So when it turns red, you can also have Theta Trader place that order for you automatically. So this is the May end of month iron condor. Now let's look at the May end of month dragonfly. So instead of doing a condor, let's assume you did a dragonfly. Trade's coming under pressure, but look, there was no red signal to get out of the trade. You were sitting on some open losses, but owning this call option here paid off tremendously because it allowed you to stay in the trade, and eventually that losing trade in the condor ended up being a winning trade on the dragonfly. Okay, so that's a lot of fun, and you don't have to go step by step. You can go all the way, to the end on any of these trades, but this is how you do it under My Account. You go to Settings, and this is how you automate your risk manager here. You check that box, and then you can choose if you want the red default level, the 50 delta, or the orange, or custom down to 25. Now you can do this if you'd like, but keep in mind you'll have more frequent losses, but the magnitude of the losses will be smaller. You'll just have more of them compared to the default level. I just leave mine at default, and you save those settings, and then you do the same thing with activating the profit directive. You just check that box and save the settings. And then Theta Trader monitors, scans your account every day, and then will place those orders for you. So that's takes a lot of weight off of the idea that you have to monitor your trades and so forth, because ThetaTrader will do it for you. We also have under the account here, you have something called TradeScope, which is our daily research, I guess you could call it newsletter, but it's real short and to the point. People love that a lot. So that gives a little bit of guidance onto what we're doing and what we might be thinking about the indexes. There's a great help file in ThetaTrader. It explains all the color coding. So we're not going to look at all the details here, but we don't have time. And all the spreads are explained. But there's a lot there in the help file. And then also you have video. We have a video series on navigating ThetaTrader, but you see how easy it is. It's very intuitive, and also placing trades. But we have an education section here on really what you need to know. We kind of call it our master class for futures and options trading. And these are not hours and hours and hours of, you know, kind of irrelevant material. This is really what you need to know right here. And that's all part of ThetaTrader. And these are just recently recorded and re-recorded actually, and up to date. So a lot of people like using these once they get started, just to make sure they're on the same page as us. So that's all part of ThetaTrader. Now let me jump back and let's see here. You see the trade alerts here, the active trade alerts, and I've opened them already. Here is one here, over here, I'm sorry. So when you have an active trade alert on the dashboard, you click on it and then you get a trade alert page. You'll see a description of the trade. You can see this has 66 days till expiration. It's the March contract, March E-mini, S&P 500 Dragonfly. So you can see the calls and the puts. You see the expiration date here with a vertical line. You'll notice the quantity here is pre-selected for you. So I want to make stress how important that is to understand that the alerts you receive are tailored and customized to your account. So the quantity and the trade itself. So if you have a similar trade in your account, you will not receive the alert. The algorithm does a search and knows what's in your account. And also the quantity is all based on what you have as available cash in the account. And it just takes and will allocate a small percentage of your account to a trade and then give you the quantity. So you can change the alert and lower the quantity, but you can never increase the exposure or risk, but you could lower it if you'd like. And you'll notice the entry price here, we're trying to collect 9.5 points. The premium being collected, the cash required, 66 days till expiration. And if you like what you see, you just touch accept. And that's it. That's all you have to do. And here's the other alert here. This is a NASDAQ Dragonfly. So again, collecting premium. And quantity comes in here at 5. This is how much you're looking to collect. And you can either accept it or reject it. For the sake of these webinars, I just accept everything. And it's just that simple. And then one thing I wanted to show you too before I move on, under the dashboard and positions here, you can see your closed positions. And you've got 20 positions on each page here. I'll just point out, you see 17 winners and 3 losers in your total profit. 14 are short positions where you collect premium. There's been 13 winners and 1 loser, and then 6 are long positions where you are doing a debit spread. You pay 4 winners and 2 losers. That kind of makes sense. The short option strategies are going to, over a period of time, be much more likely to be winning trades. And so that's back to, this goes back to what, September 10. That's the first page, and you can see this is just for the demo account I have for webinars where I do this. So don't make too much of it, but this gives you an idea of the types of strategies and the general sense of how the short option strategies over time are going to do better than the long option strategies. See, overall here, you have a small loss on this particular series of 20 trades. And then you're back into the winning circle here, just giving you an idea of some of the expectations for these kind of strategy. And of course, some of these these quantities are going to be much larger because this account, I think, has something like, I don't know, 400 something thousand in it. You start at 50,000 with your demo accounts, and then it just got moved up over the last, few years with just doing these webinars. But I'm just accepting every alert and, placing trades just to demonstrate how this whole thing works. I don't want to give people the impression that you have to have, $400,000 or $500,000 to do this. Okay, so there you have it. That's a brief overview of Theta Trader, but that really covers a lot of ground and really what you need to know. One thing I could point out, we did focus on the non-directional or neutral strategies, but as you saw, let's see, where did I put that other page? Well, it doesn't really matter. I can go back here and show you. There are bullish strategies and bearish strategies and non-directional. So if you're really bullish on something, there are plenty of standard strategies that you can use, or bearish, what have you, available to you. So it's not just non-directional, but just wanted to point that out. All right, very good. Let me show you the best feature of all is the trade alert feature with using your cell phone. So you see how you can get trade alerts on your dashboard. But how about trade alerts with one touch? So these are integrated with your account, and you just touch accept or reject on your phone. So we make it even easier than having to log into your dashboard. So here's what it looks like. You'll receive a text message with a link, and you'll touch that link. And it's going to pull up the alert page. So this should look somewhat familiar. Here's a dragonfly. So you get a description of the trade, just like the alerts we saw in the dashboard. So those are the calls, those are the puts, and you can see the current market price here. And the quantity is pre-selected for you at 7 in this case. Trying to get filled at 9.6 or higher, collecting the premium, your cash required. And all the commissions, by the way, are already factored into Theta Trader. So all the performance and all the data is already net of all commissions, just so you know. And if you like what you see, you just touch accept, and the trade is placed for you. So you don't have to do anything else. Once you get that alert on your phone, you touch accept and the order is placed. And then here's an example of a demo account from July with dragonfly trades. This person is just basically doing one dragonfly at a time. And these are all trade alerts. So starting in July, and just thought I'd give you an example here. These have all been working out well, just kind of lots of base hits, you could say, using a baseball analogy. And I think there are some open dragonflies in this account, but these are only the closed ones right now. So there you have it, folks. That's an example of Theta Trader. And here's how to get started. And then we'll have, I think, some time for some questions. So to become involved with Theta Trader and use the technology, you get the Theta trades, you get the risk thermal indicator, the color coding, and the automating of your risk and profit controls. You get that trade simulator. You can go backwards, I think it's over 10 years now, and backtest any strategy. So it's valued at over $3,588 on that software. But that also includes the trade alert technology. And remember, these alerts are connected to your account. So that's what makes it so user-friendly and intuitive. You don't have to do anything. You just simply touch accept or reject. And the value on that, over $4,400 to have that trade alert technology at your fingertips. So you'll have Theta Trader, which includes the alerts, a value of over $8,000. And then you have private coaching. So we are available to guide you and offer assistance. We have one-on-one screen sharing. We're licensed, we're experienced. We know, what needs to be done to trade these strategies. And I think I've looked around and I've even had people tell me they've spent 25,000, 50,000 on coaching and systems and things. So I think it's probably fair to say, I looked at AI and they said, oh, well, 5,000 to 15,000 for 6 to 12 months of training. And I think that's probably a fair assessment, even on the low end. So let's just say a $10,000 value on a private coach. I think that's a fair assessment. So you have everything we just talked about valued at over $18,000. And then keep in mind, we still have our proprietary TradeScope newsletter I mentioned in there briefly. And we like to look at sometimes the real, I guess you could say, the few of the indicators using the MetaStock tool, actually, which is very nice, and looking at some of the simple things like divergence. And you don't have to be perfect with these option strategies. So that gives you a lot of room for error. You're not to say that if you have some bearish divergence here that the market can't just keep going sideways for a while. And if it did, that would be fine for a lot of these non-directional strategies. You can even do some of these strategies where they're actually bearish. I didn't get into it in the demo, but something called a bear hedge, where you sell an out of the money call spread and you use it to the money to buy an out of the money put spread. And here's a more recent example of some bearish divergence. And you can see here and here, here and here, and then you get this sell off here and the sell off here. So in any case, there's lots of ways to do this, but these option strategies are very flexible. This is on the Russell. So just pointing out, this is all part of what we do with our TradeScope and make it all available to you every day. So beyond that, I mentioned our futures and options training and our master class, you could say, and those are the videos that are part of Theta Trader. So these are the chapters and the various titles. So that is everything you would need to know about futures and what's relevant. So that's our master class for futures and options. And the value there is almost $2,000 for that retail value on that master class. So together with the TradeScope research, almost $3,000 value. So we also have the video tutorial. So let's just add it up. You get Theta Trader, you have the trade alerts, you have the private coaching, you have the research and the masterclass education over $21,000 value. And of course, that's not what we offer this at. We used to do seminars at $4,000. So that would be a live in-person event where people would come to the back of the room and sign up at tables. And this is our retail price on our website. So we can do even better than that. This is just a one-time payment, and this is a lifetime membership. So it's not a monthly thing or quarterly or what have you, one-time payment. It's only $597. And you can use the link cf.altivest.com/meta. I should have said MetaStock, but I just said, okay, let's just make it short, and you're going to remember that. So you can use the QR code here as well, and that's my direct phone number and email address. But this is good till Friday night, I should point out. And then if you want a free membership, you have $100,000 or more in your account a month after signing up with us, we'll rebate you, refund that 100%, or a $50,000 account will be a 50% rebate. So do take advantage of that. People love to take advantage of that. People think, well, if you've got $100,000, why do you really care about $597? Well, people should and do care. So also there's a money back guarantee. So I want to point out, you have no risk on your membership. Get signed up, and I think you're going to like it. You'll receive your login credentials. We'll talk to you. We'll find out what your approach is, what you want to try to accomplish, what have you. And you can use your login credentials and get familiar with Theta Trader and some of the alerts and whatnot. But really, you don't have any risk on signing up. There's a money back guarantee. So really, you don't have really any excuse. And again, I want to touch on some of the advantages on the E-minis, and then we'll have a few minutes for a question, I think. But like I said earlier, the reason we do this, first of all, an index is less volatile than an individual stock. So it's, I think, a ripe opportunity for premium collection with these non-directional strategies. But here, again, I looked at AI. I hadn't done this before until this week. I thought, well, what do they have to say about it? Well, trading the E-minis, of course, requires less capital, provides flexibility. They're highly liquid for quick entry and exit. So you can expand your trading strategies and gain exposure to these large cap stock indexes. So there's no need to look at 6,000 different securities. If that's your thing, that's fine, but we're not doing that. And if you didn't know, again, liquidity, the E-mini S&P 500 futures market, it outtrades all ETFs around the world combined. So 2.5 times more volume, average daily dollar volume, compared to all ETFs around the world. And that means the options are liquid too. 1.5 million average daily volume. So really that ends up offering superior execution according to the CME group. Compared to the SPX, you have a cost savings of $4 to $15 per contract. So those are the benefits, those tight bid offer spreads. And as a reminder, we're only doing coverage strategies, so your risk is not unlimited, and you don't have margin calls when you do coverage strategies. Another advantage, there's no pattern day trading restrictions when you're doing trading with us. And if you're not familiar with it, essentially, if you execute 4 or more day trades within 5 business days in the same account, you get identified as a pattern day trader, and that's on the security side of things. So you have additional regulatory scrutiny, and then if your account drops below 25,000, you're prohibited from making further day trades until you bring it back up. So we don't have that in the space that we operate in. There's tax efficiency as well when you trade these options with us. And what I mean by that is quite simply, the IRS treats your profits differently. 60% of the gains are taxed at the capital gains rate compared to 40% at your personal income tax rate. So typically your capital gains rate is going to be much lower than your personal income tax rate. So mathematically that can make a big difference. Here's an example where there's a tax savings of over $2,000 just because you're trading in the tax efficient space. There's no itemizing as well. You just get a 1099 with your profit, and that's it. So always consult your tax attorney or advisor though for the details on that. You can trade with your IRA, a self-directed IRA. We work with Equity Trust. They have 71 billion in assets. So they'll waive your setup fee. Just let them make sure, we'll tell them you're with AltaVest. And as a reminder, we are full service, so we can trade any commodity futures contract or options market, not just what you saw on Theta Trader. So plenty of clients are trading, gold and silver and let's see today, soybeans and corn, crude oil, natural gas, you name it. But to summarize Theta Trader, I'll leave this here for just a second. These are flexible strategies. Their premium collection is available to you, as well as debit strategies too, but it's convenient with automation, helps you to diversify your hedge. A lot of these strategies are not correlated, and you got that tax efficiency and tax advantaged status. And those trade alerts, people love the trade alerts, and there's no day trading restrictions. So anyone got any questions? I guess we have a minute or two, and I'll leave this up here. Let me see here. Where do I find any questions or comments, good, bad, or otherwise?
I can tell you the questions.
Sure.
Bob wants to know, do you trade 0 date to expiration options in Theta Trader?
We don't. That's not our bread and butter. It's not to say there aren't shorter dated strategies available, but it would be very, very unusual to place a trade, in the beginning of the day, and have it expire that same day.
Okay.
So you have to get really close to the money to get any premium in that case. So it's a pretty big risk.
All right. Do you have a recommended account size?
Yeah, that's a good question. A typical dragonfly on a S&P 500 or NASDAQ is anywhere from $5,000 to $7,000 of margin requirement. So kind of taking that in mind, if I'd say a condor is anywhere from $1,000 to $1,400 or so. So if you had, I'd say bare bones minimum would be maybe 10,000, because even then, if you did a dragonfly, that would be, I think, too aggressive. You'd have a lot of risk in just one trade. So you might want to focus on just, say, condors, for example. But the recommended size would be closer to 25.
All right, very cool. That's all the questions. So we've got the links. I've actually put the whole clickable link in the chat for both YouTube and GoToWebinar, so you can click right on that and get straight to the order page.
Oh, great.
Erik, thanks for joining us. That was interesting.
Yeah, thank you. Thanks for having me. It's always kind of a fun. Oh, did I see a question here under phone number? Is that for me?
That just came in 1 minute ago. I didn't even read it yet, but I think that might be a question for you. They can have my phone number if they want it. I'm asking for mine.
Can I respond to that in the question box?
Yeah, sure.
Well, if I could type, let's see here.
I can't help you there. I could type it out for you.
Let's see here. Send to all. I think I figured that out. And my email is Erik, E-R-I-K, @altavest.com.
I don't see an answer coming for the question, but I did send the email to everybody.
Oh, okay, great.
I didn't see a phone number go out though, just so you know.
Oh, well, I send to all. I thought I did, but it's 949.
Oh, here, I'll type it in. 949
236
236
6961.
Okay. All right, that's sent as well. Cool.
Great. Well, thank you again, and have a good one.
All right, thanks, Erik. Thanks for joining us.
Great. Thanks. Bye, Jeff.
Bye. All right, let's go ahead and kind of just wrap this up for today. I appreciate everybody being here, all the speakers, and especially you guys. Thanks for coming in here. I hope it was helpful for you. I don't have my camera on, but I'm looking right at it. I hope it was helpful for you. As we wrap up today, I want to say thank you to the AAII, the American Association of Individual Investors, for sponsoring us, AAII.com. I'd also like to thank Stocks and Commodities Magazine. You can go to traders.com to find out more about that. The Traders Forum as well, www.thetradersforum.com. You can go learn about the markets, live chat with other traders, go to classes, all kinds of stuff, all available. Lots of stuff that's just kind of completely free up there. There's some paid courses that you can do that are done by Steve Bigelow. Those are awesome as well, but join the forum, thetradersforum.com. As for all of the other offers that we talked about, all the other things that are available, you can find out more about MetaStock. Sign up for any of the offers at metastock.com/conf-promo. You go to metastock.com/sales-chat. You can also give us a call, 800-882-3040. Really appreciate y'all being here. Y'all, I guess Jeanette rubbed off on me with that presentation. Tomorrow we kick off with Steve Primo. He's going to be talking about a strategy he's been using for I think 40 years now, and so we'll talk about that. But we have another great lineup all day tomorrow, so I look forward to seeing you tomorrow. If you need anything, let me know. Thanks, Michael. I appreciate that. Michael says you're the best, Jeff. Thanks. Go on. Thanks for being here. Stay healthy, stay well, get well rested, because we got another day tomorrow. See you guys.